Wait for it. Wait for it. Oh, there it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile, press hot chat, X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts boot camp and real estate course. But, ladies and gentlemen, come on, baby. You should know. You should know, man. It's a huge day today. We got Jerome Powell. I'm telling you, everybody, the previews, getting ready for it. It's about to be very interesting. I think they are saying this is the highest options priced in Powell since May of 2023. It's only 0.95%, so it makes it a little bit interesting, but a lot is riding on it. We still have a lot of data. We woke up today. The Treasury did not get in your way, so Janet Yellen kind of held to a previous promise of not raising the 10 years, and that held up. That was actually good. The private payrolls came in a little hotter, but lower than last month, and then the wages came down. So far, we haven't had too crazy of move off the data. Literally 30 minutes after the bell, we're going to get jolts and a couple of other things, but by 2 p.m., 2:30, man, I'm telling you, Jerome Powell, the bonds, the futures, expectations, even quantitative tight. There's a lot of things, man. But it's a very big day, Chad. I am glad that you're here. And good morning. How are you, baby? Oh, and that Kendrick, bro. No, listen, that Kendrick diss was insane. We'll talk about it. Good morning, Tim. What up, Ray? What up, Gagana? Oh, there's the Chad. There it is, baby. Najee, Mark, Yee, Ian, KP, Anzo, Brian, baby. Good morning. What up, Mavis? Jerry, will ya? Hey, man. Open face sandwich, El Trapado, Zoo Rise, baby. Good morning. That's the Mark J, Carissa Hines. Good morning. What up, Wandering? What up, Joey Kakamo, Godfather, Rocky Top, Hush Taylor, baby. Agent of Chaos, Trey Kush, Jamar, Tony Garlinger, I'm more business, Habibi. Good morning, Danny, John, Prabhu, Chantel. Good morning, Rodney. Lumar, good morning, baby. What up, Quan? Marcus Hanlon, Granville, baby. Gary, Abari, Bipolar, QX, Yosef, you feel me? Oh, what about that Twitch? What about Bunny Voodoo? Jake from State Farm, baby. What, Carissa Hines? What? Carissa. Oh, I was about to do the Jerry Wood, but Carissa Hines again, baby. What up? Ninja, how you living, baby? Most dope. Feed me, Seymour. No step on snack. KJ Lemur, Vasily, Louise, Dennis, Robo Handtech, Blazing Bob, and Uncle Nick, baby. Good morning. Oh, yeah. So, Chattadonia, let's get into it. There's actually a lot of headlines, a lot of different news. There's still a lot of earnings even here to start off the day. So, let's get into it. I have Josh AI, and then I'm going to close it out with a couple more headlines, and we go, man. And that's how we started it, Marcus. Let's go. Bless the chat. Thank you, my friend, and good morning. Orna. Oh, wow. I know. It's a Wednesday. It's Powell Day, baby. So, y'all, I don't know if y'all need to forgive me for the energy or not. It's Powell Day, bro. You better. Good morning.
Bonds hold gains after U.S. Treasury announcement. Bonds held gains after the U.S. Treasury kept its quarterly debt sales steady and said it will start buybacks this month. 10-year yields fell 3 basis points to 4.65%. S&P 500 contracts trimmed losses. Fed officials are poised to keep rates steady for a 6th consecutive meeting and signal no plans for cuts in the near future after higher-than-expected inflation, the rate decision, and possibly an announcement on the pace of its balance sheet reduction program will be released at 2 p.m. in Washington. Chair Jerome Powell will hold a press conference 30 minutes later. Private payrolls increased 192,000 last month after an upward revision to the prior month, according to figures published Wednesday by the ADP Research Institute in collaboration with Stanford Digital Economy Lab. The median estimate in a Bloomberg survey of economists called for a 183,000 gain. The options market is more concerned about a potentially big move in the S&P 500 off of the Fed's rate decision Wednesday than it's been at any point in almost a year. The index is implied to move 0.95% when when the Fed gives its view on rates, according to an option strategy known as an at-the-money straddle, where traders buy an equal number of calls and puts with the same strike price and expiration. The last time traders priced in a Fed day move this wide was in May 2023. Data compiled by Citigroup Inc. show Wall Street lore says traders should dump stocks in May to avoid the summer doldrums, but that strategy appears to have been a bust in recent memory. The old Wall Street adage, sell in May and go away, refers to a 6-month stretch from May to October that historically has been the worst time to own stocks, but that hasn't been the case lately. In fact, the S&P 500 has delivered gains in 8 of the past 10 years during this time frame, with an average return of 4%, data compiled by Bloomberg show. That said, this span still hasn't beaten the best 6 months of the year on average for U.S. equities in the past 70 years, November to April. As the Fed signals it plans to delay interest rate cuts, investors are counting on a revival in corporate buybacks to help sustain this year's stock market rally. Strategists at Goldman Sachs Group Inc. expect total share repurchases by American firms to surge 13% to $934 billion in 2024 before crossing $1 trillion next year, backed by robust economic growth. That would mark a rebound from the 13% decline in 2023, when concerns about a potential recession led finance chiefs to preserve cash. A corporate highlights Amazon.com Inc.'s cloud unit posted the strongest sales growth in a year, a sign that the retailer's most profitable unit is recovering from a slump as businesses resume spending on technology projects, including artificial intelligence services. Advanced Micro Devices Inc., the second biggest maker of computer processors, gave a lukewarm revenue forecast for the current period, weighed down by lackluster demand for chips used in video game hardware. Supermicro Computer Inc. reported quarterly sales that tripled from the same period last year, but fell slightly short of estimates, disappointing investors who had sky-high expectations that the server maker's business would benefit from AI-related demand. New York Community Bancorp Inc.'s charge-offs and provisions for potential loan losses declined in the first quarter from the previous 3 months, which could help allay commercial property concerns that have hounded the lender since it last reported results. Pinterest Inc. reported first quarter sales and user growth that surpassed Wall Street's expectations, bolstered by a push into shopping and a focus on Gen Z users. Starbucks Corp. Sales fell for the first time since 2020 as half-off deals and new lavender lattes weren't enough to entice increasingly budget-conscious consumers. Sales at restaurant chain owner Yum! Brands Inc. fell for the first time since the depths of the pandemic in 2020, providing more evidence that one of the most resilient parts of the consumer economy is weakening. Pfizer Inc. raised full-year earnings guidance after completing its deal with the U.S. government to take doses of its COVID pill back. CVS Health Corp. cut its annual earnings outlook for the second quarter in a row, citing increased medical costs in its Medicare insurance business. Johnson & Johnson will ask thousands of people suing over its allegedly tainted baby powder to vote in favor of a settlement that would allow the company to resolve all litigation for $11 billion, $2.1 billion more than it offered last year. Marriott International Inc. reported first quarter earnings that missed expectations as softening U.S. demand growth weighed on results. KKR and Company reported first quarter profit that beat Wall Street estimates after the alternative asset manager changed how it relays financial results to emphasize recurring earnings over lumpier private equity asset sales. Fed in focus. The main focus for markets today will be the decision from the Federal Open Market Committee when it concludes its two-day policy meeting. It's expected to keep interest rates steady for the 6th time in a row and indicate they'll stay that way until there's an improvement in inflation. The committee is also likely to reveal plans to slow the pace at which it's currently unwinding its $7.4 trillion balance sheet. Stock futures fell ahead of the decision while the dollar rose with thin global trading. earning amid European and Asian holidays. Stock reaction, while interest rates aren't expected to move, the stock market is. Traders are pricing in a bigger reaction after the announcement than at any point in the past 11 months, according to Citigroup, with options positioning implying the S&P 500 will move 0.95%. That's down to concern that the Fed will keep rates higher for longer to tame inflation, as well as rising geopolitical uncertainty and a generally mixed earnings season. Amazon's AI boost, speaking of which, investors have been busy digesting Amazon's latest results, and its shares are up in pre-market trading. The Seattle-based company is the latest in a string of tech companies to benefit from rising AI demand, with its cloud unit posting the strongest sales growth in a year. Still, its sales forecast for the current quarter fell short of estimates, reflecting concern about the main e-commerce business as consumers continue to spend cautiously. More Tesla cuts. Consumer frugality is also continuing to pose challenges for electric vehicle producers in what will come as a blow to an array of automakers planning to tap into its public charging stations. Tesla has decided to eliminate almost all of its supercharger group, which will slow the growth of the network. The decision to cut the nearly 500-person group was made by CEO Elon Musk in the last week and comes in addition to the more than 10% staff cut ordered in mid-April. Top overnight news: Beijing is preparing for a second Trump term and bracing for the turmoil that would bring in U.S.-China relations. China thinks a second Trump term would be a net negative for it. WSJ: U.S. crude stockpiles increased 4.9 million barrels last week, and the API is said to have reported that would be the fifth expansion in 6 weeks if confirmed by the EIA today. Supplies at Cushing jumped while those of gasoline and distillate dipped. BBG: Amazon gained pre-market after its AWS unit posted strong sales growth, making up for the company's lower than expected current quarter sales forecast. Its live streaming site Twitch launched a short-form video platform that may rival TikTok. BBG: We continue to think that rate hikes are quite unlikely because there are no signs of genuine reheating at the moment, and the funds rate is already quite elevated. It would probably take either a serious global supply shock or very inflationary policy shocks for rate hikes to become realistic again, and even then, the FOMC might prefer to hold the funds rate steady at a high level unless the shocks seem likely to spark a broader and more persistent inflation problem. GIR: New York City police stormed Columbia University's campus on Tuesday night, arresting dozens of pro-Palestinian protesters in an attempt to quash unrest that has spread to campuses across the nation and inflamed U.S. divisions over the war in Gaza. FTZ: Pfizer is developing an online platform for patients to order medicine, including anti-COVID drug Paxlovid and a migraine nasal spray, according to people familiar with the matter, in the latest push by drug makers to cut out industry middlemen and sell straight to consumers. I don't know what that last one was. Yeah, 8. But Chatadonia, there is still more, baby. And yeah, like the video, we need 1,000 on Powell Day. But there's more. S&P futures, they are down by 0.2 Wednesday morning. Comes after U.S. equities sold off on Tuesday, with the S&P down over 1.5, its biggest pullback since January. Speculative pockets of the market came under outsized pressure. Index also snapped the 5-month winning streak in April. Treasuries slightly firmer after yields backed up on Tuesday. Dollar is up by 0.1, though a bit weaker on the major crosses. Gold is up by 0.2. Bitcoin is off by 1.5, and WTI is off by 1.7. Market is swung to risk off amid further hawkish repricing of Fed pivot and sticky inflation. The growth cushion and the big bullish talking point in Q1 has come under scrutiny as well. Earnings takeaways have also played on concerns about the consumer resilience theme. In addition, Tuesday's pullback seemed to drive a renewed worry about technical mechanical pressures. On a more upbeat note, Amazon, latest big tech name to deliver against a fairly high bar. Earnings also continue to highlight AI secular growth theme. Today, FOMC is a de-risking event by extent of hawkish pivot repricing. Big macro day, including ADP private payrolls, came in ahead, though down slightly from March, while wage growth dropped the smallest since August 21. No surprise from Treasury QRA, with $125 billion refunding in line with estimates, said buybacks to begin this month. Other reports and the events today: JOLTS jobs reports, ISM manufacturing, and Fed announcement this afternoon. Street not looking for any meaningful changes in the May statement. Powell expected to reiterate recent messaging around likely taking longer than expected to achieve greater confidence needed to cut rates. However, still expected to indicate Fed's base case is for renewed disinflation and lower rates. FOMC also likely to announce QT tapering starting in June. Amazon focused on AWS acceleration, margin strength, and CapEx ramp. MasterCard revenue a bit light, but said customer card spending resilient. AMD underwhelmed on improved 24 data GPU revenue outlook. Starbucks pressured by miss and guide down with focus on 7% decline in the U.S. Mondelez volumes decline in North America and Europe. CVS missed and cut guidance on utilization pressure. SMCI hit by lower margin guide. KHC revenues missed on weaker volumes. Other earnings-linked gainers, Pfizer, KKR, GPN, DD, and PINS, while decliners include Marriott, EL, JCI, Yum, CDW, CLX, SWKS, and NCLH and CZR. Wow. Don't worry, there's more. We have more, my brother. We have more. Fed to hold rates steady and signal delay on rate cuts as sticky inflation dashes hopes for policy easing. Signs of U.S. wage pressure fuels worries of sticky inflation may be pervasive and keeping Fed on for longer. If Fed cuts later in the year, it could spark uncomfortable political narrative. Hawkish whispers from Bank of Japan drowned out by yen sell-off, but market eyes possible rate hike coming in the fall. Amazon quarter one beat powered by AI boom and cloud. Starbucks delivers Q2 earnings miss, revises 24 guidance as management pledges turnaround. AMD beats, Musk fires workers in Tesla superchargers. Microsoft push into OpenAI investment driven by fears of falling behind Google. IBM wins overturned $1.6 billion judgment to pay rival BMC over software contract. Spirit Aero and Airbus close in on takeover talks of key aircraft manufacturing assets. Major retailers pulling back from efforts to deliver healthcare. Bond traders selectively adding longer dated maturities to portfolios on bets that the Fed will delay rate cuts. Worried about Fed walkback on rate outlook. Global investors seek safety in European and emerging market assets. Option markets are worried about a big move on the S&P on Fed decision day. It has not been like this in a year. Japan likely conducted its first currency intervention in 22 to prop up the yen earlier this week. Sources say Japan mulling tax breaks to spur yen repatriation as volatility likely to continue. Investors Trump-proof investment portfolios as risks rise ahead of November's presidential election. Biden. Oh, no. Where'd that go? Worried about Fed walkback. Japan likely conducted it. Chinese Xi resistant to deeper economic reform as pressures pile on Beijing to find new growth model. U.S. consumers becoming more cautious around spending, according to Citi CEO. Japan April manufacturing PMI revised lower, remains in contraction. PMIs show UK factories slip back into downturn. South Korea exports boosted by chip surge and autos rise to a record. Biden signs new order to boost U.S. infrastructure security from cyber attacks. Some U.S. military branches hitting brakes on generative AI, saying its strength and limitations need further testing. Biden staring down a spring of unrest as college campus protests could spiral into political poison. Biden administration moving to reclassify marijuana as a less dangerous drug as soon as clearing big regulatory hurdle. And Beijing braces for Trump rematch, expecting tensions to ramp up. Wow. I told you there was a lot of headlines. There was a lot of headlines, and we still have a lot of plays. So I got a lot of pre-market movers. Pinterest, if I don't say anything, it's either earnings or nothing. But Pinterest is up by 15.8. DD is up 5.5. SNN up 3.9. GRMN. Garmin up 3.8. AMCR is up by 3.4. GSK is up by 3.1. Johnson & Johnson up 2.5. Proposed plan to resolve TAP litigation. AER is up 1.8. KKR up 1.5. Gold up 1.4. Exploration in agreement with Geoscife Jamaica. They also had earnings too. Amazon up 1.4. I think it's higher. Siri up 1.3. Goldman Sachs upgrade to neutral. MDB up 1.3, 3M, JP Morgan upgrades to overweight, Pfizer up 1.3, ADP up 1.2, VRSK 0.9, GPN 0.2. Root is up 24%. Powell is up 24. TGTX is up 20.8. NYCB up 15, TMDX up 14, Nari up 9.8, Lemonade up 7.2, Doc N up 7.2 to replace AGTI in small cap 600. Tech is up by 6.6. Axta up 6.5. DJT up 5. Donald Trump discloses increased stake to 64.9 from 57.6. 13D. CRS is up 5. Coco up 4.2. GNRC 3. AX 2.7. Fastly 2.5. Riot 2.4. PLTN up 29.5. Shareholders approve combination with Big Tree Cloud. IVCB up 28, nothing. RCKY up 21 earnings. BCLI 13.9, nothing. INCR 6.5. CDNA up 5.2. Craig Hallium assumes buy. FNGR 4.3, nothing. ASPI 4.1. Hippo 3.6. Omga 3.1. Hitty up 3.1. Appoints Mayanik Mahan as CFO. CNDT up 2.5. Uranium stocks higher after Senate passes bill banning Russian imported uranium. Trading lower. Skyworks down 15 off earnings. Starbucks down 12. CVS down 11.5. SMCI down 10. AMD down 6.4. CDW down 6.4. Flex down 5.8. Yum down 5. EL down 5. KHC down 4.5. ALAB down 4.3. MasterCard down 3.5. JCI down 2.8. Clorox down 2.5. THC down 2 off nothing. IDXX down 2 earnings. MSTR down 1.9. Marriott down 1.7. VRT down 1.6. And Core down 1.1. Leg is down 13 off earnings. TXG down 11.9 off earnings. EXTR down 4.3. NCLH down 3.9. Tilray 3.3. No headline. They just had the weed news. Caesars down 3 off earnings. CVRX down 29. And semiconductor stocks trading lower after AMD. Wow. So Chattadonia, we did good, baby. We did good. We got the plays. We got the news. I got a couple more plays for you. So I'll get those for you here in a second. Oh, I need to open up another TD, but I'm going to go to the bathroom, and y'all keep talking about Starbucks on CNBC. So let's see. Let's see what this guy got.
With delivering and communicating value to them in a more aggressive manner. That's what the plan we have does.
Luxman, it's David. China continues to be a not unimportant part of the growth plan for this company. You cite fierce competition there, a slower than expected recovery. But to Jim's question again, why not sort of focus on improving things there and or fighting off the competition? You still are opening many stores. I know the net number was still a pretty significant one for the quarter in China.
David, first of all, I think if you look at the overall network of stores that we have, they're in very good health. If you look at the cash-on-cash returns that we get from the new stores and the expansion, they're 40% cash-on-cash returns. We see no reason to change that equation. It does not mean that we're not focused on fixing the challenges we have with the occasional customer and with the fact that they're not visiting us as often.
Luxman, I was noted your language in terms of citing a deteriorating economic outlook weighing on customer traffic. Do you really think that's the case? We talk about it endlessly here, as you well know, and it's far from clear that there really is a deteriorating economic outlook. So what is it you're seeing that perhaps many others are not?
I think what we are seeing is pressures in the wallet for some of our most occasional customers. And they are translating that into
I don't know, man.
what
That
they're choosing
Starbucks
to do.
report. I don't know.
All right, what are they doing then?
Well, so some of them are obviously visiting less, as we have seen, hence our action plan, which is about communicating value, which is about ensuring...
thank you, Starbucks. Well, very interesting one. We got our plays. I mean, they were $2 in the money at one point, so just watch out. I'm worried about the... we wake up in a bounce. I didn't realize, dude, gold went below 2,300 this morning. That's crazy. But Chattadonia, we've gone the place. We've gone over the news, telling you a big day. I'm very glad, man. We're going to be here around Powell. We're going to have it all live. We still got data literally 15 minutes after the bell and then another 15 minutes after that. So we got a lot to deal with. You're here now. You got to hear from the Starbucks CEO. But tell me, Chattadonia, what is your first play of the day? And like the video, baby. We need them 1,000 likes. So what do you got for me, baby? Let's go.
Starbucks going lower. Buy Starbucks shares. Selling Starbucks puts 78. Beyond shares. Long URM. Starbucks puts. Cash on hand. NVIDIA. Sell Starbucks. Buy call. Starbucks. IWM. Waiting for Pfizer. TLT. McDonald call. Airbnb call. Watching Donald Trump. Cash. Amazon. NQ shorts. Cash. NVIDIA put. SPY put. SQQ. AMD. 3M. Weed. Long SLV. More CVS. Buying more Pfizer. NVIDIA heading up or loading up CV or SoFi. MPW calls. Starbucks long term. Adding BTX. 6JZN. BNB. CGC. Ugly crying in the shower. It's okay. Take a warm shower, though. And stretch it a little bit. Starbucks calls. Amazon, SoFi, Starbucks long term. Saving 10%. Walmart, short IAU. Sitting in bill. Long uranium. Tesla deposit. SMCI, dollar cost average. Qualcomm puts. Call of Duty. UAV online. MSTR puts. Short CGC. NVIDIA calls in the final plays. SPY puts. Close Starbucks puts. And Amazon puts. Wow. Okay. Okay, baby. So, Chattadonia, that's all fine and dandy. I got a couple of plays already. Hopefully, if you watch the watch list, you already know what's up, baby. But before we do anything, man, it don't matter data, Powell, and honestly, we think Powell is very important. But truly, in my heart, man, there's a group of people more important. And every single day here at the Cult, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to that group who has made the ultimate sacrifice that most of us never have and ever will. And I'm talking about the veterans of the United States of America. So on behalf of the Cult, people here, people not here, I want to give a huge special shout out. All the active servicemen, past servicemen, anybody who has served this country, even the families, for real. Thank you for your service, dedication, your fellow Americans you've never met. Whether you agreed with the politics or not, you agreed to serve and you completed that. And the least we could do is say thank you, and we don't do it enough. So God bless you and thank you. And big shout out to anybody else out there giving back to their local communities, all the doctors, nurses, teachers, firefighters, police officers, janitors, coaches, doctors, anybody making things run, baby. God bless you. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Send it to Jets! Oh, it's game time, baby. Oh, no. Let's go. Oh, Chattadonia. Good morning, man. Happy Powell Day. All right, I think that's it. All right, we got a minute 58. Wow. So, Chad, if you have any questions, this is a good time. Otherwise, I will have to refer you to the watch list. But if you have anything, questions about the morning, what's going on, let me know. I'm going to have all that data. We need 200 likes or we don't have any plays. It's a weird thing that goes on. So you got about a minute and a half to like that video. Other than that, though, be safe, be smart. I'm telling you, it really will be a wild day. And if it's not, well, I mean, maybe that'll be a blessing. And then right ahead of Powell, I will have a little bit of previews to go over. So we will find out. We will find out. All right, 1 minute. 1 minute. So post any questions. Actually, ow, I'm trying to take off my glasses. It got stuck in my hair. Ow. Oh, dude, this is crazy. The events that's happening right now, we're just waiting for JOLTS jobs openings and then the manufacturing PMIs. So literally within the next 30 minutes, next hour, you will be getting all of that data there. So not that bad. Not that bad. Great question. Long weed, short Starbucks. We'll see if day two. We haven't heard much from the DEA. It was all the news yesterday, but again, that news will be big. But I don't think I'm going to be able to play it. I think we already missed it. We talked about that one on the watch list, but the next little pullback on weed, that one should be good. Honestly, the little Tilray plays and all that are pretty decent. I was surprised by CGC. So we will find out. All right, Chad. 20 seconds and you need 50 likes. I don't know. Oh, wow. You guys might not do it today. That's okay. I still love you, but I got to stick to my word. You know what I'm saying? So 10 seconds. Like that video. Call out any plays. Post any news. Source it. let's have a good one and good luck. And like I said, within the next couple of minutes, you're going to be getting a lot of data every 15 minutes at a time. Oh, round one, fight. Yeah, y'all did it, baby. Y'all did it. Good work. Good work, baby. All right, where are the Starbies at? I feel like they're still going to scam us. Yeah, the biz on the Starbucks are like 200%. Gotta love it. Gotta love it. But they should be right under 1,000% if you could get more than 200. All right, so I sold my Starbucks. I got out 3,000 or 300, excuse me. So $20 into 300. I got out of it though, a little bit more than 1,000%. Honestly, that's 1,500, I think. So not bad, but I'll double dip if it goes there. But we've seen too many of those 1,000%ers fly away in 10 minutes. Let's go, baby. All right, so Starbucks is done. We'll see. Like I said, Starbucks' continuations are really weird, but we got to just watch out. And watch if Pfizer breaks out. That's a weird one because Pfizer did good, but they don't really move. Pfizer should be a cuck, but watch how that plays out there. Pinterest, too. That's the one. If Pinterest could move more than like 5 to 7% in a range, that one could be a decent one. So we will find out. Then McDonald's? Which one's that? Oh, and then the 3Ms. Those did come up here a little bit. I forgot, but they were up a little bit more. We still have this week. Tesla Holdings, CVS, again, Pinterest. Oh, there's one more. Again, Pfizer. Yeah, that's the one. But Pfizer, we might have to wait a little bit. Pinterest, still expensive. Starbucks, we got out of that. Let me find it. Oh, the Pfizers are green. All right, wait. If somehow the Pfizers could go negative, like really negative, I would pick up some of those. But then again, post-earnings, Pfizer last quarter failed. So that's the beauty of all the earnings plays. I have a pretty good memory. I have a lot of trauma with them, but just keep that in mind because some of these, you really got a nice little crash course on them last quarter, but I am kind of factoring that it's all kind of recent. They're going to move similar. CZR. Yeah, they got clapped. Yo, MO is rocketing. The bid on our contracts, sir, the spread is widening, but MO is starting to go up. Pfizer coming down. BABA's on the high. Oh, and I don't know if you guys want to talk about it. Remind me about China in a little bit. China real estate. There's actually a big deal. I have two things. We sold to Starbucks. Good work, baby. Good work. That was a great play. We will take it. Whoa, Baba, decent pop. Weed sold gains. I mean, it's still, dude, that was a fat move yesterday. So, like, I want to imagine it's still pretty high up there, no? Oh, the MOs, we got a little bit of time. It's the short-term ones. Those are the clapped ones. But, yeah, the MOs are starting to go up. CVS down 17. Win on the high. Leg, DJT. Interesting. And then Apple, I said this on the pre-market one. Watch out for if those pre-earnings plays. If they could come down, I'm down for a double dip. Starbucks keeps flushing. That's good. There could be a double dip if there's a bounce, but like I said, even on I won a lot of the pre-earnings ones, but I have to take some of these 1,000%ers right at open. I'm telling you, I did the calculations from last quarter. We would have almost doubled our money in net profit if you just took all of the ones that were green in the morning for 5 minutes. That's the crazy part. There were so many of them, but they're just little scammers. So you really only got that 2 minutes, and then you may miss out on a little more if it keeps going, but if you do that 5-10 times, I think it'll net way higher for you. AMD pop. I haven't even looked at AMD. I'd keep that one in mind. 1 in 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 1 Yeah, AMD is kind of moving. I don't think it's going to fill. Wait off on that one. Boeing pop. They were getting killed yesterday, and then Starbucks still going lower. There is this SPY, and then Bond still murked. What did I pay for those? My MA calls clapped. It's down 3 cents from 70, so they did bad. That and the Caesars, and then the Starbucks hit. And then we'll see. Maybe we'll wait. I no AMD plays for now, but like I'm not against it. I want to wait because like AMD is just a weirdo. It moves way more after earnings, but those like days of the earnings, it doesn't do shit. Pfizer just has to like surprise a little bit more, but that one's gonna be like it's either gonna really cuck you or if it breaks out from this level, like it's gonna run and it's not pricing in any of that. But you really need some momentum there. Tesla green. Apple double dip, I'm down with it if the price is right. Let's take a look. What was it? 205s? Yeah. Honestly, if those 205s come down a little bit, but we bought them at what? We bought them at like 4 cents or 5 and sold them for 10. So they're a little bit higher on the ask. If those come down, I'm down to double dip. Starbucks, if you want to double dip, I think you need a bigger bounce. It's still continuing. You see what I'm saying? So unless you, at this point, you either go for the far out the monies to frog it if they're still cheap enough, or you wait for a bounce. But again, or then you chill. Like I already taken mine. We'll sit on that. Call it a day. $30M. So 3M, those contracts came up. We got a little bit of time on them. But yeah, and then 3M got to upgrade. Fomc on the high. Coin earnings run up. I might, but I don't know. I usually like the shares better than options on Coinbase. So that's where I'm kind of worried about it. Because I don't think the options will be as easy to play. And then, Airbnb, those got clapped. Because again, Marriott didn't do good. This is going to be a crazy quarter for Airbnb. You guys realize that? You just had Marriott say domestic demand is struggling. So do the math, right? Travel's probably, everyone's on the edge right now, but either Airbnb is going to follow the trend of the bigger hotels or they're going to kind of break out a little bit. But so far, first set of travel earnings kind of hitting you with caution from Caesars all the way to Marriott. Roku. Caesars found a way to go up. Crackheads. Roku going up. Bro, SPY hasn't moved. And then you got data here in about 7 minutes. So PMI data is right around the corner. What? Oh, that's your opinion. I thought you were saying Bitcoin hit 38,000. I said, what? I forgot. Like, if this was like 2 months ago, you were like Bitcoin 5,000. So yeah, you scared me for a little bit. I was like, what do you mean it's at 30,000 right now? CRISPR going up. VRT, I've seen that one. Dude, Starbucks still going lower, man. So that one's still dropping. The PMIs, we'll see. Last time we had, I think it was PMI or ISM. We had a pretty big move. PayPal, Square. Dude, Square got murdered. NCB News was as good as it sounded, but it's not like they just improved, from like a struggling situation or like their provisions and stuff got better. But it's not like it's dramatically different. And then, dude, y'all realize you are right about to break 5,000 again? So unfortunately, we've been talking about the ranges, and we were saying either 5,000 to 5,100, but now 5,000 leading into 4,900 here. Like, you're going to have to maybe deal with that. 4,900 to 5,000, this is the top end of it. So TXN on the high, they're running there. TXN kind of like really running. That's a decent pop. Never mind. And then SPY just had a little red. And 3M is just still killing it. Yeah, PayPal did not do good on earnings. And then we have our deposit, like I was saying yesterday. Pfizer, I could still buy Pfizer on the good earnings, but I said PayPal, maybe if that one could come lower. So in a weird way, I don't know. But it's still, I think we bought in at 62? Marvel on the high and AMD. So you are getting chip makers starting to move a little bit. How low would CVS have to go to add? Divvy's now 4. I don't think I'm ever going to buy it. I think, Walgreens is enough for me. And even then, that one hasn't even been the easiest ride. But I don't really think I would take CVS. So me personally, that's nowhere near my list. But I mean, if I were you and like looking at it, you could always use like, historical prices. Like I like to go back in time. So like right now on it, you're at one of the lows. So like, I mean, it's either $53 at that point or what? I think your next set of like, if they really start to fail, like Starbucks, you're going to go to like 44 or 40. But this is going to be one lower level. Drugs, dude, it's crazy because if you guys like saw it, like I was reading you the previews, I don't know if it stood out to you. Like companies like CVS brings in $84 billion in a quarter. That's messed up. Like that's kind of near Amazon numbers. Amazon's like 160 billion, but like you have to think about it. They're doing a lot of sales. It's their margin though. It's like it's a retail big box store. Like that's kind of the problem there, but they have a much lower margin than Amazon. And that's kind of where it's at. But, like, they bring in a lot of volume. So, like, CVS, not Walgreens. Sorry, I don't know if I made a mistake. But CVS. But even then, Walgreens still makes, like, $20 billion or something. Like, they bring in gross revenue is insane. I'm telling you, their gross revenue is comparable to your tech retail giants. But it's the overhead, it's the cost, it's the bad debt. These guys have been around for 20 years longer. They got stuff catching up from a long time ago. So, yeah, and the CVS does. CVS, I think, out of that, I want to say they get like $30 billion just from like healthcare shit. Like borderline CVS is more so it's kind of a healthcare company. And like that's the wild part because like think about it, what's going to happen? It's probably down the line if CVS, the retail store, doesn't like improve significantly, and then that health business they're probably just going to spin it off eventually, just like you saw with 3M. The looting and theft a couple years ago, it did affect them. I don't think it'd be up much more. Like it's not like it'd be at all-time highs, but I'd say that hurt 2 basis points, 2% of margin over the years. And then gold coming up. And yes, start data in 1 minute. So the data you're going to be getting, it'll be the ISM manufacturing, or S&P Global manufacturing PMI. It's expected to be 49.9. So I think lower is better, higher is bad. But then again, this number hasn't really moved that much this year. So, and then you're going to get another follow-up in 30 minutes, 15 minutes on the data. So the JOLTS job openings, that's going to be bigger. So we'll see. Don't get too jumpy, but you never know. There it is. Our bonds already took a dump, but I don't have the data. Sometimes these get released. Bro, bond just died. Oh, that's sketchy. Bro, the data's not out. Bond just took a fat candle. Scammers. That reminds me of that one 2 years ago. There it is. Came in at 50 versus 49.9. So honestly, in line. I don't even think it's that like big of a beat or miss. So punt till 15 more minutes. Pfizer is starting to go up now. Pfizer up 4. Maybe it's starting to do it. So watch those premiums because like I'm telling you, they're not really supposed to move, and now the thing's waking up. Oh, we could have grabbed them. The premiums did do it. They dropped down to 2. But yeah, Pfizer's still on the high. Big old overreaction. That bond move is weird, but I don't think that data is doing much. Again, 15 more minutes, we get employment data. JOLTS job openings, that will have way more of a kick. 3M on the high. And then Boeing, and then Pfizer still. UNH going up. Low ticker still has a couple of names. Coin flip green. Pfizer. Yeah, ripping. MO, I know that thing just slowed down. I'm checking the long term right now. We got a deposit. Let's see what Pfizer did. Let's see, long term bear. It's holding the 176, so that's all that matters. Oh wait, we got a deposit. Never mind. That makes sense. I was holding it before, but that makes way more sense. Yeah, Pfizer. AMD pop. Pfizer X Divi in 8 days. Oh, no. So now it's higher than our last purchase. So just remember, we bought Pfizer a month ago. What price? It was like $26.48. So literally, you just broke out from there right now. So we'll see. I'm down to get some more. I'm still down on it, but I don't want to. I don't want to pay too much premium on the day. And we'll see. It's doing good. Starbucks is definitely on my pickup list. Dude, it's down 15% right now. Oof. But I don't know. I think I could get it lower. That's the shitty part. And, like, it's bad. I don't. You guys realize that was the first decline on Starbucks, like, revenue, especially in America, since COVID. So, like, the only time, and I don't even know the other time, but, like, the only other time you have had Starbucks lose year-over-year sales was when they damn shut the entire world down. Like, that just does not happen. I'm telling you, I love the company. I don't have it, but, you know, it's I've always respected what they do, even if I never understood $12 coffees. I don't drink it as much anymore, but, you know, it's like, dude, that was a shocker. I don't know any other way to put it except for, like, damn. So I think I could get it lower. I like the name a lot. It's already a great discount. If anything changes, I mean, you're going to look at that price and be like, damn, but I might get a little greedy and try to get it cheaper. Yeah, we fumbled the Pfizer. I was telling you the play. I was explaining it to you. I fumbled it. It was there. I thought it was going to go. Dude, those went 2 cents to 14. Like I was saying, because they were cheap and it's not supposed to move. That's the Frogger if it actually breaks out. So I think we kind of missed that one. If you got it, GG, baby. That one's a good one. First two charts, that's SPY. These are bonds. This is Starbucks. That's Pfizer. Top left, bottom left will always be index and bonds. I'd add Starbucks, but with that report, going to be very greedy. The company's price for growth. Yeah, they get real. Yeah, I mean, even then, Starbucks is in a, like, there's so much to it. I don't know how to describe it. It's a weird-ass company because, like, they weren't projecting growth. You see what I'm saying? Like, that's why you're like any of these companies projected for growth. The scary part about Starbucks,
that bar was set low. They're going through a recovery story from the last year or so. So the fact that they didn't even I don't even know what growth it's pricing in. And that's why I was it's surprising. It's not really it's like LeBron James getting blown out in the playoffs. Oh wait. Oh, and can I talk about it now? I need to talk about it now. Bro, that Kendrick diss. We have 10 minutes till the data. Bro, listen. Y'all remember when I told y'all? And I was like, yeah, Drake killed him. Holy crap. That's like the Bible verse where they're like, the one who speaks first sounds right. And then the counter are, you know what I'm saying? Nah, bro, Kendrick. Forgive me, Kendrick. Holy shit. No, bro, that diss was insane. Bro, he said, go teach your son how to pray. Y'all know nothing about that. Oh, bro, no, it was insane. No, it was insane, bro. It was insane. No, bro, because I told you first round I gave it to Drake. I gave it to Drake on that first round by easily. But no, that was some bro, that whole entire song was insane. You have no idea. The Kendrick diss was mid. That's only because you had a 2.5 GPA in high school. You know what I'm saying? If you raised that GPA up a little bit, it would have hit different. It's like it's a Lupe Fiasco effect. I get it. It's weird. It's different. I'm just teasing you, man. Don't take that one too personally, but because I missed a lot on the first Kendrick one. Like the first Kendrick diss, I missed a lot on it, man. I missed a lot. He hates the way Drake. You know that's from, right? That's a Dave Chappelle skit. Is that, what was it, Silky Johnson? I hate you. I hope every bad thing happens to you. Oh, man. Who believes me, man? Hey, listen, man. I at the very least, give it a listen. Like I said, man, I was Drake round one. Now I'm like, oh, my gosh. Gotta love it. Fomc 2 p.m. and then 30 minutes later, you're going to get Powell. Did I drink coffee this morning? Oh, man, Powell. Powell, the spirit, man. I told you, obnoxious positivity. I was even amped yesterday. I'm excited, man. I hope you are too. And it's a blessing. And we here, but we're going lower. So one more low now on the day. Again, we are breaking below 5,000, I'm pretty sure. Almost. Honestly, it's been less than 10 points, 9 points already. 7 minutes till Jolt's jobs reports. Thanks for the laughs, baby. Early morning rise and shine. Amen. And it's going to be a long day. It'll fly by, but yeah, we got this early morning, then we're going to get afternoon. We still haven't actually, so in the next 7 minutes, I think that'll be our final set of big data besides Powell. I think you'll get oil numbers a little later. But yeah, you're going to get Jolt's. ISM employment will be in that, and then you're going to get IS. So there's going to be 5 sets of data all within the same data set that we're going to do. I didn't sell 3M yet, but you could get ready to. So that one I'm still holding, but we have till end of this week, or is that next week? I kind of like it, but it's up 59. And then which one did I sell this morning? I sold my Starbucks. The refunding in June affect bill? Yeah, but here's the deal. Even today, even though a couple days ago they were like, we need more money, low-key Yellen stuck to her promise. She did what I told you guys yesterday. They front-loaded the short end with all that money that they need, but then she's committed to not adding to the other ones. And they're buying back bonds now again. That's why today you didn't get a negative reaction from it, but as long as she sticks to that could balance things out. But that's been the only good element of that so far. So
theoretically, yes, it could affect you in June, but as long as, borrowing may go higher or lower, but if Yellen can, in fact, stay to the script of not raising the duration, like the amounts, then it should be good. Charlie, drive-by liking from Miami. What's up, baby? Stay safe out there. Good morning. Charlie in the tree, baby. From Miami. Is it good weather out there? I want to go to Miami. I was supposed to go to Miami the other day. I said, Miami. I go in the winter. I go winter Miami when it's cold. Miami beautiful. Wow. Hot and Hillman. Oh, yo, all day start, baby. It's in for the play, but rather for teaching me how to make it, baby. Amen. And finger to the sky. You know what I'm saying? I don't know how long ago that came, man. I hope I didn't miss that. But I love you, bro. Thank you. Horna. Shout out to Long Term. Amen. Starbucks did very bad on earnings. They had a low bar, and they still missed it. I mean, we already kind of had a discussion on it, but nah, Starbucks is dirty. Tesla. All right, you're still going lower. You have data in 4 minutes. So low-key, we have gone low. This was the ISM data, or the, it was the PMI data. I'm surprised we actually kind of went lower. But we are going to find out what happens here. All right. I have no idea when MPW hits. Repurchase Scream Alerts, baby. Welcome back. He never left. We love you, baby. God bless you. Stocked up more Tilray. I don't want to play them now, but I mean, what you saw yesterday on some of that weed news, those individual weed names, they could do it. Cause I guess, damn, CGC's down 20, but that thing went up, 70 yesterday? Divi hits tomorrow on MPW. I think it's, when was it? Their ex-Divi was just a couple days ago, but yeah, I have no idea. I just like to get surprised. I just like seeing my account. It's like dividend. I'm like, woo! That's good. Yeah, so far, what do we get? So far, we got our deposit. Oh, wait, I already have my MPW divvy. Oh, wait, that's the beginning of May? Wait a minute, that's weird. Why doesn't it show it in order? I was like, what? Wait, but we got a divvy in May? Wait, no, today's May. I'm an idiot. Today's May 1st. I blanked. Yeah, I was like, wait a minute, what do you mean May? Yeah, so we got our deposit, and then I already got my dividend on MPW. Because I was like, wait a minute, where's my other divvy? Because I just got my Altria. So yeah, we got Altria, JP Morgan dividend paid 2 days ago. And then we just got MPW, and then AT&T. At what price? $4.72? Come on, Fidelity. That's not a good price. All right, 1 minute. So, Chad, JOLTS jobs openings, the number you're looking for is 8.7. Higher is bad. Lower is good. Like I've always said, if we could get a 7 handle, I think the market would like it. And then don't forget, there's also an ISM that's coming out that includes prices and new orders. So what I'm trying to tell you, if the JOLTS doesn't make us move, there's another ISM set that comes out that's going to have data that can move you. So keep that in mind, but 20 seconds. This data is more important than private payrolls? Yes. The JOLTS job openings holds a lot more weight. But then the non-farm's the best. There it is. Wait, the PMIs came. Bro, PMIs dropped. That's the thing. And then, manufacturing prices sped up. So the PMI came down. JOLTS jobs openings, where is it? Yeah, the prices are really bad on that. My JOLTS, 8.4. So that dropped. Honestly, it's good and bad. It's just the PMI that's killing you right now. No, the JOLTS was good. The JOLTS is like, it's down by 300,000. It's the lowest you've been in a year. But literally, ISM prices came in at 60.9, and the estimate was 50.3? No. Hold on. No, 53. No, yeah, so honestly, the JOLTS was good, but the PMI, that PMI just screwed you. And remember, you still have Powell, so whatever you see, there is going to be a fall. But look at this. This is the highest manufacturing PMI since the end of 2022. But yeah, no, ISM is really ugly. So sadly, the first time now you get your lowest job openings of the year, probably in 14 or 16 months, I'd argue. Maybe even 2 years. This is probably the lowest JOLTS number. That's great. The PMIs came in line. But right here, dude, that the spending, construction drop, then new orders plummets, and then you have prices surging. So that is not a good read. But again, if you want the job market to calm down, when was the last time you had job data pull back? So this one's tough. Do you get what I'm saying? Because, think about it. When was the last set of data where, JOLTS was good? The last time you had a good JOLTS was, end of last year. I'd say, 6-7 months ago almost. So we got to balance it out. Market's there, but generally one set of decent job data, another set of hot inflation data. It could reignite the stagflation discussion from earlier. We had that talk already this week. Powell forced to cut? Nah. If any, it's weird. Gold is going up on this one. That's the interesting part. So prices rocketing up, jobs dropping, gold's already down, but that's helping them out there. Definitely stagflationary. Again, because the new orders dropped. No, the JOLTS was good. I like the JOLTS data because that's where we're, again, pretty much you get one more JOLTS like that. It took us a while to get that number. You're going to be at 7 million. Once we get below 7.4 or maybe 6.4 million job openings, I believe we get back to a historical average. Because right now it's insane. It's an anomaly. But we haven't had any when was the last time the jobs market showed any sway? We haven't gotten any data like that. So I think it's good, but at the end of the day, I also think that ISM might just let your imagination run a little bit. Can you explain how you interpret the data? Yeah. I mean, what do you mean? So, I was kind of just explaining it to you now. I was showing you the calendar and, what I was looking at. And, I just explained my logic of why I think the prices is bad, highest in 16 months, and all the other stuff. But if it's a question you want on the watch list, I mean, if you give me some more specifics, I'd love to dive into it for you. Yeah, years of experience, but even then, the beauty of interpretation and analysis of data is that there is fundamentals. There's base, you need to know what certain things are, but then at the same time there's relativity. And what I mean by think about PE, price to earnings. And the weird part about it is that people think certain numbers are good and bad, but really it's what you compare it to. And why I'm bringing that up, because economic data right now, you may not know everything and it'll take time to learn, but I'm telling you here, there is a relative story that we're looking at. The last couple of years, you could look at where these numbers are just compared to last year, the year before that, and that could tell you a lot about what's going on. And then the next step
is factoring that into your plays and how you think it'll move and all that other stuff. You just listen to it, man. I wish we listened to it live on here, but dude, it's crazy. It's crazy. Y'all know nothing about that. Imagine an emergency cut. It'd be nuts. But I mean, what would the situation be? Tesla. Crazy how much macro I learned. Hey, man, my pleasure, and I'm glad, man. Welcome to the club. It's cool. You know, all the things going on in the world. And honestly, bro, I don't know what's happening lately. You guys have 1,000 likes? Why do y'all, because y'all are freaking out, bro. Y'all are, dude, I'm telling you, I got like OG chads, bro. I don't know what y'all just been, the internet got y'all. I need 1,500 likes. I need one more. I need 100 likes real quick. I need 100. Chad. Oh, I got to tell you something. I got good advice for you. I have really good advice. Because there's a phenomena going on, man. I've gotten a lot of emails in the last couple days. I need to share them with you, Chad. I need to share them with you. Oh, man, it's crazy. It's crazy. Oh, Riley, baby. Okay. So here's the deal. There's been a lot of videos going on. I haven't watched all of them in full, but dude, I swear to you, in the last couple days, I've probably had like 10 chads, like OGs, like people I've known for years, bro. Like you guys have been here. I didn't respond to y'all, so I hope I could answer it right here now. But y'all been sending me these videos. You know, you've been sending me these videos about the dollar failing, and like, or not even, and just switching to like digital currencies, and like I don't know what's going on. There's all these videos going on, and they're all saying like, "Oh, you're gonna lose your money," and everyone's asking me, they're like, "Is this real? Is it not?" And I'm like, "Listen, like I don't know. Do you guys have it? You didn't email me yet? Oh, well, a lot of people. Like literally, there's these videos going around, and it's like, yo, it's not a matter of if, it's when. It's like your currency, your dollar's gonna lose all its value, all of that stuff." Right? It's like bricks, but like a little weirder. But I've seen a lot of them, a lot of these videos lately, and people are asking about that. And listen, dude, I wouldn't freak out, but I was I felt blessed because I was really thinking about it. And like regardless of what happens, and like if you guys are really like afraid of that stuff, you have to understand how owning assets is going to protect you no matter what, without making you sacrifice anything to get it and being a tinfoilist. And what I'm trying to tell you is that all of this shit just reminds me of water. It's like when things are good. I tell you guys, I have a shit ton of water. You know why? Because I'm going to drink it anyway. Like, I'm not like, okay, I have enough water to feed a village. Great. You're like, oh, wow, you're prepper. You're going to waste. No, it's like, dude, I'm going to drink that water regardless. But I'm not like doing something unnecessary. So like, bro, over the years, man, if you guys are really going to get worried about this stuff and hear it, like, think about it. If they do change the dollar, if they change the digital currency, you know, like think about it. If you own real estate, you own stocks, like that's the whole point, is that you change your dollar to assets. But regardless, whether the dollar disappears or stays, if you are invested in assets, you're going to win. And like, that's where I'm like, I hope you have peace, and I hope you just keep that in mind. The answer is assets. And if you are afraid, I hope you could find the balance where you know the answer is assets and you're not taking steps that is costing you opportunity cost. You see what I'm saying? Because like you could protect yourself with assets without any opportunity cost, in the sense of, oh, I'm getting out. I'm worried and I'm not gonna do this. It's like, oh, I got to do that. So, yeah. It's big. I got so many of these emails though lately. It's like it's been a weird bricks type beat. Yeah, saying assets, not just stocks, 100%. I'm saying stocks. I'm saying real estate, like real stuff. And like that's just funny because everyone's like the dollar's gonna collapse. Your wealth is gonna change. They're gonna say people are saying the biggest change since what's it called? They say it's the biggest change since Bretton Woods. But it's just like, dude, assets are the answer no matter what. So whether I'm right or wrong, whether you're right or wrong, whether these videos are right or wrong, it doesn't matter. Do you get what I'm saying? I'm giving you the answer that you win no matter what. It literally does not even matter because the assets, if they change the value of the dollar and the currency, it doesn't change the intrinsic value of what you already own. And that's where it's just always the assets are the answer. Yeah, stocks would hold up, or at least it would reflect whatever the new world is, more or less. But even then, if the worry is your dollar and how you conduct your money is going to change drastically and threaten your worth, the assets and changing those dollars to assets is a better idea. And even if it never occurs, it's still a good idea. And that's where we are. It's YouTube videos. I got sent 3 different videos from 3 different people. Like, and they're big. They all have like 100,000, 200,000 views. All these videos get more views than all of my watch list, and it's like, and people are like, yo, what do you think about this? They're like, Josh, I take this seriously. Is this? And I'm like, dude, I feel, but I really hope you see the wisdom in what I'm telling you. Like, there's an answer, and it's being wise, but you don't have to risk yourself, and you don't have to risk opportunity cost, and just be easy about it. It's a good one, and you could prepare for any situation, but you don't have to like really try to get tied into it and try to chase, the next Bretton Woods. And if it does happen, assets will protect you just like it did then. That's it. The dollar devalues. People still need to live. Dollar devalues. All the rich people are, they still own equity in the most valuable assets in the world. And that's going to be worth something. Am I adding Starbucks? I possibly will. I do. So right now, I think it's at like the first level of good pricing, kind of like when Nike. Remember when Nike hit 90 and then it bounced? That was like the top end of the low price range. So I like Starbucks a lot. I am worried about the earnings that we got today. I don't think it was. I think it was magnificently awful. But other than that, I kind of want to get greedy. And what I mean is, like, I think I could get it at like 69. But that's kind of what I'm looking for. I'm either thinking like 69, 70, but then I'm an asshole, like low key. I don't know why I think we could get it for 60. You know what I'm saying? Like, especially once they start negotiating. Right? Like, because like, if I told you that here, you're like, nah, but now it's here. And so I'm like, I don't know, man. Maybe I get it at 60. I wouldn't be like 60 flat, bro. I'd love that position. I think it yields 4 at 60, no? I want to say that's 4% yield. I think it might be. Yeah, it'd be close to it. It would really have to flush, I know. Yeah, I'm talking Starbucks. I like Nike, but it bounced off the level. So you could have got it like, what, 10, 20% cheaper? And then 3M keeps going. Powell 230, FOMC 2. Market will go down. Well, we're going to do a little preview ahead of it, but it got interesting. Today's a big day. I'm telling you, not only just Powell, but like the whole breakdown of Powell. He's going to be it's a flip-flop. Like everybody is expecting something so much that it kind of created a new catalyst. So we'll go over that here in a couple of hours, right ahead of the event. Gold recover. Yeah, 69 would be a good starting position on Starbucks. Because you could always, honestly, even now though too, if we want to wait a little bit and just average into it, but I would like a little bit higher of a divvy. That's the thing too. Starbucks is a dividend stock. We're pinned here. Honestly, it's not moving that crazy. Like we are. You're subtly moving tiny. We've spent about like almost an hour here. We moved 12 points. Like compare that to every other day. I guess here, even in that range, you're moving almost like 20 points. So we're kind of barely moving. We filled yesterday's gap. Yesterday, that one at like the 42, but we haven't filled this one on the day. Wait to finish setup for the alerts. You just got to get it in there. Like once you like finish it again, if you already like re-signed up, sometimes for like re-sign-ups, it's either the easiest thing in the world or it may take like a 2-day delay. But here. Where is it? Another summer dumper in play. We'll see. But did y'all not hear that fun fact? So y'all realize 8 out of the last 10 years, the market has went up in May? Like, so the whole, like, sell in May and go away, like, I don't know, man. So, like, literally in the last decade, there's only been 2 Mays that actually sold in May and went away. So it's actually, like, it doesn't even matter. In the end, it doesn't even matter. I tried so hard to cut the rates, but in the end, inflation was still... Okay, I'm sorry. They're heading to Starbucks now. Good luck, man. They're going lower, man. That's honestly, I was worried about. We could have got like an extra $100, I think. That's the funny part, but I was worried about the little bounce. What's our? Honestly, yeah, it went up. I would have made another $100, but those went up 2,000%. That's crazy. So $20 into 400 in 24 hours. Starbucks is there. But we'll see, man, if that gets cheaper. Pfizer chilled out, so that had the little earnings pop, but now it came right back down. I don't know why PayPal and Square, but I think there was some loose... I think it was MasterCard. Yeah, it was MasterCard kind of hitting it a little bit there, but I'm surprised. Because they had a good earnings, but then they did sell off same day of their earnings. We sold out of CTMX, I think. Damn, that went crazy. Oh, my goodness. Yeah, Humana was on the high, but XLV healthcare has kind of been still struggling. Needs to get off of here. Where is it? Yeah, actually, Humana's in its own little world. Starbucks accelerating, yeah, because we keep talking about $69. I don't think it's a weird price.
That's it. Now with the whole story, if you really want to buy Starbucks, you got the people. You either really believe and want it now, or you're just like, let's see where it goes. And now there might even be some bigger range. So I like it. China vows to roll out policies to boost economic recovery. So that's the thing. Do you guys want China? I got two things out of China. I told you one of them the other day, but there's another thing, and we didn't really talk about it yesterday, but it's big. But China got something going on. We're going to see. Let me get you the first one. But I don't want to get ahead of myself. But China, if this recent stuff works out well, they're getting close to the bottom. I will argue. But then again, it's China, and they could clap you at any moment. I don't even, I don't even trust myself because it's China. But here's the first thing. I showed you this the other day. The Chinese high-yield bonds, they're finally tightening up the spread. So when there's a wide spread, you're crashing. So literally go look at 2010, 2011. This was their recent one. But now leading into here, we're finally getting to a more manageable level. This is your first fundamental bond market signal of a good sign towards the Chinese real estate market and their economy, right? So that's the first thing. This is one of the better things here. But now, this was the thing yesterday. It was the first time they ever talked about it. They were talking about destocking real estate. I don't even know what it means, but pretty much they're coming out with a plan now, and it was the first time they announced it yesterday to finally support the real estate market. So they didn't give any details. They just brought it up. But like I'm saying, if these spreads tighten, the fundamental factors look a little bit better, and then depending on what they do, pretty much you're subtly starting to see a potentially small stimulus out of China. But keep your eyes on house destocking. That's new. And that's what I'm trying to highlight here. The other stuff with the spreads, that was the beginning of the week. But now yesterday and some of this other stuff, that will be a key element with their potential real estate recovery or not. The wrath in China starts by it. China pivot. It kind of is. That's the thing. They brought it up yesterday, but it's a baby pivot, what they're doing, because they haven't been supporting it. And they're now, by trying this, if they actually do it, that'll be the first real level of support we've seen in a while. Donald Trump on the low. I know. They tried to put me on the low ticker. They thought they could bring me down. Put me in a court case, but now I just got $10 billion from the NASDAQ. Thank you. I know. They tried a low tick. Chris knows. I know, Chris is a great guy. He knows about the low ticker. He knows what they did. Fake news media. Fake news media. I know, the voice got solid. If you're a Republican, you don't like it. I get it. Josh is a Democrat. That's what it sounds like. Yeah, no, Josh is a Republican. Yeah, you hear that mother, you read the Bible. You what do you mean? Josh is a Republican, and screw him. Josh said if he gets banned on Google, you're going to vote for Donald? Fuck you. No. Yeah. Yeah, what are you talking about? I said, Josh don't care about democracy. I don't know. Everybody's got to drain the swamp. I don't trust them. I'm a private citizen. Hatch Act. They put me on the low ticker. Top tick tick tock. It's fun to say. It's fun to say. Josh is a Democrat. He got a Tesla. That's the funny part, because that's like that Saturday Night Live thing, Republican or not. If you're like, I drive a Tesla, and I think what's happening is like, you can't tell. The first half of Tesla, if you had a Tesla, you were a Democrat. Now, if you have a Tesla, you are a QAnon because of Elon. So now I don't know what to tell you. I don't know. That car is a Republican Democrat car. It's everything. It just depends when you bought it. Well, yeah, I thought Donald Trump stock was up today. DJT. Kava on the high. Microsoft's holding up. And then bonds a little bit. We're right below VWAP. Again, our data is not, we're not dataing. I think you have oil numbers in like 2 minutes, 4 minutes. Yeah, you got EIA oil numbers, and then that's it. And then it's all about the power, baby. Yeah, Root killed it. They did good. Caesar's pulling up. I'm surprised. They were down like 7, but last time I saw them, they were up 2. That kind of came out of nowhere. That Powell's potential hawkishness could be priced in. We are going to talk about it, but yes, that's the crazy part about today. But yes, I'm late today. What's with the reverb? What do you mean? I don't hear reverb unless I just sound beautiful. But I don't actually know because I don't listen to it. I could only talk. I don't, if that makes sense. You got reverb? You got reverb? No, it says the same. You got... Yeah, if anything, yeah, I was... I worked out. I think I sat funny on the bench. Because, I tweaked my shoulder, bro. But, yeah, my voice was hella weird this morning. It's getting a little better, but... Nah, dude, I, tweaked my shoulder. It's like my upper mid-back thing. I don't know, dude. All I did was dumbbell bench. And, I guess... it overhanged or something, dude. But, I, tweaked it. It's bad. Well, that got me a little raspy in the morning. Hey, what? Do the next switch. I did, but it still hurts, dude. No, it's like a really bad one. I did rack the weights. It's my own gym, so, I'm not proving any points. It's your rib. I think it might, honestly. Because I even did foam roller, on top of, my, lats. It hurt, dude. I don't know what it was. But I really think I lifted very weird on that. It was bad. Oh, mouth tape was great, dude. If my back wasn't tweaked, but no, that was great, dude. It's hard to explain. You know what I did? I did mouth tape and a nose strip. I stepped it up. Every about a work. Oh, man. Full-on hostage slumber. You wild? No. Oh, Christina, you didn't hear it? Thank you. I know a couple other chads recommended it too. But I did it. It was my last 2 days have been amazing. That mouth tape sleep hit. It hit. I've been loving it. So it's great. Like, I don't wake up dry. Like, that's it. Oh, wow. Oil inventory, 7.2 million. Estimate was draw of 2.5 million. So check oil. That seems huge. That seems absolutely massive. Oil's dropping. It might go below 80. Cushing crude inventories, 1.089 million versus negative 659. Gasoline, 344,000. Estimate was draw of 1 million. So, honestly, these seems like inventories rocketed. Distillates, that one's bad. Draw of 732. Estimate was gain of 1 million. You get mouth breathing is so bad for your health. It is. I'm the worst, bro. I'm the worst. I'm the worst. So that's how I know I'm a weirdo. Because I'm just a fucking mouth breather. It's bad. So hopefully my new sleeping habits can make some changes. EXPI on the low. Oil prices they're high, but honestly, I think the problem is gasoline. Sadly, once again, gas prices are way higher than the price of oil. Like, I think the last time, yeah, like they're just, I guess it kind of matches up, but I still don't vibe with it. Just all elevated. You have a deviated septum. 6 years, you only breathe through one nostril. Oh yeah, how'd you get that? No kidding. I don't know. I'm just not it's so stupid, dude. God gave me this gigantic nose. You know what I'm saying? I have a huge ass nose. And I don't even breathe through it. You know what I'm saying? Like, it's kind of crazy. It's kind of crazy, dude. Oh yeah, you guys haven't, like, dude, I used to get made fun of for how big my nose was. So, like, in high school, like, they would just call me Big Nose. I'll never forget it. Bro, my first interaction with, like, a hot girl in my life, like, when I think I was in middle school, and I was like, I love this girl. She is beautiful. And that was like, you know what I'm saying? And I was like, I love her. You know what she said to me? She like, oh, you the big nose kid. Yeah, that was me. That's the first time I talked to her. So, yeah, that's it. I'm sharing my childhood trauma with you. But the point is, I got this big-ass nose, and and I'm a mouth breather. Like, what? It's crazy. It's crazy. No way. Yeah, bro. Destroy my soul. Yeah, for a little bit. First girl you asked out said, ew, no. I think the first girl I asked out just was like, are you serious? I think she was like, what the fuck is happening? Are you for real? What? Why do you want to do this? No. I was like, I'm sorry. Fuck. My bad. I need to breathe, man. I need more better breathe. I'm putting on a nose strip right now. Screw that. I need to use this nose. Use what God gave me. $3M 99. The contracts went up 130. So we're still in one of those. Not bad.
They say the worst they could say is no, and it's not true. Well, it is, but like they say no in a different fashion. But yeah. Yeah, CGC gave up like 25%. Let's go. Well, breathe through your nose, Chad. Breathe through your nose. Work on loving yourself. Sadly, my problem is I love myself too much. Well, you know, sometimes it gets in the way of the spirit. So don't let the jokes fool you, my friend. Don't let the jokes fool you. You got to be humble. You got to be hungry. And the video. What was the other one? AMD. Another chip. I mean, Starbucks going lower. SPY bouncing a little bit. See, AMD down 6. That was a cuck. Meta's up on the high, 1.58 against SPY's getting to the opening candles. Bonds are green on the day, but still near the low. Everything's red except the Dow, and the NASDAQ could go green right here. WWD. Yeah, Meta's killing it. Bro, AMD, though, I think that is a cuck, man. 6%. Airbnb's got clapped. And my Square pre-earnings. Airbnbs are down 38. I am down a double dip on both of those. I just want to, unfortunately, Powell's going to move everything today. But after Powell, yeah. U.S. crude rose last week to the highest since June 23. So, yeah, those stockpiles are huge. Interesting. Gas prices dropped 1% on the gas futures. I was looking at those. And then oil still above 80, but came down a little bit and down 1.5 on the day. Yeah, CVS got clapped. Starbucks going lower. Pfizer came down. Microsoft, it seems like Microsoft, Meta, any of these other big tech that already reported, they're kind of doing their own thing here this morning. And then even though the NASDAQ's red, you got a couple of big tech that is leading the way. Let's actually get a breakdown. So right now in the S&P 500, believe it or not, you have 313 names in the red, 188 in the green. Dow Jones, you got 14 in the green, 16 in the red. And then NASDAQ 100, 67 red, 34 in the green. Watchlist was fire. You slacking, need to watch Sunday. It's good, man. They're honestly, they're going to get a little longer here. But I've been having a lot of fun with it. And I think it's been a lot helpful and organized. But definitely don't miss the watch list, youtube.com/thetradingfraternity. Because if you're missing out, I'm not going to repeat a lot of stuff anymore. So I will kind of be a very good, useful tool. But at the same time, you might need it. You might need it to a degree. But yeah, it's a little longer, but good questions, going in depth. And I hope it doesn't, I hope it clears things up too, you know, makes it a lot easier. Love the commitment. I do too. And that's why I realized, like, I'm like, you know, there's just we've created different Chads. Like the Chads who stream and watch the watch list, they're just involved at a different degree. And like those are the people I've seen crazy things and contributions out of, and I just know
That's the system, and I like it. And that's all I'm boiling it down to. Because then it's like, you could come in the stream, you want to play, you want this, you want that. But it's like if you ain't have a follow-up or a full circle thing, it's just going to play out different. I'll let y'all do whatever you want on that. But the back and forth between Watchlist and stream and the connection and those that have that in the routine, it's just a whole different experience and a better one. So I've been liking it. I've been liking it. Neo. Alrighty. On that note, I'm going to go to the bathroom. Follow me on Instagram at the Trading Fraternity. I'll be right back. Chattadonia, you got like what? 3 hours and 20 minutes till Powell? Oh man. So we got a lot of time, baby. We got a lot of time. You already got all the data too. You already got all the data.
A little bit nervous.
All right, I'll be right back.
Action starts at about 2 p.m. today. Bloomberg's Abigail Doolittle. Thank you so much. Now, coming up, before we get to the Fed, we're going to talk about the race for AI chips. We'll speak to Chris Miller. He is chip war author and Tufts University professor of international history about the winners and the losers. This is Bloomberg.
That low ticker's kind of picking up there. I don't know. You're not watching the SPY move too much, but I just saw that whole thing flush. S&P, Tesla, BBB ratings affirmed despite pressure on margins and cash flow. And then NYCB is up by 30.
Question again.
We will be tuning in, of course, Steve, later today for you and the Fed chair as well.
Thanks.
Steve Leisman. After the break, Viking Cruises is set to go public right here at the NYSE. We're seeing indications right now, 26 to 28.
Okay, they're not. I can't go to the bathroom. I guess I'm not.
That'll be a first-time
not a good time.
interview ahead.
This is not a good time to take a piss.
Debut for that stock.
Everybody wants to take a piss. Even the reporters there, they got to go. They're like, oh, shit. We got to go, too. Man. Okay, I'll just wait. Oh, wait. I'm sure there'll be a good update in between. Rating on Tesla, BBB. Hand pan drum, wasn't that dope? I loved it. AI cloud startup CoreWeave valued at $19 billion in new funding round. Damn. AI cloud computing raises 1.1 from investors including Fidelity and Magnetar. AI cloud computing $19 billion. That's coming out now. Yeah, crude is starting to dump. It's near low of the day is 80.31. He's coming down. What was your 2 standard deviation number on Starbucks? Ray, dude, go watch the damn watch list, please. Otherwise, stop wasting my time. I love you. You know, I'm glad you got real estate. You're a part of Core Real Estate, but like, you could click the damn video. You had all day, and you were crying about it yesterday. You're like, I'm worried. I care about it. It made you 2,000%, and you didn't even look. Don't ask me shit. You know what I'm saying? You got to do it, bro. Come on. You know what I'm saying? Come on. I love you. I mean it lovingly. Like, come on. When I say don't ask me shit, that's like, come on. That's like, bro, you got to just click on it. Otherwise, don't ever come at me and say, I care about something. You were saying, what was the, I'm going to read it. I'm going to read it for everybody. What did you say yesterday? You said for Starbucks, I got the 78s. Was that your math, Josh? Please, I'm stressing. Okay? And then in like 12 hours, that stressing and what you told me, you did not even care to look. And you have the play. And so it made you 2,000%. You tell me you're stressing and you didn't even look. So I'm going to value what you tell me a lot less in the future. You know what I'm saying? For real. Like when you're like, Josh, I need help. I'm stressing. I'm not going to believe you. I really won't. Why? Because last time you told me that, you didn't put in the effort 12 hours later to look at something that made you a lot of money. But you did it yourself, and that's good. But now I'll be right back.
Wall Street Week's
I got to go before they
David
cut
Weston.
me.
And David, I mean, this is one of the most competitive industries, and yet you have one huge incumbent.
Exactly. People are investing so much in AI right now. But the question is, do they have the chips they can buy other than from NVIDIA? Chris, thanks so much for joining us. Appreciate it. We had earnings out of AMD. They're trying to make something to compete with NVIDIA. I guess my basic question is there anybody that can narrow the gap with NVIDIA and manufacturing these high-end chips?
Well, the evidence right now is that NVIDIA's got an extraordinary lead and looks like it's maintaining it. We see from all the big tech firms, they're pouring $10 or so billion a year each quarter into building out their data center capacity. And the lion's share of that money is going to NVIDIA, which is producing almost all of the key chips that are necessary both for training AI systems, but also for deploying them at scale.
Well, you talk to us a little bit about the pie. I mean, when it comes to taking on NVIDIA or growing in this industry, is this about taking share from NVIDIA, or is the overall pie growing as well?
Well, the pie is going to grow dramatically. No matter what estimate you look at, there's going to be much more spend on AI infrastructure over the next 5 years than there is today. And there's different types of AI workloads. There's training big systems like the GPT systems that OpenAI has released, but then there's also the deployment of them, running AI across many different types of devices. And it's possible that as we deploy more AI, we'll want different types of chips that are optimized to different domains. But right now, it looks like both in the training and in the deployment, NVIDIA's got a very strong position.
So give us an overall sense of the supply and demand for these high-end parallel processing chips. What is the supply? What is the demand? Because every time we turn around, there's some big outfit like Google, like Microsoft, saying we're going to invest a lot more in AI.
Well, last year there was a really severe constraint in terms of supply for AI chips. It's lessened up somewhat this year, but one of the challenges that remains is that next to every NVIDIA GPU processor, you need an ultra high-powered memory chip produced by SK Hynix or Samsung or Micron, and these memory chips are still in pretty tight supply. And so the entire system remains hard to get access to, even for the biggest tech companies, because the AI memory chips are still in deficit relative to where demand is.
And so how does that right itself? I mean, is this a question of just increasing supply, or are we going to see even bigger CapEx spends to try and get some more chips?
Well, all of the world's big chip makers are trying to increase their...
Thanks, Chris. Thank you. Yeah, Microsoft's still up. You said China plays going. Noah, Mr. Kamasa. Wow, thank you, my friend. Horna. My man, happy Powell Day. He's here. You guys want to see some more Powell screenshots? I had a couple from yesterday. So this one, where'd it go? So this one, that was the, that's the one we went with, you know? But like you almost had this one, but the arms were a little too small. It was kind of weird. Like I like this one, right? But then like his shoulders are buff, but then they gave Powell Trump hands. I don't know if I could. I don't know. I think my hands are a little bigger than Powell's, but that wasn't fair. I know. Fake news media. But yeah, that was the second one. And then I was gonna do this one. But then it wasn't as buff, but it looked intimidating. You know what I'm saying? So, yeah. I made you uncomfortable. It was scary. Powell. Yeah, man. I made them. What do you mean? I'm an artist. Brought to you by AI Options Trading. My financial. Yeah, you know. So. Isn't Trump like 6'3"? Yeah. Have you seen Trump's son? He's like 10 years old and he's like 6'9". That I'm like, man, I don't know. And then he got a villain story too, brewing. You know that? Imagine the villain story for Barron Trump. But then I really hope he goes to the NBA. Dude, he's huge. AMA. Oh, MasterCard coming up? I don't know. Yeah, oil's on the low now too, even more. So it could be time, but it's starting to break down. But like, this is the first time now. I think if we could break 80.41 or 80.33, which we're below right now. But yeah, it's like 80-ish. Once we get into 70. Last time you were here was beginning or middle of March. You don't know the name of the bank, but your son's friend went to withdraw $3,000 and they told him they did not have it in cash. That happens sometimes, but I mean, you got any more info? We'll see. How's my investing changed from when Powell started hiking rates? Curious from the level of wealth you have. Fixed income. That's it. I've never. You realize I never owned bonds up until he started raising rates. You know, I mean, I have a decent amount of money. I'm pretty young. I guess I'm middle aged now. But it's I guess I think I'm young and I'm just old. But I'm sorry, I'm having a realization out loud. But I never bought bonds up until recently. You know, I never really took advantage of like having money and then letting it sit to get rates because I never had. No one's ever offered me 5% to do nothing ever in my life. And honestly, that's why even the year like last year, I say like I should have just waited more and collected instead of tried to trade. And I kind of made some of that mistake again. But at the same, I just wasn't used to it. I've never been in an environment where there was a good offer to do nothing. You know, I made my money in zero rates. Like, you know what I'm saying? I made my money when money was free and it was all in tech and you buy it all. And like, you know what I'm saying? Like I was buying that stuff. Like I like dividends and you've seen how I've done that, but never bought bonds up until recently and took advantage of that. And then I guess like a year after, like 2023, I was like, okay, I'm going to be more margin sensitive on properties. But other than that, that's pretty much been about it. But fixed income for sure. It's not any. I knew about bonds and I've always loved them, but why would I buy them? And now it's like, wow, they pay a lot. It's been decades since it was worth it. Yeah. Have you lowered your debt exposure selling assets? Well, I did deleverage like early on. That's what I was saying. I think it was was it when Powell started raising rates? I think it was a little after, and I was just saying, I mean, I didn't want to have too much debt because the cash was paying now, so it didn't make sense if I would take out loans higher. I kept any loans that were locked in. So like I have a lot of 2%, 3% mortgages. So those ones I did not, I'm keeping those forever. You know, even if I can pay them off, it wouldn't make any sense. But other than that, yeah. $80.80, bro. This will be your first time oil dropping. There was news on oil inventories were really, really high. Like, I think it was like 7 million barrels or something, and the estimate was supposed to be a draw. Usually, it does the opposite of what I think is going to happen, but, like, anytime I'm like, wow, that's bad, it goes up. But this time, it did. It sold off like $1.50. Francis, been here since 2019. Hey, 2020, baby. Amen. Thank you. Hope you got the long term too. And God willing, yeah, I got a longer journey ahead. DJ, where's the China place? Starbies. Yeah, Baba did kind of take off. Visor came down. Uber. K-Web on the high. Yeah. China, like I'm saying, that thing yesterday, the destocking, we'll see if they're finally going to change it around. We'll see. The meeting, I mean, there's a lot of expectations that are going to both work in our favor and potentially against us, but the main thing with Powell is just going to be his speech and what he says. The beauty about today, we're not expecting much changes on the statement. So compared to like the last couple of meetings where we've watched some small changes and you've gotten reactions off the get-go, I don't think you're going to see that here today. You'll get a small reaction, but it looks like the press conference is going to be the powder keg. No dot plot today. Dot plot's in June. So that's exactly why when the statement comes out, there's less to react to. Otis. My bottom chart's not telling me how much percent is up. MSOS filled the first gap from the halt. Bro, wicked move on that one yesterday. Where is Mr. Dollar? Oh, he's down. No, he's up. Same thing. And then SPY's at least back to open. Or within the opening candle. Yeah, I'm going to give a more in-depth preview, like a little bit ahead of the event. So pretty much like 30 minutes, I think about 30 minutes ahead of the FOMC, I will probably be doing preview analysis. We'll recap everything, and then if anybody has any more questions too. But I do hope that helps. My favorite genre of music? Hardcore rap. Or Powell. I mean, that's about it. It's really weird. I know. MPW. I think we put that on the watch list about 2 weeks ago. If you really care, I could put it on the watch list for you tonight. Otherwise, just go find the video. But we just got our dividend today. You were thinking jazz or something? Yeah, I mean, I like classical music, but I haven't really, I listened to a lot of rap growing up. It was weird. AMD puts, are they, though? I'll just double check. Because AMD was broad. Nah, AMD blue. Dude, they're up 30% on those puts. On the next week. 73 on the near the monies. But still. They were cheap. If you got them at the, I guess, 50 to 30 to 50. Yeah, I got my MPW dividend, but that's Fidelity. They're usually fast, but this time they gave me it at a high price. So like usually all my drips on every other stock, they come back. Like it's always at a low price on the day, but this time my MPW it did it higher. Amazon, Lil Chicle. I want to see those Amazons. I'm glad, man, the pre-earnings so far. Except for the Square and Airbnb. You got to be careful on Fidelity. X-Day could be mid-month, but they buy towards the end. I get it instantly. So every time my dividend, the day it gets paid out, Fidelity gives me the stock right away. That's what I'm saying. They give it to me They give it to me at a good price. I literally, so far, with Fidelity, every single one of my dividend reinvestments have been at one of the lowest prices on the day, except for MPW today. I do go to the gym, man, yeah. As I was saying it, I think I got hurt. I think I tweaked the muscle lifting yesterday. TLT trade. Bought 30 94.50s for 2 cents, expiring 5/10. I think a short-term bond play, don't ever forget today and the next like 2 days after the Fed historically is good for bonds, but I don't know if it'll go that high in 10 days. That's it. So I think it's a good play if we get real bond volatility, but I don't know if bonds will actually. I think that's like about I think that's 0.5%, low key. I could check. Where were we? 328. Oh yeah, dude. No. Yeah, that's tough, dude. So I think that's why the play was cheap. You could get it, but essentially for that play to hit in a weird way, you need the market to price in like two more rate cuts. As weird as that sounds. But like, so literally last time TLT was at 94, I mean, the bonds were about 0.5% lower. So that's where I'm saying it's just like to match up with that, it's possible. I don't know if it's probable, but it's definitely like if we get any good dovish sign on Powell, you'll have a chance. But other than that, more time would be a great play. And that's it. I just think the time cucks you. The idea is there, though. Is Pfizer ripping again? Double check those contracts. Amazon's dumping. Yeah, Pfizer's up. Oh, there's a candle. I feel like Pfizer's conference call is later, though. Hold on. Now that I think about it, I want to say they'd be right now. SMCI dying for real. I forgot to look at that. NVO on the high. Is it now? I think it might be. No, 10 a.m. We already missed that. So I think it's still going on. It'll end at 11:30 Eastern. So yeah, it ends in 30 minutes. No shit. I thought it'd be over. Email address. Invalid. What? Oh, I have to register.
Right? For everyone, not for us, of course, for everyone, because there is huge number of abandonment that is happening at the pharmacy level when people are asked to pay these very high out-of-pockets, particularly the first 1 quarter and maybe 2, when they need to exhaust their, let's say, their co-pays or the deductible. So that, I think, dynamic, you know that the industry always asks that we contribute to the out-of-pocket payments as long as the patients are paying less, because there is a significant benefit for all, for the healthcare system, for the patients, for us. And so I'm not that concerned about that for the industry as a whole. I'm very concerned for the industry as a whole with the mandatory cost reductions. There is no negotiation there. They're just cutting prices that are occurring for biologics and for small molecules particularly. One good thing for us, it is first of all that we have good exposure on vaccines, that they are not part of that. Actually, they are benefiting from the IRA because there is no co-sharing. So we can see that in the volumes again. But on the small molecules where we do have exposure, I would say that we were lucky. Only one product was selected for 26. We could have 3 or 4, and only one was selected. So Eliquis, as Amir said, we will wait to see. We know, of course, but we can't discuss in the middle of negotiations about
Pfizer CEO.
And so we'll see the impact of whatever that is in 2026. Then, if next year they bring some of the other products that they could be included, and
the premiums are still jacked.
They were not in this year.
AMD flushing. So I was just saying, those AMDs didn't go too nuts yet.
The
50 to 70%, but the Pfizer's
are
already up.
Anyway, they are approaching their LOE. So even if they come into the IRA, the MPV risk that we have at place is not that big, because really we'll cut the price for something that will not be for a very lengthy period of time, but will be for a smaller than others period of time. This doesn't mean that this is not very bad for the industry and for innovation, and we clearly opposing it. We'll try whatever we can to defend it. Let's go to the next question because we are running out of time.
Healthcare names are doing good right now.
From Rajesh Kumar with HSBC, your line is open.
Hi, good morning. Thanks for taking the questions. First question is, you very helpfully provided some color on the gross margin. What are the takes and puts there? If we look at your early 70s guidance, and
this is weird, but
you achieved in
okay,
Q1,
I was like, dude, I lost the browser.
It
doesn't show up.
70s gross margin some point in some quarter this year, or you sort
of like, I can't turn this off even if I wanted to.
Early 70s.
Okay, I found it. It doesn't load up.
The year, maintaining over 70% margin, and then the bit which is quite difficult to work.
Chips dumping SMCI and AMD earnings.
Disclosures is how did the PHILO number impact the gross margin? So any help there so that we can model that right would be much appreciated.
Dave?
Great. So yes, I think we just gave some color around gross margin being closer to 70 versus closer to 80% when we entered 2024. We are maintaining that color at this point in time. I would say that it's unlikely for our gross margin rate to fall below 70% in any given quarter. But I want to just emphasize the gross margin rate will fluctuate a bit, primarily given the mix of sales, specifically within the vaccine portfolio, which carries a lower gross margin, number one. Number two, when you look at our performance for gross margin in Q1, the dominant effect of that versus last year is the mix, the lower sales volume of commodity in the quarter in Q1 versus last year's Q1. Obviously, the final adjustment of the Paxlovid reserve actually did also have a one-time positive impact on the gross margin rate in Q1, but that was less of an impact compared to the mix. So I hope that helps.
AMD's still flushing a little bit, down $2, $3 since we last looked at it.
It is the underlying demand of the product, right? So it was
and then SPY back at VWAP.
The first quarter only in the US, 2 million scripts, right? So that's significant. And keep in mind that this was the quarter that we moved from a previous way of go-to-market approach to a commercial model, right? That had a lot of milestones in execution, but we didn't step into any of that. So it was, again, I'm very pleased how
Starbucks, new 52-week low. SMCI is selling off.
Very smooth.
Bro, SMCI is about to go to 600.
Very low cooperation on the commercial plans for the vast majority of the insured lives. And then at the same time, very good execution with thousands of pharmacies participating, almost 90,000 pharmacies, if I remember well, 90%, excuse me, of the pharmacies participating into the Medicare part. And that went extremely well. And also I want to remind that the Medicare, that goes clearly with different price level, because it's through the credit of the US government compared to the commercial plans that they are at 1,000. It's a different list price. And that the difference exists for this year on. Next year, everybody moves to the list price and, of course, the discounts that we give plan by plan. Next, go to the next question, please.
Thank you. We'll take our next question from Chris Shibutani with Goldman Sachs. Your line is open.
Thank you. 2 questions, if I may. The first on pneumococcal vaccines with Prevnar as well. Last quarter, you provided some commentary about your thoughts on the tone of the markets, particularly for adults being somewhat more mature. And obviously, competition is coming across the different categories, adult and pediatrics. Can you comment about your view, given that performance was relatively strong, and how you're preparing for competition? The second question I have is on commercial models. There has been some nascent efforts in the industry to go more direct to consumers. I cite, for instance, Lilly has a Lilly Direct for their obesity products. Amir, I'm curious about your thoughts about integrating this type of approach, particularly as I think about certain product categories that you have, like migraines and Nurtec. How might this work? Where is Pfizer in terms of exploring these opportunities? Thank you.
Amir.
Okay, Chris, thanks for the question. So on Prevnar, you alluded to the commentary we provided around dimensionalizing the market, and I think it's worthwhile just reiterating that. So the adult market continues to contract, and that's for 2 reasons. There are increasingly fewer eligible 65 plus adults, and then the 19 to 64 underlying medical conditions population is obviously more difficult to activate. So that is a dynamic that is true for our business, but it's also true for any competitor that's going to come into the adult vaccine market. So I think that's important to note. Now, for our overall franchise, we continue to expect growth. We did very nicely in Q1. We saw 6% growth. And the big driver of that is increased uptakes, as well as market share growth in the pediatric segment. So pediatrics in Q1, we saw a lot of conversion, PCV 13 to 20. And our share exiting Q1 was at 80%. And that was from 71% at the time of launch of PCV 15. So we see good momentum on pediatrics. PCV 15. Now back to your question about the adult segment and competition. We're continuing to see very good performance where we are. We have 98% market share. We acknowledge that V116 is coming.
I made a play. I made a lotto play. Very, very risky. You will lose money. Not a recommendation. I did a SMCI daily put. I did not a daily, a weekly. I grabbed a 555 put for 50 cents. 55 cents. Bad Powell plus more sell off. You get lucky. Otherwise, you're gonna lose $50, and that's about it. So not a recommendation. You will lose money.
Customers have a preference for workflow management to stock one vaccine that satisfies all the current ACIP recommendations. So until we know more, I think the best way to defend our share in the adult segment is to continue to do what we're doing.
I know. If we're not, I'll get paid a lot of money.
Maximizing the opportunity that we have in the adult segment.
How that play works.
Albeit contracting. And then continue to drive growth.
So it should be the bottom. It should have sold off a lot. But
on your second question
there's
around consumers, look, engaging and activating consumers is, as you pointed out, a very, very important part of our business. It's true in vaccines. It's true in categories like Paxlovid and Nurtec, just to name a few examples. And we're always looking at ways to enhance that connection. You know, one example I'll point to is the work that we've done on VaxAssist
and GE
as a mechanism to help consumers determine their vaccine eligibility, but also book appointments. And that's a really good example of value that we can bring. And to the extent that we can do more of that, create value for patients as well as for our business in other categories, we'll certainly look to explore that.
Alexander, very quickly, anything on PCV in international markets?
Yeah, no, we had a great quarter. As you know, we grew by 8% operationally, but more importantly, we also have achieved some key milestones. So we got the European approval of pediatric Prevnar 20 in Europe. We also got it approved in Japan, which are a very important market, and Australia and many others. So this is great because then we want to build on the very successful Prevnar 30 franchise.
SMCI is getting murdered
around the world. As you know, we have
huge.
Exclusive NIP status in 130 markets, and now we're going to be able to
this is
build
the
on that. Just
this is the level. That's the whole idea.
We still are in the process of getting BTC recommendation in most of the European market, but where we got it, in Germany and in France, we see very nice pickup. And why? Because they extended the population covered by the Prevnar 20 adults. For instance, in Germany, STIKO gave us 18 to 59 population at risk, and all comers 60 and above. And since that, and we got this recommendation in February, we get very nice pickup and utilization in Germany, and we are about to launch in France as we speak. So in adults as well, we see a great potential of growth.
It's very nice cadence of approval and a very nice cadence of recommendations. Next question, please.
Thank you. We'll take our next question from Mohit Bansal with Wells Fargo. Your line is open.
Great. Thank you very much for taking my question. Maybe a question for Dave. Just wanted to understand the cadence of margin improvement as you are embarking on the cost management journey throughout the year. Because, I mean, like, so you had a really high EPS because of the one-time item, but if you think about margin
coming down a little lower,
how should we think about it? I understand fourth quarter could be impacted with community revenues. And then when we get into 2025, should we think about better leverage, or do you think there could be more opportunity to reduce expenses in 25 as well? Thank you.
Yeah, thank you for the question. I would say that without giving, since we don't guide to quarterly expectations for gross margin, I would just say that the focus that we have around improving our cost of goods sold is a multi-year journey. And these costs that we are working to improve take time to adjust and to further implement ways to be more effective and efficient in this infrastructure. So I wouldn't think of that having a significant impact on 2024, but more, if it would, it'd be late 2024, but more 25 and 26. So, but more to come as we know more and as we develop our plans more specifically.
All right, NVIDIA chips are on the low right now.
Specifics around that.
High ticker still has a couple, but we are approaching low of the day. You're off by like 4 points.
Our next question from Chris Schott with JP Morgan. Your line is open.
Great. Just two ones for me here. Just on Brisvo, just really quickly following up on the earlier commentary. Can you just update us on where we are in terms of contracting efforts and progress in the retail channel, just addressing some of the market share issues you highlighted last year? I guess my specific question is, do you have line of sight on contracting at this point, or is that still something that's going to evolve as the year progresses? And then the second quick one was just on Vyndaqel, obviously very strong numbers. Maybe just a quick update in terms of where we are with penetration in that market, and where do we, how much higher can this go? Just how much more of a growth runway is there for
AMD too? So SPY's about to be at 500.
Thanks, Chris. So on Brisvo, as I said, we're progressing our contracting conversations. So we'll have more to share on that as we do later. And in terms of your question on Vinda, Vinda had a really strong quarter. We were up 96% year over year, but importantly also 41% over last quarter. When you look at the drivers, I think there's a few things. Some of that is temporal. So there were some purchasing patterns with wholesaler and specialty pharmacies. And then we also made a lot of efforts towards the end of last year.
Okay, you're at the low of the day. New lows just hit.
Re-enrollment process for patients
unfortunately,
was very smooth at the beginning
you're hitting
of this year.
a new
So
low into Powell. We're down 0.5.
A little bit of a Q1
could be
bolus.
worse.
But importantly, at the heart of it, part of our strong performance on Vinda is that the fundamentals around diagnosis and demand are really strong. So we saw a 33% quarter-over-quarter increase in new patient starts. And diagnosis rates, over the last several years, we had talked about getting into the 30 to 50% range. We're approaching the top end of that. And there's still significant opportunity to identify more patients. That's the biggest unmet need, and that's where we're concentrating our commercial efforts going forward. So we do think that we will sustain this momentum, probably not at the same rate that we saw in Q1, but we will continue to perform well with Vinda.
Thank you. Alexander, anything to add?
Yeah, very quickly on the international front, we also had a very strong quarter because we saw a 28% operational growth, but a 43% volume growth, which is comparable to what we see in the US.
Oil down below 80, first time from March. 50-15. So this is like the gulag from last Thursday, low key. This now takes you into here. Again, like 510, 511, then 500, 407, and then 4000s again.
The reality is, we still have opportunity to grow because
Tesla on the low.
In market like France, we are approaching 50%, but in other like Italy, we are around 30%, Japan 28%. So there is still opportunity to grow and increase diagnosis rates.
Thank you very much. Next question. We'll take 2 more questions because we are running out of time. So next question, please.
Thank you. We'll take our next question from Tim Anderson with Wolfe Research. Your line is open.
Tim?
Yeah. Can you hear me?
Yes.
Yeah, there's no dot plot today.
Yeah. So it's a busy pipeline readout year. I'm wondering, Michael, can you just point to perhaps the 1 or 2 bigger upcoming readouts that excite you the most, where your confidence is highest, that could be value creating? So I'm not looking for a description of everything you're reading out, just maybe 1 or 2 that excite you the most.
Thank you, Tim. Mike, excite us all, please.
Yeah.
Excite us all.
I'm excited about potential approval for marstacimab for both hemophilia A and B to continue to grow our hematology franchise momentum. D&D gene therapy, we actually today got the equivalent of breakthrough designation, RMAT, based on the early clinical data available. So we are super excited about that. And relatively near term, the readout is coming. COVID flu combination vaccine, 18 to 59 readout, phase 3. And then 1 mid pipeline, ponsegromab cachexia, which I think pending readout has a really breakthrough mechanism.
That's fantastic. And anything from your side, Chris?
CGC on the wall.
To mention again the potential.
Yeah, this is Pfizer.
New 5-year data for Lorbrena, which will be presented oral at ASCO, and we could define the growth of Lorbrena over the next decade. There's 2 other upcoming.
9 minutes till you're close. Damn, it's still early.
And there's 2 other readouts that's important to us. The one is Breakwater, which is the first-line opportunity in BRAF positive colorectal cancer. Reminder that that's up to 12% of colorectal cancer, particularly poor prognosis.
Little pop off that bottom, but not doing much. Again, you're close. I forgot about that. 8 more minutes.
VERITAC-2 in second-line.
This is Pfizer.
Breast cancer, which
so they're up 4 right now, or 3.6.
Help to define the future path for vepdegestrant.
Thank you very much. And the last question, please.
Last question, please.
Thank you. Our last question will come from Steve Scala with TD Cowen. Your line is now open.
Thank you. I have 2 questions. In the Pfizer mRNA flu vaccine efficacy trial, was superior efficacy versus approved flu vaccine shown in the 65-plus cohort? This data was to have been presented last year, but I don't believe we've ever gotten an update.
Microsoft's been going all day.
Secondly, your interest
2 big green
in
candles.
more broadly.
You're right now near the lows again. You hit a new low.
Good. Bolt-ons don't look likely, but, and this is just one very simple data point, there are postings on Pfizer.com for obesity clinical lead positions suggesting something is moving forward. So what exactly is moving forward in obesity at Pfizer? Thank you.
Yeah, good question.
On the obesity, and Michael
also
comment, of course, together with the mRNA flu vaccine. But I said multiple times that, first of all, metabolic is an area that we have traditionally very big strength in terms of research. And this is an area that we have the right to win. So we are strong, and we keep investing in the whole area because we have the infrastructure. And obesity is a very big part of it, given the magnitude of the market. So we will be very active in the obesity with current mechanisms of actions and new mechanisms of actions. We said repeatedly that we have 3 agents right now in the clinic, and we have multiple that they are preclinical that we are progressing. But we don't have anything to say, per se, right now, because on Dyne we are waiting some of their data, and on the other ones, it's too early to speak about them. So that's why we are not
That's good.
Much of that. And we will, let's say, continue being very active in the obesity space one way or another. Now, what about the mRNA flu vaccine, and anything you want to add also to the obesity, Mike?
I think you said it so well on obesity. I'll focus on the mRNA vaccine and just say that...
That's a good question.
You know,
the guy literally said you have trials looking for obesity stuff, so what's up?
18 to 59 in the outcome event trial.
He said we have stuff too early to talk about, but that's it.
Flu mRNA platform. We actually further refined that product in order to expand activity against B serotypes, although the disease is dominated by A we saw an opportunity to do that. And that technology is now with the COVID flu combo vaccine running for 18 to 59 years old, and relatively soon we'll have a readout. We think that's really the near-term opportunity to bring both of the variant viruses under one simple administration approach. For the 65 plus, what you referred to was an early trial with the first generation. We have now moved focus to the second generation and are in preparation of subsequent clinical studies on that.
Thank you, Michael. Thank you, operator, and thank you, everyone, for your interest. That was a very good call. In summary, we are very pleased with the solid start in 2024. We are cautiously optimistic about the year ahead. And with our continued progress in executing our 5 priorities, we are confident that we will continue to deliver for our patients, shareholders, and our company. Thank you again for your interest in Pfizer, and we hope you have a wonderful week. Thank you.
And have a good day.
Thank you.
All right. Honestly, I like that. I've been telling you guys that's the real saving grace for Pfizer. If they could come out with a obesity drug, I didn't think they were gonna let everybody make all the money, but he was a little cagey on that answer, and he said, not time to talk about it yet, not the time. Department of Justice charges Bitcoin Jesus with 48 million tax fraud, seeks extradition. Who's Bitcoin Jesus? 48 million tax fraud? That's not the one dude, is it? Roger Ver, former CEO of Bitcoin.com. Oh, no way. Arrested in Spain on U.S. tax evasion charges. For hundreds of millions of dollars he raised in selling Bitcoin in 2017. Email I could reach you at tradingfraternity@gmail.com. I'm not sure you care, but Pfizer does awful animal testing. They torture dogs for COVID tests. Yeah, I mean, I do care. Like, I genuinely do care about good and evil. However, with investing, I mean, I've said it many times. If you are making hundreds of millions of billions of dollars and you are raising capital on the stock market, you got a host of unethical things going on. So unfortunately, I would argue every company on the stock market has a certain degree of unethical practices that are either overlooked, ignored, or justified as the business. But yeah, it's a slippery slope. BA 169. I think FOMC is going to be big. People are talking about it being the highest priced event. We're going to do a preview about 30 minutes ahead of the event. So where would that be? 9:30? Or no, 10:30. My time. Starbucks. We had a good Starbucks play yesterday. Latest one is SMCI. It's funny, those plays are up still. Even though the stock literally bounced $7, the plays went up. No Powell plays for now. I guess technically the SMCI, like I said, it's a damn lotto ticket. But I do think, if there's a big reaction on Powell, That'll be it. And then, but that's to the downside. And then if Powell winds up good, I mean, you could do your thing. I'm agnostic towards the day. It's a very weird event. So we're going to go over the preview, but we already talked about it. He's expected to be hawkish, and he's been so expected to be hawkish that in a weird way, hawkish may not hit, and everybody is sniffing for dovish now. It's a very weird flip-flop, but I'm pretty agnostic towards it. I do think he is going to change a little bit, but I don't think Powell is in the game of it's too early to even give us anything. I think, Janikowski, baby. You're going to punt. But you never know. And last time, and again, ever since Yellen and last time Powell shifted speeches and plans, I mean, the market made big shifts. So there's a lot that's holding them. Hot take, he says they're now nearing cuts. Oh, that'd be very bullish. Just because if that's the case, his tone is shifting. Because remember, a month ago, 3 weeks ago, you heard from Powell, and he finally acknowledged, he said, yeah, the inflation data recently does not give them confidence. That's what he said. So if a month from there, I've seen crazier out of him, but that he would have to really be like, yeah, nah, I'm confident now. Last month was a fluke. Mm-hmm. Why do rate cuts crash the market? Because it's a drug. You don't need it if nothing's wrong. You know what I'm saying? Like if I came up to you right now, I was like, yo, bro, I got some chemotherapy for you. Are you going to take it? I hope you would ask why. You're like, Josh, why would I take that? Why are you giving me this? Why would I need this sort of therapy? That's the general idea with a rate cut. Is like, why would you take a big action to stimulate or affect policy or not policy, but the flow of money and demand? Why would you do that if there's not something like a reason why? People don't take radiation and other bigger drugs without a real reason to. So that's why at first everyone's like, yeah, it's bullish. We're going to get something. It's going to change something. But then right when you do it, it's like, why? Like, why are we really feeding the market, the world, the economy? Why are we giving it that type of medicine right now unless it needs it? So that's the general idea of why a hike could end up being a bad thing, or a cut, excuse me. Oh, birthday, Powell Day, LT deposit day. CT job, baby. Happy birthday, my man. That's exciting. Yeah, that's a good day, man. Good day for a birthday. Amen. Amen. Average down on Airbnb after Powell, but remember, too, Airbnb, we're going to have, I think, till, what is it, Tuesday, the 8th? Oh, no, so, yeah. We could average Monday or Tuesday, ideally. So there's still some room to do it. But after Powell, we could talk about averaging any of the pre-earnings plays. And I'm down, too. Check on Troy. I did. I emailed him, but he couldn't read it. But I'm pumped. I could give him a call, but I don't know if he'd know it was me on the caller ID. So we got to I think he's good, though. I hope. I will keep praying for him. Rivian, T-Mobile, both on the high. Snap still going up, too. And then SPY right back at VWAP. Now the SMCIs went down for a $15 pop. Literally, it was green up until the last dollar. Trash average, baby. Welcome to the chat. Your wife just had $38,000 in student loans evaporate into thin air from her credit report.
via Department of Education. Let's go. Ah! Now, who you voting for this year, buddy? Yeah, don't forget that. Good. You want weed? How about shrooms? Nick, I got whatever else you fucking need right now. I know. Sounds good, though. I'm glad. I know, I don't think that's sustainable. But at least the Chad benefited. I could get behind that. I know. Fake news media. That's dope, though. Honestly, I know like people are gonna be like, nah, but like honestly, I'm very happy for you, man. I'm glad. At least somebody I know got a benefit. You know what I'm saying? So good work, man. Good work. And if you had to pay for school, I'm sorry too. But you know, I want to rejoice where I could rejoice. You know, we can have sorrow where there's sorrow too. You know. You too good. Hey man, I vibe. I just vibe, you know? I get it. Some people like it, some people don't, you know? So I'm gonna rejoice with those who rejoice, and I feel with those who have the pain as well. A different time and place for both. But in that case, you know, like I said, at least somebody I know got something. I'm not anything else. Nobody I know has gotten anything, you know, and I know a lot of people. So that's why I'm just like, you know what? At least somebody, at least 6 people removed from me has gotten something. Because that's it. I don't know. I ain't get a drone. I ain't, you know what I'm saying? I ain't get no Patriot missiles, nothing. So, shit. I mean, at least someone got a debt paid off. Why not? Weird thing, she was making her payments. Did she work with the government? Like, did she end up getting a government job, or did she end up, or was she at one of those like special schools? Not like one of the ones that I know there's like 15 or 20 universities that had special qualifications. We're waiting for Jerome Powell now. That's it. And it's going to be in about 2.5 hours. So he's still got a lot of time. I'm stressing you need to pass your future traded funding account. I'm pretty close. Please help. Telling you the best advice I could give you is back out now, ask for a refund, and don't waste your money on a prop trading scam. Other than that, just good luck. But the best advice is back out now and bootstrap yourself, and you'll be good. Otherwise, the devil always shows up as everything you want. I never met the devil with no leverage. You know what I'm saying? The devil ain't never approached me with no money. He always had money. He always had leverage. He had more than what I had. He offered me more, you know what I'm saying? Everything I wanted. Oh, I'm just saying, he never shows up empty-handed. So if he holding leverage, you just gotta, that's it. Josh on the Kenju, I don't know, man. I was telling y'all, though, the other day, man, and even then, like, I love you. For real, a lot of y'all, even if you don't love me, man, I'm going to try my best to be a homie. And I know I'm just a human, but I was telling y'all, man, I'm obnoxious positivity. And at the same time, it's like I notice the moment I start saying that and acting behind it, bro, it wake up some demons. It piss off some people. But I'm just, dude, like straight up, man, you got to fight for it. And that's why I don't know. I know some of y'all, if it's different and you're like, oh, it's aggressive or this, it's like, nah, man, it's just like straight up. If to protect you from blowing out and getting clapped in certain things, it's one thing to make a bad trade. It's another thing to go down another path of people just skimming you. But it's just like, dude, you got to fight for it, like low key.
That's it, to like protect yourself and all of it. And even if I want to make sure people do good and like if I want to be peaceful, bro, I say I want peace. I say I want good, bro. People start coming at you, man. So it's like you do have to fight a little bit for it. So I'll do it with love, man. And honestly, though, I could only do so much. It's in his hands. You know what I'm saying? But be wise. But that's why, too. So I hope it's not too Kendrick, man. I'm not trying to diss anybody. It's like, for real. You know, I've been here for years. I don't know what I really benefit off of what you choose to do or not. I mean, you could always threaten to unsubscribe and leave and do whatever, you know what I'm saying? But I don't necessarily follow the general path of telling people what they want to hear. But I do hope it could give you some help. And at the same time, like, these are my opinions, but quite frankly, I've set it up to not benefit or lose off of what you do. So, you know, take that as you please. And that's it. Mm-mm. Oh, 8:40? We already forgot. Let's go. Ladies and gentlemen, boys and girls, I'm going to try this. I don't know. I messed up my shoulder here, so I don't know if I need to just stretch it out or not. We'll see. Pinterest. Yo, that one's actually breaking out. But Chattadonia, we're live Monday through Friday, baby. 30 minutes before open. It's Powell today. We got a lot going on. We've been here for 2.5 hours. We got 4.5 hours left to go. Sitting is the new smoking. I need you to get beside your desk and do 10 push-ups. Can't do 10, you do 5. Can't do 5, you do 4. Can't do 4, you do 2. Can't do 2, you do 1. Can't do 1, get on your knees. Do a push-up, plank the worm, anything, but get the body moving. Then up top, it's your recommendations. Stare at object 10, 20, 30 feet away. Blink a few times. Go blink, 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 blink. Blink, 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 blink. Tesla retreats from gigacasting manufacturing process. What's that mean? And then Kathy Woods. Yo, you ready this? Stop it. Chad, I'm walking away. Kathy. Oh, yo. Bro, Kathy Woods. Kathy Wood raises Bitcoin price target prediction by 2.3 million. That's do a push-up, man. I need to drop the shoulders. Kathy, oh my goodness. Kathy. Kathy, what are you doing? Said 2.3 million on Bitcoin. Is that year end? No, that's just the like end of the eternity target, I guess. I don't know. That's a headline. She just said 2. Where did you derive? Like, why not 2.2? That's the real question. Why not 2.4? Oh, dude, my shoulder. The 3-5-year plan. She's back. Calm down. I'm just having fun, bro. I'm sorry. I really am. It's Powell Day. You know what I'm saying? Y'all probably weren't worried or asking questions. Maybe I don't want to add pressure to make you excited, you know? But it's Powell Day, bro. And then all of a sudden, everybody's as excited for this as I am, it kind of seems like. Because, again, we're pricing in 0.95, the most that we have priced in for a Fed day since May of 2023. Oh. Oh, man. Snap on the high. Starbucks puts hit 2,000%. So we got 2,000 percenters this week, Starbucks and Tesla. So that's nice. We'll take it. Again, even the IBM and 3M. I haven't sold the 3M yet. But so far, not too bad, honestly. Oh, hi. Snap. Yeah, they went up a decent amount. The Andre 3000 flute album, no. Kathy's price target on Bitcoin before this was 1.5 million. Wow. teach them about currency debasement and why that will make asset prices skyrocket over the long term. I mean, honestly, I made a video about that in 2020. So I low-key, if you listen to that video and were subscribed, it probably changed your life. I made a video called How to Get Rich Off Inflation. And I discussed what was happening in the moment it happened. When they dumped all that money, and we talked about real estate, we talked about stocks and all of it. And then even this morning, I was discussing it because a lot of people have brought up some of those things and switched to digital currencies and potentially the biggest changes in currency since Bretton Woods. So I was literally just talking assets. Assets are the answer, always. I believe that whether that's true or not. That's the beauty. That's the beauty of assets. Whether a currency is debased or not, you're not going to regret owning a high-quality asset. Real estate, higher quality stocks. I mean, it's better than paper all the time. So I'm a big fan of assets, and we had this discussion today, actually. But, yeah. Amen. All right. Let me hit this wall stretch.
Auxilia selling into biotech FP&A, a great way to get beta, access to the beta of that market without actually investing in a molecule or a therapeutic. So we really try to think kind of big tops down and look for great companies that are going after big problems in those spaces.
It's relatively competitive still in the earlier stages of VC. What do you do that makes you stand out, Roseanne? How do you manage to be supporting some of these founders, which increasingly are talking to us about burnout, about worries, about mental health issues?
I know it is, Caroline, you're completely right. Like, it is still very competitive there, even though the market feels softer than it did a couple of years ago. I mean, as we think about Renegade and like what we can offer, I always think about like, you know, you can't beat somebody else at their own game. So how do you play a game that they can't play, right? Like, we like to focus ourselves on being like a very bespoke boutique firm where founders get to work directly with the founders themselves, right? Like, if you are a founder-led business and you're sitting on your board, you don't want an employee sitting next to you. You want another founder sitting next to you. We have really great alignment that way, right? Like, we don't have to worry about job security or, you know, around partnership dynamics because we own the firm as well. We only make 20 investments per fund. That means, you know, only 6 or 7 deals per year. And so we're really spending a lot of time with each and every company and, you know, helping them where they need help and getting out of the way where they don't. We also have a great operating practice where we focus on, you know, people and team. It's led by our incredible operating partner, a woman named Susan Albin. And she really helps our companies think about team org design, structure, compensation, building the hiring and firing machine. And often those are the things that are keeping early stage CEOs up at night because we kind of assume that they know how to build and run a team when often this is their first time.
Yeah, we assume that they can be leaders on the get-go. I'm interested, though, Roseanne, as to how you're helping those leaders and others within those startups to be able to pivot if they aren't an AI-first business right now.
Yeah, I mean, I think there's a blessing and a curse today to being an AI-first business. We've seen a lot of companies that are just, frankly, a thin wrapper on top of OpenAI, and those businesses are not defensible. You know, I think really, first and foremost, like, you have to be thinking about what is actually driving value for your customer, what's actually driving ROI, what they're actually going to pay for after, like, you know, the AI innovation budgets dry up. And so, frankly, you know, every company is going to be an AI company. It's just like every company today is a cloud company. We don't invest in companies because they're cloud companies. Every company is a cloud company. AI is going to be the same way, right? So what are those products and services that AI can actually supercharge, that can do, you know, different things than just a great SaaS business that's putting AI into their product?
You heard the story we reported at the top of the segment. Some of your industry colleagues, Peter Thiel, Vinod Khosla, going to DC. Do you think it's the job of VCs to do that?
You know, I think it's important that that Silicon Valley is well represented on the Hill because, frankly, what happens here has a massive impact in the U.S. and in the world, like, you know, the world in total. And, you know, I do think there is a role for it. You know, we have to remember, like, incentives drive behavior. So you have to think about what is everyone's incentive as, you know, regardless of what they're doing. But I think it's important that we're thinking about AI, you know, at the cutting edge at the federal level.
Renegade Partners co-founder, managing director, Roseanne Winsett. Great to have you on the program. Thank you. Okay, stick with us, because coming up on Bloomberg Technology, GM rolls out its alternative to Apple CarPlay, but not without hitting a few speed bumps. Who wrote that? That's terrible. Details next. This is Bloomberg Technology.
Yeah, who wrote that?
That's terrible. Oh, he's here. Got my eye surgery done. I could see. Look at that. I was going to say, they're like, did you hit up Troy? I was like, I emailed him, but he couldn't read it. And if I called him, he wouldn't know it was me. I thought you wouldn't be able to see. What's good, baby? He's here. Do you notice like a difference yet? Or is it like, do you have to wait? Is it like, lagged effects? Shout out to Powell. Let me do my arm circles and we good. They're dilated, so I can't see up close yet. Did your eyes smell like bacon being cooked? Oh, man. That'd trip out. If my eyes smell like... No, man. When you get eye surgery, it does. That's crazy. IRM short? Why? IRM's done good. The news app in the bottom right. So if you go to youtube.com/the trading fraternity, not the latest video, but the day before that, we explain all of it. That's crazy. So are your eyes going to be like super when you're done? Like, are you going to be able to see from like a mile away? The expected dividend payout is $762, but they only have $220 in cash and $73 million in free cash flow as the last quarter. After 3 quarters of negative cash flow. Interesting. They've done very well, though. But I remember when we first bought IRM, they were struggling. It wasn't like they were, like, killing it. That's why they were yielding 12%. Oh, no, I'll have to look more into that. And then SPY's still coming down. So you had that little rally. I mean, that was around Euro close, no? So, yeah, we're right below Euro close again. You sold off and then bounced half of it, and then Euro close went up, gave it all back up, and now we're here. Oracle. Yeah, premium. And somebody was asking, I don't know, somebody was like, why did their Amazon? They're like, Amazon went up, but my contracts are down 80%. So this is why we didn't play it. And we were talking about it. When we say cuck, when we say it's not going to move and you got to be careful, pretty much this is why we do our previews. So when we do the previews every day for earnings, we're looking at how much the option chain is pricing in. So if yesterday, let me see if I could pull up this screenshot. No, you could call it decay. You could attach a Greek to it and everything. But like, I encourage you to just look at it very straightforward and practical, because it should make sense whether or not you have a background in finance or not. You know what I'm saying? Because it's just like, simply put, you are pricing in about 7%. So the stock was like, for earnings, people were thinking that it was going to move 7%. That was accounted for in almost any scenario. So it's very simple. If it's pricing in 7%, and that's like the expected move, and that's what people are willing to pay, if it moves less than that, that play will not go up. Why? Because it was already priced ahead of that. So you just kind of bought it at a price insinuating that it would move minimum 7%. So if it doesn't move 7% minimum, you're probably not going to make money, especially if there's not that much time. So that's why we do the previews. That's why we look at this, because then if the company doesn't have a likelihood of moving or not, like we said this yesterday, I didn't play it because I said the only way Amazon, those options are going to really be profitable is if they have a surprise, So like if they surprise on cloud, if it's a really big beat or miss, that's the only way this thing moves more than 7%. Otherwise,
that's there. So that's why we sold out all of our plays before earnings. We played it in the lead up. We got the anticipation, but then we just got out right before. If it was pricing in cheaper, we would have probably played it. It's kind of rigged. Kind of, but then again, that was right in front of you. You know what I'm saying? So nobody forced you to buy an option that was pricing in a 7% move. So you were either unaware or you made the mistake. So it's like if you were unaware, then there you go. Ignorance is the answer. But if you were aware and you knew what it was, you decided to do that. And that's like the temptation that we face with every one of these plays, because you may have an idea. So if you really think that stock is going to move, then being aware of what's priced in, you could still make the play. But the first step, just make sure you're not ignorant. And I don't mean that in a negative way, just like simply a lot of people don't know this. This is why I teach it. Because if you know what it's saying and how to read that option chain and what it's pricing in, then there you go. It's telling you from there, now you can make a more informed decision. Everybody was ignorant to it at some point. Yeah, 100%. Oh, what did I want to see? I wanted to see something. Chat reminded me. Chat bullying you now? No. No one is bullying you. I'm banning you now. That's it. I give you that type of answer. Genuine, sincere. I don't think anybody was. Some people had a little more aggressive answers. If that's what you took out of it, this may not be the place for you. But check the tutorial out. I really do hope it helps. SMH. AMD keeps selling. SMCI, those plays. Honestly, it's down $5, $10. I'm kind of surprised. So we'll see. VRT on the low. I don't even know what that thing is, man. We've Veritiv since earnings. That thing, I swear, every other day. It's moving 5 to 9. TSM dropping and NVIDIA at Walmart too. I'm seeing a lot of chip makers on the low right now. Yeah, they're all getting kind of murdered. AMD down 10. So that was another one of those plays like yesterday. So whether the person who asked it didn't care or not, but I think it's a great lesson because AMD, that was pricing in a high amount, and you'll go see those options. They moved up, but just a little bit because now it's starting to move outside of what those options were pricing in. Any thoughts on sound? No, I got out of it ever since getting out. I think it's just going to be AI back and forth until it either like has a real commercial success or is a scam, if that makes any sense. At the money call, at the money put. You don't average. Well, yeah, you just add them up. You don't divide. You don't average. And then you just divide it by the price of the stock. And that's it. So the tutorial is in the description. It's called How to Price Options. We're going to do some today, but you just add up the call and the put at the money and then divide that by the price of the stock, and that'll tell you the percentage. The discussion on treasuries, we discussed it in the morning, and quite frankly, it was all clear. Why? Because Yellen kept her promise by not adding to the duration. So even though they raised borrowing estimates a couple of days ago, they front-loaded it and they threw it on the short end rather than changing 10-year, 15, 20-year, 7, 5-year durations. So she committed to that and announced that they're going to be buying back some bonds too, which is kind of QE. But
yeah, it was generally decent and good. Most of this stuff is over my head. Give me a couple months, bro. You'll be a Chad in no time. Honestly, the best thing you could do is get a long-term until, and I said buying and holding for the rest of your life until, little by little. Like, that's, oh my goodness. SPY going lower, though. You're about to hit a new low. I kind of flushed there, man. So pre-Euro, a lot of back and forth. Post-Euro, a new, literally right near the high, then sell off. But I thought you hit a new low. That wick looked like it, but it didn't show up on the. I think SPY hit a new low, but SPX didn't. Weird. So, like, yeah, literally, there it is. SPX now hitting it. Rahul is dubious today. Dubious. I like that word. Dubious. Selling. What time is it? 9 o'clock. Got a little bit of time. Still 2 hours. 2 hours until the statement. Philip Morris on the high. SPY going lower, man. And those chips, they are dumping. Altria getting a bit of a pop here. So that's good. Did NVIDIA? Well, NVIDIA hasn't reported. Well, they reported a little later, but I guess this was it right here? It was 221 or one of these. But I still think they got a little room. We're close to it. Red before Powell makes you think you'll go green later. Well, that's the thing. Sometimes when it does this, remember, like 30 minutes before Powell, it may just rocket right back up to break even. So this could just be cushion. Again, pre-Powell movements they're sporadic. We had job openings. March. Nvidia's down 50. Yeah, dude, all the chips, it's like subtly bad today, but it's decent, like decently big. AMD's down 10, SMCI down like 16, and then all the other chip makers. I don't think there's one that's good. Yeah, Snap is doing very well. Honestly, I think it's kind of nuts, but it makes sense even with Pinterest earnings doing good, but I think it's wild that we're back to like near the beginning of the year levels, but dude, the gap fill is at like 1760. If they recover their past earnings, I mean, there's still some room in this. Next chip earnings is ARM May 8th and then NVIDIA May 22nd. Nice. I might keep Snap up here. That keeps going. Where's Pinterest? I was surprised that one actually broke out. I should have went for that one. You could have got an extra 6 or 7. But they were expensive in the morning. And then MO was popping. Yeah, China stocks did good. We had a little discussion on China. They're looking decent. They announced a bunch of stuff yesterday. So, I mean, if that could persist, it'll be good. Oil's getting clapped. You had oil numbers. That wasn't good. Pfizer or Starbucks? Oh, man. I don't know. Because they're both very different. Both industry and, like, Pfizer it's like at the same price I last bought it at. And then it's finally had a good earnings, or at least a good start to the year here. But at the end of the day, it's like Starbucks is another great company, pays a dividend, but I also think I could get Starbucks lower. So if anything, I'm just waiting. I think nothing, and kind of let these two move. If Pfizer could get cheaper, or if Starbucks gets cheaper, then we could kind of maneuver, or even MO. Ideally, I would like MO, but it would have to drop a lot. I don't know. Apple puts, they almost came down this morning. Oh, shit. Apple bounced. Let me check. But I was talking about a double dip. Oh, Disney. I like Disney, but I don't know. I'm kind of scared of Disney. They lost the salmon. Oh, man. You know what I'm saying? The fish. They don't have the salmon chasing them anymore. You guys remember that story? Yeah, the 205, yeah, you could have double dipped on them this morning. They popped after they went down and went up. You lost me with this one. I need to get, there's a PHILO I gave you. It's about the story of like when they like transport like certain fish. They like to transport fish freshly. They put other predators of the fish. They put it in the fish that's being transported. Why? Because if you're going to move a fish, hours across country or across the world to ship it, if it doesn't have another predator in the tank with it to keep it moving, the fish won't be fresh. And it's just going to sit there. But when you put a predator in there with it, it chases it around. And by the time it arrives, it's still a fresh fish. That's why sometimes you need the pressure to keep you fresh, baby. But that's what I'm saying with Disney. If they don't have the what's his name, Nelson Peltz and all of that other stuff, it's like they don't have that pressure anymore. You know what I'm saying? They don't have something chasing them. Yeah, I think it's for tuna. I think that's how you make sure if you don't ship tuna like that, it comes in dog poop. No good. Mm-hmm. And that was a PHILO a couple years ago. I gave a whole PHILO on that, man. You should go find it. I think it's on the PHILO channel because it's big. Microsoft, and they were up earlier. They're still up one, but gave up the high, and SPY still a little lower here. Philip Morris and Altria. Where is it? They were up at 45 almost. Damn, MO. Can't be tuna. Maybe I'm misremembering it, but it's on the PHILO channel. I'll look into it. PayPal, yeah, back to 10. I cannot believe that move, dude. Yeah, we got our MO dividend, we got our MPW dividend, AT&T, and JP Morgan.
I believe in the last like week and a half, those all should have paid out. I do. Isn't like a bluefin tuna? Isn't it like faster than a Ferrari? So like I think a bluefin tuna can accelerate faster than a Ferrari. It's pretty cool. A PHILO channel, I have not gotten updated in a long time. So, but it is in the description of this video. There's a lot of things in the description of this video you can find. IRM's up. Dude, I don't see. I'm going to look into that. What homie said was pretty interesting. I'm surprised. Like, usually, I mean, because here's the thing. Usually the market sniffs this shit out easily. So for a person asking me about IRM, like I'm telling you, man, the first sign. So I don't even see like analysts like downgrading this thing, which is weird. But IRM is on the high right now. Plays from the comments. Yeah, the random play. Yeah. It's up. It's down from the peak, and then this year it's done pretty well. But yeah, we still got the random account. We still got the long terms too. Those are killing it. But yeah. CVS, not really, man. We talked about it today. I mean, I was explaining some things with it, but it's not really on my list of like stocks I want to add to the long term, especially since we have a failing Walgreens. I got AT&T shares 4 years ago, dude. It was like one of my first stocks, and then I just stopped adding to it after 2021, I think. I think ever since they, like right before their split, they're kind of dog shit. I mean, yeah, I'm not a big fan of them. I said I'm not probably never going to buy them again. Just let it sit there. I think in like 15 years, I'll get all my money back through the dividend. So that's fine. We'll see. Yeah, IRM was a great pickup. So if you bought IRM when I bought IRM, you're still getting 12% of your money back. So if you locked in at that price and never added, I mean, if you averaged up, it changes. But if you just locked in, dude, those stocks are paying 12%. It's nuts when you really think about it. PXD on the low. This thing's kind of flushing. Pioneer. Yeah, Pioneer 1.7% down. You got big on IRM? Hell yeah, man. It's a good one. I mean, it's better. You got it at the right price with the right yield and that equity gain. Like, shit. But I haven't heard anything bad about it. That's why it's interesting. Someone brought that up. Google on the high. And then SPY's back up, man. Welcome to Powell. Powell day for sure. Yeah, it is classic. Dude, you're going down 15, down 10, like 7 points, up 7, down 7. Like, you're just going to do that. And then, like, right before, maybe we get a little lower. But we still got like an hour and 45 minutes left. The pre-Powell day, XLF on the high, and then Apple's going. You could have gotten one of those little double dips today. Oh, wait. No, I looked at the wrong. It was a 205. Actually, no. So Apple, those contracts, they went down in the morning, and then even though Apple went up, the out of the monies aren't getting a pre-earnings lift. You might need Powell. Favorite philosopher? A lot of them. I think Rene Descartes, I respect him highly. I like what he did. You become what you think in the mind. I think, therefore I am. Those are all part of it. But yeah. And then there's another guy called Kanye West. No, I'm just kidding. Oh, dude, honestly, yo, bro. F Kanye, man. What the fuck? I don't know why I still said the F word after, but still. I saw his last interview, man. I didn't watch all of it, but I was like, man, this
Lord, I'm going to keep praying. I'm going to just keep praying, man. I'm going to keep praying, man. So I'm so glad I stopped defending him like a year and a half ago. You know, where like eventually where I was just like, you know what? I don't know, man. Just, that's good. So I'm glad. What did he do this time? I think he claimed to be God. So he said he's God. Like he's actually God. He wants to make an adult entertainment website. He said all live streamers are industry plants. So Kai Cenat's an industry plant. I think I'm an industry plant by association, but I don't even think like, I don't know. I'm a weird class of streamer in my own little group for the people. You know what I'm saying? God bless America. But yeah. No, you got Kanye just going off, man. He said Drake has a sugar daddy who is the CEO of Universal. Josh is an industry plant. Man, I don't know, man. I don't know. They show you love when you're an industry plant, but for now it's just Jesus, baby. You know what I'm saying? Finger to the sky. Industry plant that, bro. Them, you know what I'm saying? You know what I'm saying? Plant that, son. So we on. BFH, what's that? Bread Financial. Looked a little bigger, 1.3. Purple on the high. The high ticker is outperforming right now, but recently low ticker's picking up, and then you just had 3 red candles. Back to VWAP. You know, 10 minutes up, 15 minutes up, 15 minutes down. That might be the pattern. Maybe we'll go 30 minutes at a time until Powell approaches. Purple is popping, up 2.6. Microsoft BioMarin on the low. Yeah, purple's popping 3%. Check headlines on that. Super liquid, but see, I like purple. I know Troy stands by purple. Said it's the best bed he's ever slept on. The volume, I do not know. I've not checked today. 20 million. So it's low, but it's going to rocket up after Powell. But we're by hour 3, 20 million. Definitely below average right now. I have not been to Kava. No. I know what it is. I told you, bro. I live right by one this whole time. It was hilarious. I just thought it was ghetto because I didn't like their logo. I've driven by it. I've seen it every day this whole time, bro. But nah, I don't know. I've never been. But now that I know it's that spot that I've overlooked my whole life, it's different for me now. I thought it was a smoke shop, or I thought it was like a weird like yoga, like a yoga Pilates thing or something, dude. Why do you think everything will rocket up? I mean the volume, so don't misinterpret that. I mean the volume will rocket up, not the market. So just usually when Powell comes on, a lot of people might be waiting to trade, and then the algos, they turn on when Powell comes on. So I was not insinuating a direction of the market. I did not have Pfizer today, no. FTC to rule on 60 billion Exxon Pine. Oh, PXD was just dropping earlier. And, bro, Purple's still going. Humana, all day they've been running. PXD's still dropping. Is XOM moving? Oh, they're going off it too? But then again, a lot of oil is on the low. And I think like Conoco and a couple of others, they kind of all have the same setup as PXD and XOM. So watch out for that. But PXD, I remember seeing it drop earlier.
What time is Powell? You want to trade, but you need to sit on your hands. LOL. Well, how about this, Daniel? If you could tell me what time Jerome Powell is today, would you tell me if I gave you $100? I think you hear it? 30 seconds. Could you tell me what time Powell would be if I gave you $100 cash? No? You do it for 10? Oh, wow. Shit. Maybe I overcharged. Am I overpaying? Oh, 2? Huh. So, you should know my punchline by now. If I'll give you $100 to do it, you can find it. It's in the title. You see what I'm saying? But then you're like, if it's based on your trades, and you're not even willing to go look it up, my friend, you are just talking to talk about wanting to trade. I love you, but like I've been doing this to everybody today. That's it. I'm calling it out from now on. I'm no longer letting it slide. Everything. It's just like, come on, you guys, put in the effort. You're either showing me that you want to just talk about stuff to talk, or you have zero effort at all. It has to be one or the other. There's no in between. That's it. Because I told you, if I'll pay you for it, y'all would. This shit's it's the easiest money you'd ever make in your life. So yallah, baby, yallah. I respect all of you. I love you. Amen. Amen. Oh, did the sun come up? Sun came up. It's good. It's up. It's feeling good. That's all. Public knowledge. Nah, man. I just discipline, baby. Discipline. And that's it. And I'm just trying to encourage, man. I want you all to like work. You know what I'm saying? I want you to be more comfortable in what you're doing, and you're going to do that by like, take off the training wheels a little bit. But if you are really motivated, otherwise, and like I tell you, for all of you socially, like, dude, people are just talking, you know what I'm saying, man? And that's what I was saying, like, dude, it's very disingenuous and insincere. So if that's the route y'all want to take, be my guest, but, other people would probably be more tolerant of it. So it's something, though. Work hard, baby. Let the fire mold you. Instructions unclear. Paying you. I tell you, it's 2:30. Or not. Let's go. Amen. That's a good one. Hey, Harvey's plenty. The workers. Tell them, baby. Oh, that got me hype. I almost just threw my computer desk, bro. That was crazy. Mm-hmm. It's good, man. We got 30 minutes till the top of the hour. Hour 30 till Powell. So we still got a lot of time. Again, very, very big day, and they're pricing in 0.9. So we'll find out. Otherwise, today, the data, that ISM data was weird, man. You know that? Like, low-key, the fact we're not doing anything, you're blessed. Remember, ISM data was really weird in the morning. That came in hot. Your jolts was good, though, so that was the only thing to balance it out. But we had a little bit to react to already. Today's the first Powell that we were lower than the last Powell since November. Yeah, and last time Powell spoke, we are actually still trading below that one as well, too. So that's kind of the crazy part. So, yeah, and then, again, I told you guys it was the first red month of the year. Right? But it's actually, that was the first red month since October. Isn't that crazy? October, November, December, January, February, March,
April. That's 7 months. 6-7 months. That's crazy. I think you were still pricing in 3 rate cuts, I think, around then. And then the last time from the beginning of the year, you were pricing in 7 rate cuts. Healthy. Very healthy, yeah. It's good. Good. Don't worry. Don't worry. Shorting coffee on White Girl Wednesday. Is that how to say the Starbucks play? My man. It's a good one, bro. It's crazy. Even my Dogecoin homie hit it. I didn't even know that. He just texted me. He's like, thank you for the Starbucks. I'm like, what the fuck? I'm like, I didn't even know you got it. He was like, I got 5 of them. I'm like, damn, hell yeah. I'm like, don't go put it in Doge now. That's my only fear. It's just going straight to Doge. But question, are there any long-term stocks I watch for algo-style trading? I don't really know what you mean by that. Can you elaborate? What's the saying? You know the saying. The saying is you're banned. I'm not tolerating any of this. Welcome to old Josh, you guys. I'm back. Some of you know exactly what I'm talking about. Some of you don't, and you are going to feel like you have been abandoned. But I love you. No, it's not even Yash, bro. I think Yash has more bad. I'm closing every single door, and I hope you do the same. If it's a door to a relationship that does not enrich you, make you better, anything, shut it. That's it. I see people trying to open doors left and right. I shut them all. That's it, baby. Obnoxious positivity. I hope they feel me, baby. Welcome to the Philippines. Why Josh banning people? I'm not trying to, dude. For real. Just simple. We have rules in here. If it's off topic, if it's there, you make statements. If I could deem through your Chad facts, you know exactly what you're doing. If it's not, distracts people, send people it's just not there. It's gone. It's not positive. It's negative. It's gone. It's not there, and I'm not going to I'm not going to question it either, too. It's a very good principle to live by. If it's not positive, don't have it in here. And that's it. And I apologize, too, for whatever stuff I have tolerated beyond that, because it's not good. You really can't say I love you after you ban someone? Why not? I mean it. You don't, do you think I do this for free and I spend all this time and I want to encounter new people and then never, help them or talk to them? No. I wish, but I can't tolerate it's how people act on some things. I was saying I'm not going to open doors to negativity to other people and myself. So I do love you, and I really hope that you see my effort and what I'm doing, and it is tough love, and I do hope you return at a level of mutual respect for everybody in here and yourself and me. And I would love to have you a part of it. Love to answer questions. Love to get you a long term. I'll give you the same effort I give everybody else, But at the same time, I don't do it for funniness. I don't do it to hurt your feelings. I do it for a bigger, broader goal. And I think I forgot about it in the past. So sorry if it's new to you, but some of you know exactly what I'm talking about. IWM. Oh, damn. It is back to green. I'll take it, bro. So Dow and Russell only went back to green. Kind of impressive. And remember, Russell was the worst on the month. Russell got murdered last month after all of that. Interesting. So Dow and Russell are green. SPY and NASDAQ barely red. And then you're just hugging barely above your last Thursday level. which I want to say was around even some of the Powell stuff. Who got Josh? I'm not upset. That's the crazy part. Other times, I'm sure I might have said that, or you might have assumed it, but nah, man, it's just, I think my conscience has been awakened and my eyes have been opened. That's what it is. That's all. I don't think it's anything different. Obnoxious positivity, baby. I hope they feel me. I hope they feel me. PXD. Put your mother and hands up and follow me. Live cattle futures flushing. Like, should I look? I have not looked at live cattle futures this whole entire year. Is it worth it, Arturo? I hope so. When the dust settles, would I consider Starbucks? Yeah, I would. But that's like it's, I don't know how to explain it, but how long that dust settles, that will take a while. You want me to see your last message? I tried. You didn't say anything today, but your Chad fax is horrible. So I thank you for bringing that to my attention. But God bless you, bro. Hope to see you soon. Shout out long term. The dust will never settle. No, it will. It will, but it could take a long time. That's kind of the bad idea with it. Is like Starbucks, you guys realize it's been a year and a half now of a recovery, and then it's literally Starbucks is Derrick Rose getting injured again. So, like, don't forget, this thing hit an all-time high, is growing, doing its thing, and then, like, beginning of 2022 with, like, rate cuts and everything, this thing drops, 50, 60% from the high, and then you go down to $70. You go down to, like, COVID levels once again. And then we had this little bounce. Again, 2023 even, people thought they bounced with everything else, and then they're like, oh, it's slow. And they're like, no, we're recovering. And like, yeah, we're going to recover again. It's getting back up. And then now to hit that bad again, it just, it's another injury, essentially. So, but when the dust settles, and I don't think I could put a time frame on that, yes. Yes. Oh, Alexander, that's sad, bro. I told you what I was looking for, Alexander, but I guess it's not going to hit, man. Kev Dog. Now that's what I'm talking about. Amen. Or no. Amen. Why have I been so emotional? I think I'm less emotional. That's the thing. That's the funny part. I'm doing this all without emotions. You don't get it. Goodbye. I think when I care more about the world and like conforming to other people, you see what I'm saying? I'm more emotional. This is not emotional, sir. But have a good day. And I hope to see you soon. And I hope you got a long term. And get ready for Powell. Now, you don't think so? I think it is. I think it's more emotional trying to live up to the world's standards at weird times, than like, kind of having a little bit of freedom. So, I don't know. You tell me. I heard I don't know. Maybe it was Kendrick. Oh, no, man. Maybe it was. I don't know nothing about that. You said, I play Halo. Yeah, you do know him. Amen, bro. Amen. You're long on this, Josh, in my long term. I appreciate it.
Will TLT still be the play? With emergency cuts, yes. If it's random, out of nowhere, and it's like surprising, yeah. If it's an emergency cut. A scheduled cut that's small, it may not really move TLT that much. That's a discussion that we've had earlier. You like it? Keep chatting line. Appreciate the scrutiny. Man, God bless you, Daniel. See, I appreciate you, man. Thank you. That's what I'm talking about. You know what I'm saying, man? Like, that's the response. You know, I just, you know, I already gave you something a little bit ago, and he's like, yeah, what's up? Other guy's like, meh, 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 meh. My man, let's get it. We've only had emergency cuts. I mean, it's happened over the years. I could find it for you. I have the entire list, but I mean, most recently 2020, and then I want to say 2008 possibly. But other than that, 2020 was it. Pfizer, if it goes up, we missed the option play. I was talking about it in the morning, but hey, maybe tomorrow if it moves slower, but for now, I'm just happy for the long term on it. I'll take it. Backseat freestyle is hard on my 24. Rah, ding, 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 rah, ding, 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 rah, ding. Powell had a dream. Powell go cut rates. No? All my life I wanted a rate cut. Respect my pal or die from financial conditions. I pray rate cuts get big as the avatar so I can buy the dip for 20 for 4. You know what I'm saying? Mm-hmm. I feel, you know, I love that song, man. Don't get me started. Mm-hmm. That's it. The rate cut version too. Woo. Hey, man. It's Powell. I'm sorry, you guys. I'm way too excited for Powell. That's the only emotion I have for it today. Like Powell, I'm like, God is good, man. You know, I see. I get my Powell hype. That's the one thing. I am hyped for real. Yeah, no doubt, man. So I could buy the dip for 72 hours. That'd be good. That's a good song. I'm telling you, I love that song. Will Walgreens ever recover? I mean, potentially, but. And that's what I was saying, even with like CVS, man, just these companies, they make good money, just the margin and then that debt. Don't forget about that. I mean, this whole time, like today, I'm excited about Powell and we keep talking about rates, but you know, some of these like older, bigger companies that have taken out a ton of debt, you know, it's wild to think how long it's been. So we'll see. We will see. Last unscheduled cuts, 08, 07, and then 2001. Yeah, September 11. It just doesn't really happen. And then that's why, too, like, the big thing with, we'll have this talk again, and don't worry, I won't tell you to watch the watch list, but I will make a video on it, and I do hope you guys get it, but your TLT play, if they don't cut to zero, it's going to play out different than you think. So just don't forget that. TLT, if the rates don't go to zero, it's not going back to that 2020 high. And that's where I think 20% of the TLT like bandwagoners, that's where they're going to get eaten up on, is that people are going to go really far out the money on it and think that it's going to do it. But if we have a slow, defined rate cut cycle, TLT will move up, but it's not going to move up as fast and as much as you think. And that is something I think everybody has to get. That's why an emergency cut, if out of nowhere, out of fear, randomly, and then they cut, like usually when they cut emergency cut, they're lowering it by like 30, you know, like either they're going to take it half of what the rate is or all the way down to zero.
We won't get we still could get an emergency cut, but like, let's be real. That's only going to happen in the event of an economic like failure, collapse, like an external event. Honestly, the only thing that could have done it recently would have been your SVB, and then instead they just made a liquidity facility. Here's to 4 years, baby. Amen, man. 4 years, toast to that. Oh, no. Happy holiday. Amen. Am I bearish on TLT overall? No, I'm starting to think there's going to be a floor to it to a degree, or by the time it starts to blow out again, like really bad, I do think something might happen. But then again, I think that thinking is dangerous, to be honest with you. So although I do think there's a limit, unfortunately, Bank of Japan down to Powell is showing us that they're kind of winging it. And I don't think, and I think time frames are flexible, and that could be the only problem. But generally, as we get closer, there will be a time, the more we get closer to those rate cuts, you should start looking at bonds. But if something threatens that, that's it. And don't forget, please don't forget none of this. This is a big point. We even said this the other day, and I think we're forgetting about it. But, like, for real, I think a big part of Powell's job is to conceal the rate cut to avoid the front run. I think Powell is trying to I don't think this is his number one goal. I don't think it's his only goal. And I think he's doing other things as well. But I do think a objective of Powell is to conceal intentions to a degree while still being transparent. But he wants to deter a front run in the bonds, as that will make his job either harder or easier. So I think we keep forgetting that. I don't best case scenario is a good way to put it. It's an objective of his, and if he can accomplish that, I think it could have a good effect for him, and he'll feel much better. But that is something we got to factor in that I think is just easy to forget about, because we're like, oh, look at what he said, and he's going to do this, and then we're like, yeah. But then, he doesn't want you to know, because that could defeat some of the purpose. So that's why even now, like 7, 1, 3, 7 cuts, all that, back to 1, that's kind of, I think, good for Powell. So in theory, even if they cut yield, will go up and TLT go down? What? No. If they start cutting rates, TLT will start to go up. It will stop going down. That I could tell you for sure. If they maybe that's the easiest way to put it. I'm just saying, be careful of how you determine how much it'll go up, because that needs more info. But the moment they cut rates, TLT will stop going down. I could say that with confidence, right? Because now the minute they change the cycle and they say we're cutting, and they really show that they're going to keep cutting or not go back to hiking, TLT should stop going down at that point. Not sure about that. I am. As long as there's no indication that rate hikes would return after the first cut. But if you give me that, the moment that like a real cut and like we're policy shifting again, TLT will stop going down. I don't know how much it'll go up, but I know it won't flush like you've witnessed, because it never did that before until the last 3 years. Peep Amazon. We'll check the premium. I mean, the premiums got murdered, but unfortunately, who was it? I think Meta, we didn't do good on those post earnings. We did for a little bit, but usually like waiting the day after, like the Netflix day after, we killed some more preem. It helped, but the Amazons are kind of cheap.
Amazon Anthropic launches iPhone app in business tier to compete with OpenAI. That was in the morning, I think. Or maybe there's another update on it. And then SPY coming down here a little bit. 15 minutes till the top of the hour, and then an hour 15 till Powell. Yellen already did the Treasury stuff was in the morning. It wasn't a problem. It was actually better than not. It was the morning, but Twitter fin tweeting it now. So maybe if there's another update, I could be missing that, but I've something sounded familiar from the AM. Does it make sense to take profits on Bill? I mean, do you have a purpose? So, like, if you want to put the money somewhere, yeah. But right now, I mean, Bill is going to yield a good amount until they cut rates. And then it'll still yield, but if you still want to hold cash, I mean, it's same resource, just as good as ever. Who's that? Norwegian? This is the CEO? All right, I need to go to the bathroom. I've never seen the Norwegian CEO. His hair is looking like mine, though. He kind of looks like me if I had red hair. Now that I think about it. My man, Harry Sommer. All right, I'm going to be right back. Follow me on Instagram at the Trading Fraternity. Oh, yeah, get ready for the Nikki T tweets. Even for the comments during the presser. But I'll be right back. Good morning.
Harry, we thank you so very much for joining us on a very busy earnings period for you. That is Norwegian Cruise Line CEO
Bad
Harry
timing
Sommer.
today, dude.
Now to another stock moving, Amazon. Its cloud unit posted its strongest sales growth in a year, a sign that the retailer's most profitable unit is recovering from a slump in certain businesses. We're going to break it down with John Ehrlichman from BNN Bloomberg, joining us from Toronto, and encyclopedic, as we know, as ever, about technology. John, you also spoke earlier, I believe, to an Amazon executive as well. What are they saying about their potential in the exciting stuff in cloud and AI?
Yeah, so much to talk about, Chanel. I mean, I guess we'll start with the market reaction to these latest Amazon numbers. You could make the argument if we hadn't seen the success we saw from AWS, maybe there'd be a slightly different narrative just because of the guidance from the second quarter overall. But if you think about where we were a year ago, just as context, Chanel, when a lot of business customers were starting to be a little bit uncertain about the economic spending environment, there were questions about what that would mean for Amazon Web Services, and yet here we are with AI in full effect right now, and that being reflected in these quarterly results. The numbers that really stood out to me, Shanali, the fact that on the revenue side, AWS clearing $25 billion, so an annual run rate now of $100 billion for this business. You're going to be hard-pressed to find any corporate software business outside of Microsoft of that size and scale, and that's just one part of the Amazon business. And then the profit story, the fact that the operating margins are already north of 38%, Bloomberg Intelligence seeing that heading towards 40%. But during an earnings season where companies in technology are continuing to spend on AI, maybe one of the lessons from the Meta conference call when Mark Zuckerberg obviously committed to some big numbers and that raised concerns on Wall Street. By comparison, Andy Jassy talking about the need to spend, but also the need to monetize quickly on that spending, that seemed to resonate with the street. So Amazon getting a lot of check marks, it feels like, from the Wall Street community so far.
John, we thank you so much for your time. We had to leave it there for now because we do have an IPO opening, the largest of the year. Viking Cruise Line has gone public. Let's discuss it with Bloomberg's Abigail Doolittle because we are looking at a bit of a pop here. Opening at $26.15, IPO at $24, raising $1.5 billion yesterday. Where do we stand?
Yeah, it's a pretty healthy IPO so far, with the considering that the priced at the high end of the range and now is above that with this nice pop that you're talking about. Market value of $10.4 billion. Now, it's a really
cruise
interesting
line?
company because the CEO says that this is the cruise line for the thinking person, not the drinking person. They really create these cruise lines for
the
the
hell is a
intellectual
Viking
person.
cruise?
They are
I've never heard of a
kid-free. lot
Viking in my
times ahead of
life.
PBS shows, that's where you will see the ads. It's for the adult that is above $55 with a fair amount of money. So it seems like it's a successful IPO, shows that the markets are open there. It's also interesting because today we have
44 million
Norwegian
that's a
cruise lines
lot.
plunging down more than 10%.
So you
on
need
a miss.
22
The
million
other cruise
shares
lines
in
are
the
down
first 10
sympathy,
minutes.
But we do have this pocket of strength here for
I mean, maybe you're at
Viking.
11 million
What
now.
is the backdrop
You've
here? Because
just 4 or
it's
5
interesting
minutes. You
to
might, if
have
it keeps
this
same
just
momentum,
hours
it might hit
before the Fed
criteria.
meeting.
It is interesting. It's pretty unusual. I think that it signals the
Weird.
level of confidence that the company and the bankers had that they would be able to price this successfully, and that they certainly did, that it is this niche cruise line. I think that that's probably one of the takeaways.
And also, I mean, we're doing this at relatively
market
low
cap's like 10
volatility.
billion, dude.
Might
It's
this be the
fucked up.
last big
7.8?
one we see this year? I mean, I wonder how much this could really.
I've never been on a cruise in my life.
I think it's
Actually, I saw one, bro.
too early to.
I wanted to go. Bro, have you ever seen? They got a Ritz-Carlton cruise. That one looked dope. I want to go on that one. But other than that, I've never been on a cruise. I was down to hit a Carnival cruise. I saw a Twitch one, bro. Or not a Twitch one, a TikTok. I was like, yo, they turn up, bro. This looks fun. But I've never seen I don't know, Viking. That's crazy. Yeah, and NCLH down on the earnings too. We did one a couple weeks back. I think I remember that. How was it? Snapchat's still going up. Usually that Ritz-Carlton one, that shit was expensive. It's like 10 grand for a ticket. I'm like, nah, just pass. Starbucks, bro, still flushing, man. My goodness. You get ads all day because, bro, they're like, this is our target market. You got the family too. You know, they know. They're like, come on. They're like, take the wife out, get a vacation. They're like, if you like the montage, you're going to love this. It's nice. It's really, really nice. Like, it's definitely a luxury cruise. Starbucks for the long term in a little bit. I don't know about 73, but like I said, the dust needs to settle. I mean, here's the deal. If you would be okay with buying Starbucks again and you don't mind suffering a little bit of a drawdown, this is like the top end of a range. You see what I'm saying? You're back now 3 earnings. 1 earnings here, and then I think this one or this earnings for sure. You get what I'm saying? So this is a top end of a range. It's low, it's still cheap, but you still have downside. Or just like Nike. Remember, I showed you the same exact thing with Nike. It was the same thing at 90, and what happened? They bounced up to 96, and now it's back to 90 again. So the yield on Starbucks is 3. And that's the thing. I like Starbucks at 4. I think at 4, I passed up on it. It was like 3.94. I missed out on it last time, but I'm like, you know what? I really think Starbucks 4% yield is not bad. You've all 1/4 of what you plan. Yeah, that's not a bad idea. That's what I'm saying. If you don't want, that's why there's a reason why I keep saying I'm gonna get greedy. I'm getting greedy, and if I'm waiting to like buy at a lower price. But straight up, if you like the company, 10 years, you know what I'm saying? Like a longer term spaced out plan, you can make sure you get this at a decent price, right? But it's gonna be up to you on that one. So you could, as I was saying, you could reverse pyramid into it. Start a little small, then just double up. But then again, where's the price after that? That's the thing. If it rockets up, goes lower, and that's some of the risk you're going to take. But it's not bad. The door is open, is what I'm trying to tell you. So if you like for the long, it's decent. It's 3% yield. I think you could yield another percent. The stock could drop a little bit more. But then also, too, this is an attractive price where it's gotten support, and also where if it can't hold up, people might get a little worried. What do you think about the 45% tax Biden's planning on taxing unrealized gains? WTF? You missed it. We talked about it on Monday. But
All that other stuff is, I think all the tax stuff and capital gains, and it gets people emotional, but I had a really good discussion on the step-up basis, and that's the real answer in that bill, which is more of a threat to all of us and our future generational wealth. If you like Starbucks at the 4, does that mean you like it at 50? If that's the price, that's the thing. I might shoot ahead of it. But I'm, like I said earlier, I think like 60, 69 to like realistically, I want 63. But then I was looking at 55, and that was that was big. Chat acting like 15-year-olds. Well, I'll take care of it. Don't worry. It shouldn't be anything. I'm going off. I'm not even saying anything to all of them too. So, but yeah. So be graceful, be beautiful, be loving, be nice, be useful, provide value. Amen. Amen. Anyone trade with Fidelity? If it's sell puts that secured cash, they pay you with SPACs until you buy the shares. Oh, I didn't know. Japan considering regulating large domestic international AI developers to limit risk to society, such as the spread of misinformation and following the U.S. and EU. Wait, is that the threat? Oh, no, they're following the U.S. and EU. I was like, wait, the threat is following us? No. Gold, I keep your eye on it for Powell. So I think it's really interesting, but unfortunately, man, I could give you guys another gold rant if you would like, but when it's all said and done, man, gold hates you. Like, dude, there's a lot of stuff we don't know with gold right now. Because I'm even telling, bro, imagine that price I shorted at and that I told you guys about. But like, dude, to even just sell off this much and now be right at 2,300 prior, and then again, this was what was April 8th? This was the last Powell. Was it April? I think it was April 1st was Powell. So gold is still higher than the last Powell. The market's still lower. But what I'm telling you, you've made almost a $100 move on gold ahead of Powell down. So whatever happens today, it's below that price now. There's still a lot of fluff. It's above the last Fed meeting, and then you're down $100 in 3-4 days. So I don't even know what price is generally going to be fair or not, but I mean I'm going to look at it. I'm going to look to see whatever he says, and if it gives a clear signal to one or the other, I mean, gold is still a big part of the situation. This month of May usually bullish or bearish. There's a lot of what did they call it? They call it a Wall Street lore. So they say that you sell in May and go away. That's kind of the idea, that May to like October is pretty bad, but literally the last 8 of the last 10 years, May has been good. The average between May and October is actually up. So that hasn't really happened. So it's hard to say, but if we go to the seasonality, I don't know where the calculator is. It'll be on the last YouTube one. Wait, why is Corinne talking? Oh, no. Well, I should use this. I should get the previews right now. See? You guys associate it with the damn government. I associate it with getting shit done. Because I'm like, oh, shit, she's on. I should go get my earnings previews. That's the only thing I see in that for now. But, yeah, she's talking right now. But what was I just looking up before that distracted me? Oh, I wanted the seasonality calculator. That's what it was. So let's take a look. Live. So May, I don't know. I think this is from, 1950 or something? So you've had 45 up years in May and 29 down years in May. So almost double, or at least more years have had a positive May. And then the average return is about 0.17. So last May you were green. The May before that, green. The May before that, green. The May before that, green. 2019 was your last red May. Then green in 2018, green in 2017, green in 2016, green in 2015, green in 2014, green in 2013, and then 2012 was your other one. So, yeah. But May is usually green, and it's a small return when it's all said and done. That website, it's on every single trading fraternity live watch list for the last 7 months. So if you care, you can find it. We're going to have another one this Thursday, too. Is that tomorrow? Ah! So Wall Street scammed us into following a false narrative for 10 years. Kind of, yeah. Without it, being true. But, if you observed like it was there. And then May's trade weird, pretty much May. And this is where I'll defend Wall Street a little bit, just because you've seen it happen. I'm showing you the numbers, right? Point this, point that. But don't forget, we saw this a lot last year and the year before that. We could drop 4% in May. And then the last week go up 5%. And then it's up 1% on the month. You know what I'm saying? So, usually it could get wild. And then, yeah, the months following May are part of it too. But even then, I think June, July, they could be decent. But then after that, September, October get shaky. Live. All right, it's 10 o'clock. Well, we'll do the preview in 30 minutes. Let me give you KJP. And I'm going to get these previews so we don't lag on
dire situation there, so he'll speak to that. And Hamas should just not continue to get in the way of much-needed relief for the people of Gaza. They need to move forward and move forward with this deal. And that is going to be, this deal is also going to obviously create an opportunity to get more of that humanitarian aid. And let's not forget the innocent people who they took hostage, over 200, and that includes Americans. They need to come home to their families, their loved ones, and we have also American hostages that are part of that. We're part of that 200, as you all know. So Hamas needs to. There's a deal on the table. Hamas needs to take it.
And then here at home, there's been some dramatic images really across the country over the last 24, 48 hours, especially at the Columbia, UCLA last night, University of Madison, Wisconsin. Other campuses. Has the president been monitoring this, and why have we not heard directly from the president about these protests that have taken over institutions?
They called it political poison this morning.
The police responses, instances of violence. Why have we not heard directly from the president?
So just a couple of things. The president is being kept regularly updated on what's happening. As you just stated, across the country, he is monitoring the situation closely. So is his team.
It's true, though. Think about it. A riot before an election. You saw that happen 4 years ago.
No president has spoken more forcefully about
combating
anti-Semitism than this president. Let's not forget, in 2017, he was very clear what we saw, the anti-Semitic vile that we saw in Charlottesville, on the streets of Charlottesville. He called that out. And one of the reasons he stepped into the 2020 election is because of what he saw, is because he wanted to speak out and speak against what we were seeing in this country at that time. Democracy was under attack. Our freedoms were under attack, and we're still fighting for that today, obviously. But he hasn't just done that by speaking. As you heard from my topper, he's taken action. He's taken action by moving forward with the first ever U.S. national strategy to counter anti-Semitism. More than 100 new actions were introduced, obviously, in that strategy. And that is how seriously this president takes it. And I think what's important here is that he's taken action on this issue.
Just quickly, does the president support those police clearing operations like we saw in New York? We've seen some of these other college campuses.
Look, we've been very clear on that. Americans have the right to peacefully protest. They have the right to peacefully protest as long as it's within the law and that it's peaceful. Forcibly taking over a building is not peaceful. It's just not. Students have the right to feel safe.
And I remember
they have
this
the
last
right
time
to learn. They
when
have
it's
the
like
right,
political.
the right to do this without
so I'm gonna get the
disruption,
previews, and then I'm gonna go through the chat when I'm
feel
done.
safe on campus, as
So
I
whatever
just
you
said,
put
they
in
have the
there,
right
if
to
it's
attend
clapworthy, you
their
will get
commencement
clapped.
without feeling.
So there's your warning. Don't get mad at me.
Unsafe. And what we're seeing is a small percentage of students. That's what we're seeing. They should not be able to disturb or disrupt the academic experience that students have. So, look, that's what. That's how we see things. It is important that students and communities feel safe here. And at the same time, we are going to be really forceful here and continue to underscore how anti-Semitism is hateful speech. It is wrong, it is abhorrent, and we're going to continue to call that out.
Thanks, great. To follow on that, has anyone from the administration been in touch with administrators, leaders at Columbia or any of these universities that are seeing these protests?
I don't have any calls to read out at this time. Obviously, we're closely monitoring the situation. We're getting regular updates, and I'm just gonna keep it there. I just don't have anything to share as far as calls or readouts.
On another topic, has the White House received the recommendation from the DEA to reclassify marijuana from Schedule I drug to a Schedule III drug? Can you comment on and confirm that?
So here's what I can say. I can say, as you know, last year, I believe in early fall, the president asked HHS and Department of Justice to look at reclassifying marijuana and to go through that process.
That's the headline. She's talking about it.
DOJ
Check
is looking
MSOS
into
again.
that. I just want to be really mindful there. They're moving with that process. Don't have anything.
May not
more
move
to
it,
say.
but think about it. We haven't heard her say it.
But you can't confirm that it's now at OMB for the next phase of
I
this.
cannot. All I can tell you is I would refer to DOJ, and what the president directed HHS and Department of Justice to do is to look at the classification of marijuana. Let's not forget, this is something that the president talked about during his campaign, and he said no person, no American who possess marijuana only possesses marijuana should be go to jail. It is affecting communities across the country, including communities of color, and so this is why he asked HHS and Department of Justice to look into this, and that's what they're doing.
You mentioned campaign. Is this something the White House thinks can help the president right now in an
Well,
election?
I'm talking about the campaign.
I know,
I appreciate that, but I'm talking about the campaign and his campaign. This is a commitment, a promise that he made when he decided to run back in 2019, and he was very clear why it was important, he believed, to ask Department of Justice and HHS to review this, and that review continues, and so don't want to get ahead of what DOJ is, how they're moving forward. Okay, Luija.
As the administration considers bringing Palestinians here to the U.S. as refugees, do you know how many people that the U.S. hopes to relocate? And secondly, given the challenges getting in and out of Gaza, will the U.S. assist in physically bringing Palestinians here?
So let me just first start saying that we just don't have anything to announce at this time, but I do want to lay out a little bit and take a step back of what we've been able to do since the beginning of the conflict, right? We have helped more than 1,800 American citizens and their families leave Gaza, many of whom have come to the United States, so many of that 18,000 is here, and the president has said, and with his direction, we have also helped and will continue to help some particularly vulnerable individuals, such as children with serious health problems and children who were receiving treatment for cancer, get out of harm's way and receive care at nearby hospitals in the region. And let's not forget the president, this administration continues to be the largest contributor of humanitarian assistance. This is something that the secretary is going to be talking about in this hour. The humanitarian assistant going into Gaza to address the conditions, the humanitarian conditions in Gaza. Obviously, as we know, they are very dire. And we are pressing hard to get more urgently needed aid into more people as soon as possible. That's why this hostage deal is so critical, besides, of course, getting the hostages home, but also creating an opportunity to get that more additional humanitarian aid in and would lead to a ceasefire. Now, in terms of the refugee admissions program, which is what I believe you're asking me about, we are constantly evaluating policy proposals to further support Palestinians who are family members of American citizens and may want to come to the United States. So we're evaluating it. I don't have anything to announce at this time.
And then a quick one on the communications with protests and people related to protests. Has the president spoken to Mayor Adams since the NYPD became involved in dealing with them?
Understand the question, don't have anything to read out as far as a conversation with the mayor from the president, but I think we've been very, very clear about what we're seeing on the ground. I've been answering these questions for the past couple of days. Go ahead.
Thanks.
You said the president is monitoring the situation. Is he aware of the reports that a fair number of the people arrested on several campuses are not students?
Look, that is something for obviously local government to speak to, local police and law enforcement to speak to, and what they're seeing and what they're reporting. That is something that I can't speak to at this time. I've heard that reporting, but that is something for them to speak to at this time.
But he's not aware of that.
Well, he's getting regularly updated on the situation and monitoring. So I assume that that's part of his update, but he is getting regularly updated on what's happening across the country and campuses.
Because it's Federal Reserve Decision Day, I thought it'd be an opportunity to ask for an updated view on the administration's view of central banking dependence, but specifically because the president has in recent months, twice at least.
All right. I got the preview, so let me just go through the chat real quick. I hope you made it. Bring back mango pods. Oh, man. But not bad, though. Not bad. So there's a lot of earnings. I have them all, though. All righty. I got a couple while I could still, if they came across easy, I did them. Oh, the fake sign. That was an old one. Yeah, that was a really, really old one. All right, let me get this in the back. Give you a little bit. It's crazy, man. No matter what, though. Even if I see what CNBC has. Because Bloomberg, they're really into the political
terminal
thing with
Fed
the
funds
Columbia
rate
stuff.
is probably going to be above 3.5% when it's all said and done. We'll just have to see how the data plays out.
We'll come back to that and its implications for the economy, but it's a different spin on that phrase, higher for longer, is basically what it is. Let me turn to Julia Coronado, if I might, and ask a question that I asked Steve a moment ago. It seems unlikely that the Federal Reserve statement, said Steve, will include any reference to the possibility of raising interest rates at this time to combat inflation. But it seems very likely, I think you would agree, that the chairman will be asked about that. What do you expect him to say? How will he dance on that head of a pin?
I think that what he'll say is that it's not something that they have discussed, and it's not something they think will be necessary at this point. That so far their strategy of holding rates at what they believe to be a restrictive level for a longer period of time is the right strategy. But at the end of the day, they'll follow the data. So he'll confirm data dependency, and he will also confirm their commitment to restoring price stability. So he's always very forceful and strong in saying, we'll do whatever the data dictate in terms of restoring price stability. But at this point, I think Chair Powell is not going to want to indicate any degree of panic given the firming in inflation in Q1. There are a lot of reasons to think that progress will resume as the year unfolds. So let the data deliver. If the data don't deliver that cooling trend as we move through Q2, then that conversation might shift. But one thing Chair Powell said coming out of the IMF meetings that really struck me in a world of global currencies that have been as volatile as they are, he said they understand well their job as keeper of the global reserve currency, and that their job is to be very transparent and communicate their thoughts and their approach as clearly as they can so as not to induce unnecessary volatility. We've seen a lot of volatility in the yen and currencies generally. The U.S. as the outperformer of the global economy really sets us up as the safe haven for capital flows. So I think all of this says Chair Powell should be calm, cool, and collected, hold the line on the current strategy, but also their commitment to bringing inflation down over time.
Mike, let me turn to you with a question that is maybe sort of lurking off in the background a little more maybe than it should be, and that is the runoff of the Fed's balance sheet, quantitative tightening, if you will. What do you expect, if anything, for the Fed to say about that and for the pace of the reduction in the balance sheet, which is monetary tightening by another means?
Yeah, I think that's going to be the big question for today. I mean, what we're not expecting today are any major surprises. The focus will absolutely, as you said at the top of the hour, be on the rhetoric, on the language, and what that portends for the remainder of the year. The one point that we are watching, though, however, is that quantitative tightening. Do we start to taper that back a little bit? We think if that doesn't happen this month, it's probably in the cards in the near term. We've seen that this is a Fed chair that really likes to telegraph, to be transparent, and to get ahead of the trend. So I think that would obviously be positive news for the market if we do see that today. That's going to be the one material outcome that we're waiting for.
And you're of what view with respect to the number and magnitude of interest rate cuts this year, if any, Mike?
We've said all year long that this last mile is going to be choppy, and we are cautioning investors that you really have to, not read too much
you're about
into
to hit a
what's
new
in
low
store for the remainder of the
and
year.
then
We're
the
sticking to our
IPO
guns
has
with a
not done half the
2.5%
volume yet.
Inflation target for the end of the year.
But SPY's about to hit
we
a
do
new
think
low.
that the Fed will
Healthcare's still
have
going
room
up.
to cut rates before the end of the year. Our base case, believe it or not, and I know this is outside consensus, but our base case is still at 325 basis point cuts before the end of the year, even as we sit today.
And Julia, your view is, if I'm characterizing it correctly, and correct me if I'm wrong here, that the Fed will start to cut rates and that the rate cutting cycle will be sort of an every other meeting pace into 2026. And so where does that bring your terminal rate as opposed to Subadra's?
I think ours is probably a little bit lower than Subadra's, and the pace will ultimately be dictated by the data. I think they certainly aren't going to use words like measured pace and promise a slow pace of cutting like they did last cycle. But we do expect that this resilience we're seeing in the economy is going to be with us. If it is, they can afford to go sort of gradually and carefully and calibrate that rate to the economy. And like Subhadra, I think there's a number of reasons to think the terminal rate's higher than last cycle. We don't have household deleveraging. We have more fiscal support, and a lot of reasons to think that it will be higher. I would probably put it closer to 3 to 3.5. Ultimately, at the end of the day, I think there's a lot of lags in policy that have yet to come through. Things like the mortgage lock problem and businesses also locked in low rates means that we really haven't paid the price of higher rates yet, but we will over time as debt rolls over.
Let me change the spin, Subhadra, a little bit. It is a political year, so I guess no one should be surprised that the Fed has, in recent days, been brought into a political conversation about its own independence. Stories in the Wall Street Journal late last week and over the weekend indicating that certainly people in the Trump camp have been wondering whether there are ways that the executive could be more influential with respect to monetary decisions on the Fed. Talk to me a little bit about your view on Fed independence, how important it is, and whether you give much credence to the stories that ran last weekend.
So the Fed is bound to the congressional mandate of
It reports to Congress.
Yes, they do. I mean, you hear Chair Powell doing his semi-annual testimony in front of Congress. So for the most part, I think that the Fed is accountable to its dual mandate. I just don't see the need really for any change in what has worked out really well for over a century. The Fed has remained independent, and the reason for that is the fact that business
margins
cycles,
on everything went up
economic
like 2 weeks ago.
Don't coincide with.
We'll talk about it in a little.
Presidential
I
terms.
don't know. You tell me.
So it's important for the
we're
Fed
going to start our
to
preview
have
here,
that in
and since
mind
I was
and
just
look
getting
at
other
sort of
previews,
the longer term picture.
I figured. So I don't know. I'm here right now. If you guys do this, but I figured I think you guys would appreciate it if I put my preview all in writing because I had it all in my head.
but I'm pretty much putting together like a watch list document for you guys right now, so you will be better prepared for this event. That sound good? So give me a couple more minutes. I'm still here, though. I could answer, but if you want, that futures question was a really good one because we noticed it the other day. They literally jacked up on TD. They jacked up future requirements on everything by like $2 to $5 grand. So, yeah.
I'm sure it's going to be a topic that will resurface during the course of this year and into the future. Subhadra Rajappa, Julia Coronado, Mike Remack, thank you very much. Let's move now to high mortgage rates continuing to keep potential buyers on the sidelines. Julia, Diana Olick has the latest numbers. Hi, Di.
Hey, Ty. Yeah, mortgage demand dropped again last week as rates hit the highest level since early November. The average on the 30-year fix rose to 7.29% for last week from 7.24%, and that's for loans with 20% down. That rate is 79 basis points higher than it was 1 year ago, and that's why applications to refinance a home loan, which are highly sensitive to weekly rate moves, fell 3% for the week and were 1% lower than the same week a year ago. Applications for a mortgage to buy a home fell 2% for the week and were 14% lower than the same week 1 year ago. But here's the headline in the report. Demand for adjustable rate mortgages hit the highest level of the year, nearly 8% of all applications. ARMs offer lower rates. In fact, last week, a 5-in-1 ARM fell to 6.6%. ARMs can be fixed for up to 10 years before adjusting to the market rate. The less affordable housing becomes, the more demand we see for ARMs. You can just compare it to 2021 when the 30-year fix was around 3%. ARM share demand was barely 3% of the market. So rates have moved up even further this week, now around 7.5% as of today. That's roughly 50 basis points higher than where we were just 1 month ago. And to home buyers out in today's super pricey and competitive market, that's real money on the monthly payment. And Tyler, you know, you don't buy the house, you buy the monthly payment.
You buy the monthly payment. You would have to guess that the share of adjustable rate mortgages is going to continue to expand if interest rates stay roughly where they are today. And why wouldn't you go for a 5-1 ARM on the theory that sometime in that 5-year period, rates are going to come down, you're going to get a chance to refinance and maybe lock in what is, by today's standard, a more appealing fixed rate?
Yeah, it's absolutely what you should do. And you can even fix for up to 10 years. You know, adjustable rate mortgages are considered riskier because at some point they will adjust to what the market is. But the market could be lower than it is today. And as you said, if you expect rates to be lower in 5 years, as long as you're at least 50 basis points lower, that's when a refinance makes sense for most homeowners. If it's close, the refinance is too expensive and the math doesn't really work out. But again, if we expect rates to go much lower in the coming years, a 5-in-1 ARM is perfect.
Yeah. I've had almost all of the different types, Diana, in my long and unsuccessful career in real estate. Diana Olick, thanks very much. Coming up, we're halfway through the busiest week of earnings season, but it's not over yet. We've got 3 of the biggest insurers, plus Zillow and DoorDash on deck. The action, the story, the trade, they're up after the break. And for the first time in nearly 3 decades, Tiger Woods will be sporting something different.
Tiger Woods, yeah.
Red Nike shirt. We will give you an inside look at the golf legend's new apparel line with the CEO of TaylorMade.
All right, you're getting your pop, and you guys, keep in mind, in the next, 5 minutes, it'll be that 30 minutes. I'm not doing it today, but I kind of want, I don't know, I might. Maybe I'll give it a little bit, but depending on where the low is at, if you want to make the pre-Powell flip, you might be able to. So we'll see how it plays out, my friends. All right, here, let's get you this.
For the year and spending on the payment giants network.
Review in 7 minutes.
IPO news, first day out for cruise operator Viking Holdings, sailing higher by just about 10%. The luxury cruise operator had an unexpected IPO that raised 1.5 for an expanded IPO, I should say, up by $1.54 billion, a sign that the U.S. listing revival continues to broaden. Again, first day for Viking. Stock is up by 10%. Again, recapping, the Dow higher, S&P, NASDAQ, both in the red. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of Power continues. Back we go to Washington. And once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. And a very happy Fed Day to you. That's right here in
Colombia
Washington.
President Gustavo Petro says he will break diplomatic relations with Israel.
To read a statement from the Federal Reserve and ultimately have a press conference
pretty big deal.
Chairman Powell, Joe.
Yeah, that's coming out right now.
And there's a real possibility that despite what we heard just weeks ago after a hot CPI report from President Biden, who said there will be rate cuts this year, that the chairman could indicate, in fact, there very well may not be.
Yeah. Or could there be a hike this year still to come? I think there are 30% odds on that at the moment as we wait to hear from what we're told will be a much more hawkish Jay Powell. He's got a point to prove today, Kaylee, and it's based on the data. It's very hard to deny what's happening here in this economy, and it's something we wanted to spend some time with Lindsay Owens to talk about before we turn things over to our special Fed coverage. Lindsay is an economist, the Groundwork Collaborative, where she's executive director. And Lindsay, it's great to have you back. How concerned are you, knowing your background in economics here? You have a slightly more progressive view, and the idea of a more hawkish Fed at this stage, when you consider the impact that these rates have had higher for longer on the housing market, creating a higher barrier for entry for young people, more potential risk for the job market. What are we about to hear?
Yeah, absolutely. I mean, I think it's pretty clear that Powell is unlikely to veer off his higher for longer strategy, holding rates steady for now, but potentially coming off some of the earlier projections for September rate hikes. But, the question I think we have to ask ourselves here is, what are the benefits of a higher for longer strategy and what are the risks? And I do think, given the areas where we're seeing sticky inflation, it's really unclear that the higher for longer strategy has a lot of payoff. When it comes to the housing market, when it comes to energy costs, when it comes to auto insurance, which is another one of the areas where we're seeing more inflation than we'd like, none of those are really responsive to the Fed's interest rate policy. And in fact, when it comes to the housing market, it may well be the case that the Federal Reserve's policies are exacerbating some of the pricing that we're seeing in the housing market. So I think the evidence that the higher for longer strategy is going to sort of bring down the last mile of inflation is thin. And I think the evidence that the higher for longer strategy is starting to post some considerable costs is getting stronger by the day.
Okay, Lindsay, your point is well taken that a lot of the stickiness is where you see most directly interest rate policy transmitting, as in higher rates, higher mortgage rates. That has ripple effects throughout the housing market, for example. But isn't the risk of not keeping rates higher for longer, that rates going down or the expectation that they will go down further fuels demand, gets people out there spending, and all of those different areas of the economy where we're not talking about inflation getting sticky suddenly do start to see prices spiking higher again? Isn't that really the concern?
Yeah, absolutely. The Fed is trying to, handle the upside risk of inflation sort of, picking back up considerably, right? They're worried about that. I think we've seen a lot of inflation come down because of transitory factors and also because of supply coming back online. I don't think there's huge risk of, a big increase in consumption here that's going to have inflation
in 30 minutes. We're going to begin our preview in 2.
Control.
So
I'm definitely
you're here at the right time, baby.
Of someone who actually thinks coming off interest rate hikes.
And I got earnings previews, man. We are
is smart.
We're on top of it today, baby.
Frankly, given where we are in the cycle here. But we'll have to see sort of where Powell is at 2 o'clock. But at the end of the day, he's signaling that he's going to stick with the higher for longer strategy. And I think we're all sort of watching this experiment play out in real time.
And it's game time, baby.
Trying to chase inflation down to 2%, and hoping that they'll be successful. But increasingly, when we parse the individual data, it really doesn't look like this last mile is going to be responsive to interest rate hikes. And so I think we're in a real predicament here.
Does that last mile last through November? Because we've talked a lot about the political implications of interest rate changes around the election, and Joe Biden's got his eyes on about 6 months from now. Where are we in the cycle then, Lindsay?
Yeah, I mean, you're absolutely right. The political consequences of this really punishing interest rate environment are considerable. Americans' top concern about the economy right now is high prices. But they're also concerned about high borrowing costs. They're concerned about mortgage rates, which are incredibly high right now. I mean, look, I think sometimes we get, focused on sort of watching mortgage rates tick up and down. But, let's think about what this means in real terms for families. I mean, I myself would be paying twice as much per month in today's interest rate environment than in the interest rate environment in which I bought my home. That is a considerable difference, right? Twice the monthly mortgage payment, right? So this is pushing folks, out of home ownership for years, right? Folks not being able to jump in to the mortgage market. So the effects of this are considerable on the economy. Of course, the economy is top of mind as folks head to the ballot box in November. And we also have to look at some of the other things that are influenced by the high interest rate environment. I mean, Americans are holding a huge amount of debt right now. APRs on credit cards are sky high. And credit card companies are, really in some ways hiding behind high federal fund rates to keep APRs really higher than they need to be. So I think this is affecting consumers, most consumers, many consumers in America every day, the high cost of borrowing. And it's absolutely the case that getting some relief on borrowing, I think would be really helpful for President Biden before November.
Lindsay, we have just about a minute left before we hand things over to our special coverage in about an hour until Chairman Powell walks up to that podium to deliver the press conference. If you had one question to ask him today, what would it be?
I'm the special coverage.
I mean, look, the question I have is...
I got one for you. It's special to me.
Payoff?
All right, ladies and gentlemen, I hope you're ready. We were just talking if you wanted to make the pre-Powell play, but my man, that's it. We're running out of runway. 30 minutes from now, you will get Jerome Powell in the Fed. So I have a preview for you. I literally just wrote down a bunch of notes there. I just did all the earnings previews, but then I was like, you know what? In the spirit of all the watch lists, I figured because I was just going to freestyle it all to you. I've been excited about this, but this is a big event, you guys. Unfortunately, and here's the weird part because I don't know, you tell me. I feel like a lot of these events as of lately, it's kind of like, and then nothing happens. So this is going to be an interesting one because it's pricing in a ton. It's higher than anything we've seen in a long time. And if you have been following this story, what inflation has done, what the Fed speakers have been saying before the blackout, what Powell has recently just said, there's been a lot of updates. So unfortunately, this may not be the event that we could kind of downplay. So out of an abundance of caution, I would rather be fully prepared than underprepared because if Powell does do some big things here today, I mean, it could change a lot. Now, I will tell you, as of late, I don't really expect anything to happen. Maybe I'm jaded. Maybe I'm too agnostic, but I really do think with election going on and the way how tricky the data is and everything else, I feel like Powell, I don't think he wants to make too drastic of changes. If Powell changes too much, it ends up putting him in a corner. And I just really don't think your boy Powell wants that. So that being said, let's talk about what we are going to get and how do you guys want it? Do you want it on the main screen? Do you want, I could go to, I think I could go to the full screen of it. Do you want full screen this version? Do you want it overlaid with I don't know how you guys want the preview right now because I got a couple of keys. I even have a couple of plays for you. So you could get a little bit of logic coming into this, but I don't know. You want a little overlay so you can see the SPY? All right, yeah, we can rock with this. Y'all good with that? Oh, you got full screen? I'm going with the first answers, man. Oh, no, they say full screen. First screen, good. Full screen, maybe you want to do half and half? Should we do overlay half and half? I don't know. All right, we'll try with this, and then we'll see what's up, all right? Cigna's on the high. They got earnings. And Pfizer. Russia breached global chemical weapons ban in Ukraine war, U.S. State Department says. All right, so, Chad, here's the deal. Here's the first part of your preview, and it's a fun fact, but I have to bring this up to you because I really think it's important, and I think a lot of people overlook it. If you're not aware, this will be the 6th meeting in a row
of the Fed being paused. So I hope some of you know why I'm saying this is such a fun fact, because if you have looked at the history of the Fed and how long until they cut, this metric is very important, right? People oftentimes, I think it's like 9 or 12 in a row is where it happens. Even 6, I believe in 2007, it was like 6 or 8 months of pausing until we actually began cutting. So this is something to think about, because this whole entire story that you have been going on with the Fed, it's not short. And, you know, the latest update in the story was 6 months ago, or 6 meetings ago, a little bit more than 6 months ago. So you have to keep this in mind, because now as we get another pause today, that will be the 7th meeting by the time we get into the next SEP. And then before you know it, I mean, after that, we start falling into more historical terms of how long we stayed paused. So it gets really interesting from there. That is your first key. But now let's talk about the statement. Okay, so I might have to move this up a little. All right, but here's the deal. Today does not have a summary of economic projections. Every 3 months, the SEP, that tells you about the median rate, and it gives you a forecasting measure from the Fed. Today, we do not get one. So that means right when the report comes out today at 2 p.m. in about 20 minutes or so, it's going to have a little less potency. It's not going to contain as much data as the last Fed meeting that you just went through, or I guess 2 meetings before that. So that being said, though, there shouldn't be any big changes on this statement today. However, a lot of people are bringing up quantitative tightening, and I have brought this up from about 2 meetings ago. I told you this will be a bullish aspect when they start saying, hey, we are going to end our quantitative tightening. So here's the deal. I don't know if he's going to do it or not. Maybe he does, maybe he doesn't. But this is the information that you have to understand. You will get that info right at 2 p.m. Ta-da! This is a good piece of info, Chad. So what I'm trying to tell you, there should be nothing in this statement today, except if they do alter the quantitative tightening, that will show up on the statement. They will say, our quantitative tightening is so-and-so. We plan on doing this. This is what we did, and this is what we're going to be doing. So if there is going to be a slightly bullish change, that does have the potential to show up at this statement right when this does come out. Oh, God, see y'all, baby. God bless y'all. But does everybody get that? Because this is a little fun fact, and I think it's very important. Because, you know, we may not be, everybody is looking for the press conference, but literally right when it comes out, if there is an element of quantitative tightening adjustment, it is going to show up there. So watch out for that. And then here's the deal. I believe right now we're either at 75 and I think going to go to 60. I have to double check this. I'm pretty sure it's about a $15 billion amount that is expected if they begin to start weaning off of it. So if they do talk about it, it will show up in the statement. And then if they say it's going to be bigger than $15 billion a month, that will be more bullish. And if it's less than $15 billion, that could be less bullish or a little bit more kind of Bank of Japan-esque. They're barely doing anything. So that's the first big thing as far as the statement. Otherwise, quantitative tightening statement, that's probably going to be the main thing I'm going to be looking at. And now the second thing is watch what they say about inflation. And now this one is weird. This one is more, it's just floating around right now. But like I told you in the beginning when we first started this preview, don't forget how we got here. Literally, hot inflation, core inflation, average core 0.3, 0.4 over the last 4 to 6 months. You know, I've showed you the charts where it all leads to. It's not a good path. People are getting freaked out by it. You got energy going up. You had Powell just say he's not confident. You had even Goolsbee and all these Fed people. They've been kind of changing the narrative. How did we go from 7 rate cuts to 1? That's how. So this is why we're going to watch on the statement today, because if they acknowledge the inflation increase in the statement, that is going to be very hawkish, or that will add a cherry on top. Are you following? This is what I want you to understand. They've talked a lot, and a lot has happened, and they barely started admitting it, right? So if they confirm it by putting it in writing, that's a little bit more hawkish because they don't have to. Are you feeling me? They could very easily keep that statement the same and then just talk their way out of it. So if they do include that, I think the market's going to read that as a little extra emphasis of hawkishness. So like literally it will say, like I put it in quotes here, something like inflation has stalled. So let me get you the statement so you can see what I'm talking about, but it probably should sound familiar. The first like paragraph of the statement, it's always like so-and-so, the economy has done this, and then recent progress on inflation has continued to moderate, so on. But if they say inflation, the progress on inflation has stalled or anything of that nature, it does start to, that hits a little hawkish. So this is just from the beginning of the year. I guess I should use a more recent one. I guess March. But like right here, just literally first paragraph, right? They're saying recent economic indicators, activity has expanded, job gains remain strong, unemployment remained low. That's good. And then inflation has eased over the past year. Oh, y'all don't feel me. So do you see why I'm telling you this? And this is it's a perfect segue into the next thing I'm telling you, because dude, you realize your last Fed meeting is old. It's old now. That's March. In the last Fed meeting in writing, it says, inflation has eased. That's not what you have heard as of lately in the last couple of weeks or maybe about a month or so, right? So that's where I think it's kind of funny. But like I'm saying, if they're going to acknowledge it and really get a little bit more aggressive, they are going to say inflation has stalled or this progress, inflation has eased but is showing bad signs and then remains elevated. You get what I'm saying? That is going to be the type of statement change I would be looking for. So the beauty now, let's talk about the press conference, but actually let me just give you one more thing. I forgot this one. Bullish statement. There is a chance that you could get a bullish statement. Does anybody know what it could be? This one's in left field, my guy. Like for real, like if you still believe in the tooth fairy, I guess. I don't know. This is like it could happen, but I don't think it will. But some people brought it up. The idea is that there's still a chance that the statement could indicate rate cuts. Why? Because the timing. So they could still say a lot, and yes, they could acknowledge a lot of the things, but in a weird way, if they wanted to signal it, they really could. But it shouldn't happen. This one should not happen at all. But I have heard this talked about. I just think I think cocaine has a hell of a hangover. Is the way I will call it. But other than that, let's talk about the press conference now, man, because this is big. I just showed you guys the statement, and like you have to understand, bro. Like Powell at the press conference, he will be hawkish. Everybody, they're calling it a more hawkish, part of the hawkish pivot, but like, dude, you have to think about it. I could almost guarantee you Powell will admit less rate cuts. Why? Because the last Fed meeting is still at 3. I hope you feel me on this. You know what I'm saying? You have literally watched the bonds go back, the Fed futures. I just showed you that statement and what it says. Do you get what I'm saying here? So this is outdated, and Powell now, this is his opportunity to give that update. And this is where Powell, this is what I was telling you in the beginning of the day. Everybody knew this is coming. Everybody knows that Powell is going to have a more hawkish tone today because of what he said last time, what everybody else has said, but like literally the fact that this is so bad, that's the problem. It's like, it's so dated, not bad, excuse me. It's so just, he's behind. The Fed futures are at 1. So for Powell to acknowledge lower rate cuts, that kind of makes a little bit of sense. You know what I'm saying? So that's why people are expecting him to sound hawkish today. And he is going to say, well, maybe we don't cut 3 times anymore. Or the literal way he is going to say it is maybe our median projection is changed. Why? Because 3 was the previous median. And then he could speak more towards that. So that's the first thing during the whole press conference. But now, this is what I was saying, man. This is priced in as that's as crazy as it sounds. Because, one, we're pricing in the biggest Fed meeting since May of 2023 today, about 0.95% on the option chain. But everybody knew Powell, with all of these factors, is going to have a hawkish change today. So, in a weird way, the real surprise of today, it will be a dovish tone. I hate to break it to you. If you get a dovish Powell, or his tone does not go as aggressive as we are discussing, my man, any sort of little dovish tone, the market is sniffing it out right now. That is all they want right now. So, unfortunately, it's going to be an interesting back and forth. And I tell you this, I don't know what to believe. You have to be very cautious. And that's what I'm saying, because it's a Powell day. It's going to rock it up. It's going to rock it down. You know what I'm saying? And unfortunately, it really depends on the composition of what he actually says. And don't forget, during that press conference, my man can start off less hawkish, and then someone just going to ask him the wrong question. And then you never know. But everybody is preparing for a bad Powell today. They're preparing for bearishness. So that being said, the bar to surprise, it's a little bit different. And it might be easier to beat, but then again, there's a lot at stake right now. So keep that in mind. But now here's the thing. This will be and this is where I think it's going to be difficult today. Because Powell, I think, is going to find a way to go Tom Brady on your ass. And he is going to toe the line and stay in the pocket so well, it's going to piss you off. Because he is going to give you the hawkishness, and he's not going to give you as much dovishness, but he's not going to take it too far. However, you have to know what taking it too far is. And that's what I have right here. So like I'm saying, man, we know Powell's going to be hawkish, maybe a little less rate cuts, maybe quantitative tightening change, maybe you acknowledge inflation has gone up. Great, that's all within the realm, right? As long as you ain't going too crazy. But if Powell starts saying, and this is on the table today, I have it, this is on the menu, but the chef doesn't have to cook it. But this is on the table today, and this is how you will know if he is taking it past the line. If he starts talking about no rate cuts or even rate hikes, yes, it's possible. Okay, this is modeled out. People are thinking about this. Look at what's happened. Look how aggressive the Fed futures have been. Omaha, this is possible. This is not as realistically, this is more possible. And even Nick Timmerhouse has agreed with this. Nick Timmerhouse, Nicky T has already put this up. This is more possible than this. So it's more possible that Powell says no rate cuts or rate hikes rather than putting in the statement they're cutting rates next two meetings or next meeting. Because remember, next meeting is a summary of economic projections, and that's when you thought everything was going to happen. So if he really wants to get hawkish and push the line, that is going to be it. So other than that, it's really, we're going to have to, I'm going to be here. I'll cue in on you guys. But at the end of the day, we just got to see what they ask, what questions, how they come out, how he responds. I mean, I will tell you, an element of today is tone. The words and the words he uses are very important, but tone, attitude. I'm telling you, like a nice Powell or a mean Powell, aggressive. Like I'm telling you, it's weird because there's a lot that we're waiting for Powell to answer. But then again, go back to what I said. I feel like Powell won't answer anything unless he really has to. But that being said, Chattadonia, the event begins in 12 minutes. Would you guys like one more thing? I have one more fun fact. It's funny. I have this, and this is it. I'm just a Fed nerd, and I follow up with this stuff. But this is how I want you. I just, you know, when you're involved in this, you're gonna know what things are gonna happen. And this is just a funny part about today. It's like a fun fact, but it's just funny. It makes me laugh, but it's gonna happen. Are you ready?
Maybe. If I'm wrong, I just look like a jackass right now. But hey, that could happen too. Somebody is going to ask him about Donald Trump on the press conference. I'll take a bet on it too if anybody wants to bet. But this is how, I don't know if you've been following, but they will ask him about Donald Trump. Does anybody know why? It's going to be funny. Does anybody know why? Not only is it an election year, but your boy, and I'm just telling you, just keep up with what's happened recently. I know this may sound funny, but like, dude, there's a story. And the latest Trump update you had, your boy Trump was saying, I know, fake news media. If I become president, Jerome Powell, he'll have to contact me if he wants to cut rates. Uh-huh. I know. Can't trust them. Fake news media. Jerome Powell's a jackass. I know. It's a damn shame. Yeah, that was a big deal. It's a political thing. People are talking about it. But in the spirit of everything, I'm pretty sure this is going to come up today. And I think it's just going to be funny. We're going to chuckle at it. It'll be during the press conference, and Powell's going to give, he's going to have like a sarcastic reaction to it. You know what I'm saying? But it's kind of a big deal. So there you go. But Chattadonia, good luck. Like the video. Make sure you're subscribed. And if you want any, make sure y'all on the watch list too, because I'm sure we're going to have a crazy one today. But, oh, yeah, wait, I have more. I have plays. I forgot. I have plays. Actually, no, like the video. Never mind. I don't have plays. Oh, wow. Where did they go? I forgot. Oh, wait, do we have likes? I don't know if y'all want plays or not. Uh-huh. That's a great pregame, man. I'm very excited, and I'll be here to interact. I don't know if you want plays. I forgot. I don't know the likes, so maybe I could show them to you after, or I forgot. Man, I don't know. I don't know how many likes. Maybe 2,500. Damn, there's 7,000 of y'all. I'm just asking for 200 likes, man. That's crazy. That's how bizarre. Dun, 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 dun. How bizarre. You need 400. I think you need like 100 more. I think you only need like 10 more now. Or maybe it hasn't updated. Oh, wow. Yeah, we need like 10 more people. There's 10 beautiful souls that could hear me. 10 more people. Just like the video, man. Like the video. Honestly, I have faith. I believe in you. I believe in you so much, I'm just going to get to the plays. That's it. I believe in you. Amen. So, 3 plays for today. I only have none of them, actually. So, we're going to find out, but you got to be very careful with these, bro. Dollar is the answer of today. The dollar is the biggest deal of today. I don't know if you are aware of what the dollar has done, but if this is anything hawkish, more hawkish, less hawkish, the dollar is all that matters today, believe it or not. Why? The dollar is near the breaking point of the last cycle high. So if today sets a new trend, a new cycle, that dollar breaking out, I mean, remember the yen and everything else going on, even if the rates are going to climb 4.7, 4.5, or 4.7 to 5, that dollar is going to play a big part of it. So low-key, dollar is at the breaking point that's the point where the dollar, if it breaks out, anything from there, it starts to get like really, really, really like strong at that. And then you haven't even seen that to a degree, man. It starts to get like really, really wild. So there's the first one. The second one, gold. So besides the dollar, this is like one of the only asset classes that's like still up in the last like a month or so post Powell. So gold is still up right now, and literally this whole like hawkish pivot idea, it's going to play out into gold right now. So I want to see if Powell does approach hawkishly. It is priced in. If Powell is hawkish, I want to observe what happens with gold. But like I told you guys earlier, unfortunately, it's moved about $100 in 3-4 days. So your range is going to probably have a little bit more risk than any other plays that you think. You know what I'm saying? Because you're just shooting from a different like positioning with how it's moved. Like there's some other plays they've given up with earnings and they've moved around, but gold is not like it's still pretty trippy. So don't let that fool you. But remember, last Fed meeting, 2 Fed meetings ago, gold was our number one play. So today it's the dollar, but I do have gold in mind, but it's not going to be as easy. But I will tell you, if the market makes an easy move, gold is sometimes an easy lagger to pick up. I'll let you know if it happens, okay? But that is number 2. And then finally, bro, the Zaza. These are the Fed futures. And quite frankly,
if you think Powell is a P word and he's not going to go hawkish, I would buy the shit out of these right now. But I don't know if that's going to happen. Otherwise, if the Fed futures, if Powell is hawkish today, they may hit our point. They may get to the point now where Fed futures, we start pricing in no rate cuts, and that may be the deal of a century with no downside. Yeah, /ZQ. All right, it's a nickname. We call it the Zaza, but /ZQ is the Fed future. So it's the literal future contract on the FOMC rates. So you could literally trade them if you wanted to. And we've done it before. I mean, last time I gambled on this was in December. I was down $6,000 within 1 minute of Powell reporting because he came out extremely dovish. So I shorted it, and I was down $6,000. By the end of the week, I was down like $12,000, and then because they priced in 7 rate cuts. And then a couple months later, they priced it out. I walked away with $4,000 profit. So they move insanity, like especially if you go with size, but it's the literal future contract of Fed expectations. So I shorted them. Expectations went the other way. They killed me. Expectations came back. I made my money back again. So ZQ, it's a Fed future. Go to investing Fed rate monitor tool if you want more info on that. I've showed you that on the watch list as well. Not for the faint of heart, no. But sometimes it has a good floor. But it's not, I wouldn't call it for the faint of heart. I would say for the inexperienced, this isn't, don't fuck with it on your first play. You know what I'm saying? That's all. Because it's kind of tricky. There's people who have spent years in the market and they have no idea what that is. They didn't even know it exists. So just don't force that one. It's more, I'll tell you though, after this event, if it hits that breaking point, I mean, shit. You know what I'm saying? We'll see. This dude is so funny and chill, I swear. Bro, isn't that your other account? I think I know it's you. Unless somebody copied your profile picture. But, Chad, we got 4 minutes. I have more updates. I don't know if you guys want them. I got a couple more updates. Let me see if I can power through these. So, options are showing the implied move 0.95. Dennis Debauchery of 2022V says even if Powell isn't overtly hawkish, stocks are vulnerable if data later this week signals the Fed may need to keep policy tighter for longer. Data needs to cooperate. The crucial question is if the same strength in CPI labor markets from first quarter extends into second quarter. If the wage data on Friday hooks back up, 10-year yield would increase sharply, and that would be a major headwind for risk assets. From a dollar perspective, the shift in the Fed expectations from a multitude of cuts to just 1 or 2 and possibly none is already in the price, says G10 Audrey Childe, Bloomberg G10 FX strategist. It will explain the dollar slide to 106 to last month. Parity believers now need a fresh dose of hawkishness in a particular return in the Fed rate hike narrative to trigger another large leg lower. This is not our central scenario for now. So that's to my dollar play. They're saying it's not expected, but keep that in mind. A surprise is going to break the dollar. That's kind of what I'm telling you. At the risk of getting nostalgic, about 2 months ago, Powell was assuring senators rate cuts can and will begin over the course of the year, and that the Fed is well aware about the risk of waiting too long. He was savvy enough to qualify his promise by saying it depended on whether inflation came in as expected. Ira Jersey says SOFR futures are pricing in more than 20% chance the Fed's next move is a rate hike. The BI rates model suggests there's a 20% chance 3 months SOFR will be higher than 5.6. Yikes. So literally, you have a 20% chance of a rate hike. 2 minutes. A minute and a half.
The VIX, I looked it up. It was it didn't meet criteria. I think 44 million shares we saw when it came out. But all right, Chad, locked and loaded. Hit that thumbs up on the video. I wish you the best of luck. And remember, you have time. So we're going to get the data out literally in about 1 minute. And then 30 minutes afterwards, we are going to begin the press conference. So there's going to be a little bit of digestion time. Keep that in mind. If you go to the Fed website, you'll get it. Like we talked about, look for the statement, quantitative tightening, and then acknowledgement of inflation. And then we're going to sit and digest and go from there, baby. That's it. So good luck. 30 seconds. 30 seconds remaining. All right. All right, 20 seconds. If all you do. God bless you, man. Thanks you for all the donos. I'll give you your response in a little bit, baby. I'm waiting for it. So let's go. But God bless y'all and thank you. 10 seconds. All right. 4, 3, 2, 1. Boop. And we're off. Okay, they kept rates the same. Bonds are down for now. Wait, you'll see on the wire if there's headlines. Here it is. I'll take these. I don't have it on the website yet. Fed Reserve keeps unchanged, leaves discount, voted 12-0. Lack of further progress towards inflation target. So they acknowledged it, though. So that's a little hawkish there. Fed plans to slow runoff of balance sheet in June. So there it is. To 25 from 60? Remember I was telling you $15 billion. Yeah, that's a little bullish, honestly. So bad part, they acknowledged inflation up on the statement. Good part, quantitative tightening has been guided for June. I'd watch the bonds on that one. So honestly, F the stock market. The bonds may eat off of that headline if it's good enough. As long as Powell doesn't shit on it, that QT headline is very good for bonds. Fed to slow pace of balance sheet runoff in June. 25 billion from 60. I thought they were going to go to 45. So honestly, I need to double check that, but I think that's a little bit more bullish too. So here it is. Look, they said in recent months there has been a lack of further progress. This is the bad part. So this is hawkish, but then the runoff in June, where is it? Yeah, beginning in June 01st to roll over. They had a 25 per month, bro. That's crazy. So June, but yeah, dude, you're getting less tightening. So not only is the Treasury starting to buy back bonds, but now literally Powell is holding puts till Powell answers. I mean, like I was saying, not a bad idea in the sense that you have one thing good, one thing bad. Powell and the Fed just acknowledge that progress has stalled now. So your latest in writing, they are not confident in that essence. So now, like we talked about, if that was going to happen, what Powell is going to say is going to reflect that. He is going to address what he just said right there. But the quantitative tightening thing is good. I don't know about tiebreak. It's hard. It's a toss-up. But I do think keep this in the back of your head because now whatever direction Powell's attitude goes, the market's going to use that as evidence to feed off of it. You know what I'm saying? So not bad, though. 25 billion cap compares with 60. Most bond dealers had expected it to be cut to 30. Yeah. So honestly, that's a little extra bullishness. Remember, I was telling you, I thought it was going to be 15. I thought it would go to 45. I think the median was 30, but it came in at 25. Traders see Fed rate cut most likely in November. He's going to say more. Literally, the statement is telling you that's about literally. He is going to talk about that. Yes, you are correct. So we just need to know if it's going to be extremely hawkish or not. Like I gave you, we know where the line is. So think about it. The two things I told you just happened from the beginning before this all occurred. You got your statement change, literally, quote, lack of further progress, and you got your quantitative tightening, and you got it by a bigger amount. So that's big. Those two right there. And so like I'm saying, if that's all in line, everything I told you about the press conference should still be intact. So he's most likely going to play that little data game, but we don't know, again, how far he's going to take it. So honestly, the market's not moving as much as other events. There's one thing good,
one thing bad in what we just got. Fed acknowledged inflation is not doing what they wanted it to do, but then they are saying that they're going to quantitative tightening, end it, or slow it down. Gold is on the high. I think gold is responding to the QT stuff and getting a bit off bonds. And is the dollar dropping? Yeah, dollar's probably, QT is killing the dollar a little bit too. UUP is a little bit down. It's not bad. That QT thing, I think, if without QT, this would have been a shittier report. So if they just acknowledged inflation and didn't bring up QT, I think we would have been dumping. So now, I don't think this move is permanent. Watch every 15 minutes. I think bonds are going to have a good day, and then just off QT, and then Powell has to give you the confirmation. 50-50. Here's the question. If you want to go bullish or bearish, you have to ask yourself, which is more bullish or bearish? Quantitative tightening or the Fed losing a little confidence in inflation? So low-key, I do think the QT is, I've said it, that has been bullish for months, and now it's finally happening. But I don't know what equities are their own little world. I'd say bonds, that's easy for now. But if Powell comes in, though, he could still kind of neuter this move more or less. Yeah, I mean, inflation really bearish. There you go. That's the it's not an easy question. It's not an easy question. That's why there's a reason this move is kind of small. We still got a little bit more with Powell, but you are going up. Dollar. I'm hyped for this one too. Yeah. He probably. Oh yeah, dude. I totally forgot we have jobs data. But he's not going to sound confident. That hit the statement. Remember, I was telling you, if they put that in the statement, that's an extra amount of hawkishness because he doesn't have to. Like, again, the last time you read a statement and said inflation was good. So they literally are putting in writing that, yeah, the progress has stalled. So, like, if you don't, like, he's going to talk about that in 20 minutes now, and it's going to sound like that. So, and then, but again, the quantitative tightening, if you're not familiar, that means the Fed is going to pretty much be buying a little bit of bonds, essentially, or they're going to stop selling and adding to the pressure that they've been doing. It's easing more or less. It's still tightening, but less tightening now than prior. QT, more long-term thinking. Yeah, I do. Bonds are coming down, though, so watch out for that. But I do think bonds are going to be the winner off of that. Because, again, that just means little by little, the bonds are going to have less government demand selling, and then hopefully that could turn into buying. Let's hope in Janet. Honestly, equity moves haven't been that crazy. So depending on the name, I mean, it's not too nuts. We're still at the top of the candle. Bonds came down, but remember, bonds are already up almost 1% into that. Watch the 2-year too. The 2-year is going to be way more sensitive. GLD. I don't know the dollar, though. So I think gold is benefiting off QT. But the only way that benefits is off of, I think, the effect from the bonds and the dollar. So right now, I only think gold got that pop off the dollar going down. I still don't know what the fuck is going on with gold. I want to see what Powell says, but that's why I was saying gold's tricky, man. It's very, very tricky because we don't know if it's the dollar. We don't know if it's the event. We don't know if it's China. We don't know if it's you, me. Who knows? So we'll see. Everything good? Nikki, how you living, baby? Good morning. Do you think he'll say that progress stall we're in the range to get to? Yeah, he will. He's going to keep the same plan, but like I was telling you, depending on his tone, if he wants to take it far or not, he could say the statement. He could say, yeah, maybe the dot plot's going to be a little lower, and then that's it. As long as he doesn't take it any further than that, that's cool. Maybe we'll move 1%. But the issue is if he starts saying no rate cuts or rate hikes, or if he says, yeah, well, maybe, we don't see the progress, but we're still very confident, then there you go. He's speaking in about 20 minutes. So I need to get all the feeds up.
Bop, 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 bop. Apple is bullish. Bitcoin above 58. That's another one to keep an eye out for. Oh, they don't have it. All right, we'll see. I have like 4. So I have 4 different feeds. I'm going to try to get you the fastest one. Because I don't know if you guys noticed. Last Fed meeting, our feed was like 30 seconds ahead. So hopefully we get lucky on that one today too. News and events. There it is. Okay. No, it's the old one. But yeah, 20 minutes. Nikki T, before risk are moving into better balance today. Risk have moved toward better balance over the past year. Oh, interesting. That's a very interesting comment. Nikki Timmerhouse bringing up some of the longer term there. As Chris highlighted, biggest news is the tapering. Basically, the statement came in as expected with the expectation of QT a bit more than anticipated. So not only did you get QT, it was more than expected. So that's your good part of today. The bad part is the acknowledgement. The big question now is what Powell signals about the Fed. 10-year hit their low of the session after headline, perhaps some reaction to the bigger slowdown in QT, but we're only down 5 basis points on the day. Importantly, the FOMC didn't change forward guidance at all. The guidance has a soft, implicit nod that the next move would be a cut by saying it won't reduce rates until it gets greater confidence. There's nothing that would be needed for a hike. Ira Jersey, he says, note the Fed may be preparing the market for possibility that ultimately mortgage runoff will be reinvested into treasuries. The Fed said it will reinvest any mortgage-backed security runoff over $35 billion into treasuries. That's unlikely to happen unless rates plummet, but does suggest once QT ends, it will not reinvest into MBS. And then Ira says the $25 billion cap on treasuries is $5 billion lower than we think the market expected, so somewhat less runoff than expected. Maintaining MBS was not a surprise. This has been an incremental positive for the time being. There's no indication of how long this slower pace of QT will remain. There's no indication of when QT will actually end. So that could buffet it. So the key takeaways, FOMC kept rate the same. They say in recent months, there's been a lack of further progress towards 2%. Statement repeats prior language saying FOMC does not expect rate cuts until it has gained greater confidence that inflation is moving sustainably towards 2%. Fed also tweaks other language to say that risks to achieving employment inflation goals have moved towards better balance over the coming years or the past year. Statement previously said risks were moving into better balance. Fed announces it will slow pace of quantitative tightening beginning June 1st, lowering the cap of amount of Treasury securities rolling off by more than half to $25 billion each month from $60 billion. Officials maintain the pace of runoff for mortgage-backed securities at $35 billion per month. Fed will reinvest any principal payments above the cap in treasuries instead of MBS, and decision is unanimous. Ta-da! So there it is, Chattadonia. There it is. All right. I love you too. Get a long term. Good. I know. I don't know why you don't love me. I'm here. I saved you, the country. Now it's a witch hunt. It's not a witch hunt. It's hunting for a mango orange. Screw you. It's like farming. It's like a mango. It's like a mango. Like a mango jewel pod. I don't know. Mango jewels. Are you going to unban those to get votes? I know. Sleepy Joe. Going to unban the jewel to get the college vote. Sounds like pandering. I don't even know what that means. Screw you. Where's Powell? Yeah, I got you, man. I got you. All right, Trump, thank you. I paid an ungodly amount for mango pods. I'm glad. Bittersweet, bro. Bittersweet. But that's it, man. I gave you guys the breakdown. We're waiting now. 15 minutes till Powell. I mean, the move is small. The bonds hold up off of the good news. The SPY, a little bit bad. Everyone's downplaying it, though, so far. So all the analyst comments I've read you as of now, that acknowledgement of inflation is not hitting as hard as some people aren't as worried. Some people, again, as I read you, some people are saying there's still the implicit idea of a cut next meeting. So, like, to be honest with you, we really need Powell to speak because there is still literally crackheads that believe what just happened still has elements of a rate cut in June or July. I'm not even kidding you. That's what that means. So in a weird way, people are still a little bit, but it's not as that acknowledgement, not as bad. So we'll find out. We'll find out. Entry points for us to start. We talked a lot of prices. We were saying like 69, 63, 55, or now if you're willing to average and work your way into it. Rate cut, good or bad for the market? Well, it depends on the broader situations. I mean, for now, people would like it in the short term as good, but we'll see. But thankfully, we don't have to worry about that today. Right now, we want to know what his plan is, but we're nowhere close to the rate cuts, and kind of how close or far away is what's going to determine how good or bad today is. Yeah, IWM will be another one that will be good for the event, so do not forget about that. Live. What outcomes? I think Powell is either going to be, he's going to be hawkish no matter what. He's going to address, especially after that statement, he is going to address lower rate cuts on the dot plot. And then it's only a matter if he's going to take you to town or not. But other than that, that's all I'm expecting. Like I said, if Powell wants to cross the line and start saying no cuts or rate cuts, oh, dude, it's going to be a shit show. But other than that, he should just acknowledge maybe one cut. Maybe he won't even tell you an amount. He'll just say less than the previous median or the dot plot. And then he's going to explain the quantitative tightening, and the market's going to like that. And then someone's going to ask him about Trump. And the market won't like it when he talks about inflation. I could promise you that. Because every time he does it, it's going to be he's going to be talking about that acknowledgement. It's going to sound bearish until it's there. And then again, somebody will probably lead into the thing. The statement said progress has recently stalled, but then the statement included the plan for quantitative tightening, the easing of it, which has been good. So one good, one bad. And like I told you, Wall Street, Bloomberg right now, they're downplaying the statement progress change, but otherwise, I'd say that was your bad news of it. The good news was the quantitative tightening. That was the very good news above all else. Starbucks 2-year low. All right, hike. Well, I have a picture, actually. Nobody... where is it? Yeah, here? So, like, nobody expects anything. These guys, it's all game. But everywhere, it's funny because we're just arguing about the details. We're arguing about the plan. You know what I'm saying? But everybody, every bank, every Fed member, everyone's unanimous in terms of what is expected. And like I said, we kind of had our idea of what was going to happen, and it's playing out like that. So far, a little bit of changes, but nothing has changed outside of where our imaginations got us to this point. So, man, we'll see. I'll make it sound scripted. It's not scripted, but we just got a lot of information. I wasn't saying all of that a couple of minutes ago. Like I'm saying, that statement, that acknowledgement, flowing in line with everything, we're getting an idea of how this is going to unfold. And then, I think we've listened to every single one of these. I think in my life, yeah, I've listened to every single one of these almost for the last 10 years.
Like every single one. Every single Fed, even from Janet Yellen to Jerome Powell. All right. All right, man. 10 more minutes. Dude, the reaction, tiny. So keep in mind, we were pricing in 0.95, and you're barely moving. You maybe moved less than a quarter off of this. I think you've moved 0.1%. It's calm because, especially with the QT, I think it's very calm. But that, like, Powell still can shift the tide either direction. So we have info. We got something, but it's still all a toss-up depending on that attitude your boy wants to take. So QT tapering, $20 billion a month from 60 is bigger than expected. Both JP Morgan and B of A expected the cap to have to 30. At first glance, Audrey Child Freeman of G10 Bloomberg. First glance statement brings dollar bears some breathing space as the language adjustment is not as hawkish as many have feared, though the reference about underwhelming inflation progress entertains a potential new layer of hawkishness at a later stage that contains dollar downside ahead of the press conference. Muted dollar reaction so far captures this well. The statement changed this tense of the line. The committee judges that risk to achieving its employment inflation have moved towards better balance over the year, suggests that progress has stalled but not reversed yet, so it appears that rate hikes are not on the table yet. Over in Tokyo, 3 a.m., you could bet they're going to go to their official desk right now, the Ministry of Finance. There's relief in the early minutes after the Fed statement. Yen is slightly stronger against the dollar. The new sentence on inflation not making progress its target is interesting to us. Ira Jersey says it may give Chair Powell the cover to note that the Fed will be on hold or potentially increase rates later if inflation was to reaccelerate. Such a comment in the press conference might arrest the knee-jerk Treasury rally. I feel you. I agree with that. So at least Ira Jersey is the only one on Bloomberg who's saying that statement you should that statement has a little bit of a punch, and I agree with that. So that makes me feel a little more comfortable. With no drama over today's actual rate decision, Fed delivered it another way, starting the taper QT beginning in June. We knew that was coming eventually, but this was obviously at the sooner end of the spectrum, and the amount of tapering is really quite substantial. The Treasury runoff falling from a maximum $60 billion per month to $25 billion, which you could construe dovishly. Certainly it means less Treasury paper hitting the street over the next few months than previously thought. In terms of communication, the Fed noted that the lack of further progress on inflation, but kept the language referring to future reduction on interest rates. That suggests the easing bias remains in place. Overall, this wasn't really as hawkish as it could have been, particularly given the tapering, though, of course, Jerome Powell will insist that that's a separate policy mechanism to rates. Yeah. All right, Chad. 8 more minutes. Again, barely moving so far. There's an eerily pressure waiting with your boy Powell right now. Hawkish is bearish. Hawkish is negative. Dovish is good, positive. Thanks for keeping it calm. It is calm. I mean, look at the market. You don't even have to trip out. I like the bonds, though. That QT is big. Oh, hey, cutie. No, quantitative tightening is huge, man. So I'm very, very excited about that. But your boy Powell still holds a lot of weight right now, and he's kind of sketchy. It's funny because, like I'm telling you, people are like, okay, it's hawkish, but not as hawkish. And then the bond people are like, okay, Powell might use this as cover. But at the same time, that QT is a little bit, it's a little bit bigger. So I'm surprised the crackheads aren't eating that up more. But we'll find out. With the initial comments from FOMC, easing bias remains. That's not enough to convince rate traders to boost their bets beyond 25 basis point a cut this year. Yeah, so Fed futures are barely even moving off this. Dollar going down. Pfizer's back at 27, bro. It came up. That hit round 2. Crazy. Someone's tone of voice is worth billions. Yeah. If they determine how much money costs, fuck yeah. Remember, he controls how much money costs. That's a wild statement. Imagine if you controlled how much all of the money in the world costs. So remember, he raises the price. If inflation or if rates are high, it costs more money for money. He changes the price of money. So yeah. That's worth balance. We'll see what he does. Again, the Fed futures, that still may be in play. Honestly, Fed futures are going to be really extremely sensitive while Powell is speaking. That's going to be crazy. But get ready, Chad. 5 more minutes. We are nearing here. Very minimal reaction. There's still a lot priced into the market. That's what makes it interesting. One good part, one bad part. Market is really focusing on the quantitative tightening, and that's it. Am I short? No. I don't have any short plays. I'm like down on a lot of upside plays and then down on bond plays. If you will go to the watch list on Monday or Tuesday, I went over like 2 months of plays or something like that, but I got a decent amount of exposure. Some good, some bad. And then I did get to take some profits too over the last couple of months. Tap, tap, tap. Tap in, baby. It's here, man. All right. I'm still trying to get all of these. I have every feed up, but they all look to be running at the same speed. It's the Fed. Oh. I think we might have one. Yeah, I already got a visual. Target acquired. I have a visual of the podium. SPY's starting to rip now. No, I should. There's a faster one. I know there's a faster one. All right, I have the 3 fast. I'm waiting. That's it. When he comes out, I will literally have the fastest one, I think. I might have got us an edge. I hope. All right, let me throw. I'm going to get up one of these. So that's the podium. Like I said, we have a visual. I might change it, though. Again, I'm going to compare which one's the fastest. I think I have a few of these. All right, we don't need that anymore. Two-minute warning. You guys hear that? 2-minute warning. All right, man. SPY's hitting a new high. So remember, quantitative tightening. I was just telling you, most of the market is trying to ignore the other stuff, but that is your good part. All right, Powell is coming on here in about 1 minute.
1 minute, Chatadonia. Okay. Oh. I just got a clip. Hold on. I'm like looking at I'm looking at like 6 feeds right now. This one may be the fastest one. Okay, that one's lagged. And then Pfizer, stop. Dude, it's going nuts. All right, Powell should be on 10 seconds. Game time. I'm just trying to see which one he walks out first at. What happened? Martin, quantitative tightening. That's your bullish catalyst. That's the only thing that's happening. And then everyone's getting ready for Pow Pow. He's a little late. It's been 30 seconds. We'll see when he hits the podium. I think last time it took him like a minute. He's been getting late lately. All right, I got the fastest feed. He's here. Got him, baby. I got it by like 10 seconds. This is it.
Good afternoon.
41 seconds till he got on.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially over the past year, while the labor market has remained strong. And that's very good news.
I will turn it up. Watch your speakers.
But inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward
Again,
better
you're going
balance
down.
over
He's
the past
reading
year.
the statement that acknowledged the
However,
inflation.
in recent months,
like I
inflation
told you,
has shown a lack of further
they're not
progress
going to
toward
like
our
that when they
2%
hear
objective, and we remain
every
highly
single time
attentive to inflation risks. I'll have more to say about monetary policy after briefly reviewing economic developments.
It's all pre-written.
Recent indicators suggest
So
that
the
economic
market's going to do
activity
its
has
move,
continued
but
to expand
realistically,
at a solid
this is
pace.
not anything new.
Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023.
My bad, I was trying to ban homie.
Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year and the jobs-to-workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected. Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier,
there you go,
readings on inflation have come in above expectations.
He just keeps reiterating it, and the market hits it down. And then when he says it's decent, it goes up. All pre-written, but bonds are taking a hit off that.
The current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate.
That sounded new.
We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided
this
at
is gonna be
today's
good.
meeting to slow the pace
I just made a
of
play
decline in our securities
TLT
holdings,
weeklies,
consistent with the plans.
Not
we
a
released
recommendation.
previously.
90 calls. I put $50, $100.
Treasury
QT Lotto,
will be lowered
not a
from the
recommendation.
current
Super
$60
risky.
billion per month
You
to
will lose money.
$25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities in the longer run,
Yeah, just a
we're
daily,
leaving the cap on
literally
agency
right above
securities
the weekly range
unchanged
if it
per
hits.
month, and we will reinvest any proceeds in excess of this cap in Treasury securities. With principal payments on agency securities currently running at about $15 billion per month, total portfolio runoff will amount to roughly $40 billion per month. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation
I've never heard him
back down to our 2%
do this
goal
so slow and
to
so
keeping
choppy.
longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
Okay, it's about to end. Questions are about to
We'll
start.
do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Interesting. Okay, so up about 0.5%.
Howard Schneider with Reuters. A question to follow up, if I could. Do you consider the current policy rate still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. And there are a few places I would point to for that. You can start with the labor market. So demand is still strong, the demand side of the labor market in particular, but it's cooled from its extremely high level of a couple of years ago. And you see that in job openings. You saw it, more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also look at we look at surveys of workers and surveys of workers and businesses and ask workers, are jobs plentiful, and ask businesses, are workers plentiful? Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess.
So I would say that we believe it is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that that the data will have to answer.
So as a follow-up, if inflation
Pardon me.
continues running roughly sideways as it has been, the job market stays reasonably strong, unemployment low, and expectations are anchored and maintained, would you disrupt that for
Expectations are not anchored?
Or anchored.
Or anchored.
Stable, roughly. Would you disrupt that for the last half point on PCE?
I don't want to get into complicated hypotheticals, but I would say that, we're committed to retaining our current restrictive stance of policy for as long as is appropriate, and we'll do that.
Gina. Thanks for taking our questions, Chair Powell. I wonder, obviously, Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her baseline outlook. I wonder if you see that as a risk as well, and if so, what change in conditions would merit considering raising rates at this point?
So I think it's unlikely.
Still, Powell just says still
that
restrictive,
the next
but I
policy rate
think the
move
market's
will be
just
a
running
hike.
off that.
I'd say it's unlikely. Our policy focus is really what I just mentioned, which is how long to keep policy restrictive. You ask, what would it take? I think we'd need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we're seeing, as I mentioned. But that's something like that is what it would take. We'd look at the totality of the data, answer to that question. That would include inflation expectations, and all the other data too.
Would that be like a reacceleration in inflation?
Well, I think, again, the test, what I'm saying is if we were to come to that conclusion that policy weren't tight enough to achieve that, so it would be the totality of all the things we'd be looking at. It could be expectations, it could be a combination of things, but if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
Thank you, Chris Rugaber at Associated Press. You didn't mention the idea that rates are at a peak for the cycle, and didn't mention the idea that it might be appropriate.
Yeah,
to
so
cut
Powell
rates
just
later
shut
this
down
year,
rate hike. That's why you're
as
running.
You have at previous press conferences.
That's
so
it.
Has the Fed sort of dropped its easing bias? Where are you standing on that?
So on, let me address cuts. So obviously, our decisions that we make on our policy rate are going to depend on the incoming data, how the outlook is evolving, and the balance of risks, as always. And we'll look at the totality of the data. So I think, and we think, that policy is well positioned to address different paths that the economy might take. And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater confidence that inflation is moving down sustainably toward 2%. So, for example, let me take a path. If we did have a path where inflation proves more persistent than expected and where the labor market remains strong, but inflation is moving sideways and we're not gaining greater confidence, well, that would be a case in which it could be appropriate to hold off on rate cuts. I think there's also other paths that the economy could take which would cause us to want to consider rate cuts, and those would be, two of those paths would be that we do gain greater confidence, as we've said, that inflation is moving sustainably down to 2%, and another path could be an unexpected weakening in the labor market, for example. So those are paths in which you could see us cutting rates. So I think it really will depend on the data.
He's talking rate cuts too.
In terms of peak rate, I think
again, I think that last
really
line
it's
was the big
question.
driver. Unlikely to hike
the data
rates.
will have to answer that question for us.
Well, and could you just follow on the path where you might not cut? Is that you mentioned that it would be inflation persistent? I mean, is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, we've set ourselves a test that for us to begin to reduce policy restriction, we'd want to be confident that inflation is moving sustainably down to 2%. And for sure, one of the things we'd be looking at is the performance of inflation. We'd also be looking at inflation expectations. We'd be looking at the whole story, but clearly incoming inflation data would be at the very heart of that decision.
So he ended it with inflation, but he just said weakening in labor market could spur rate cuts. Keep that in mind for Friday.
Tim Rose of the Wall Street Journal.
Nikki
Chair
T.
Powell, to what extent has the easing in financial conditions since November contributed to the reacceleration in growth? And do you now expect a period of sustained tighter financial conditions will be needed to resume the sort of disinflation the economy saw last year?
It's a great question.
I think it's hard to know that. I think we'll be able to look back, from down the road and look
He's
back
setting
and,
up Powell
and
a pitch to
understand
kill
it
us.
better. If you look at, let's look at growth. Really, what we've seen so far this year in the first quarter is growth coming in about consistent with where it was last year. I know GDP came in lower, but you don't see an acceleration in growth. I mean, the thought would be that financial conditions loosened in December, and that caused an uptick in activity, and that caused inflation. Presumably that's or tightening in the labor market. You don't really see that happening. What you see is economic activity at a level that's roughly the same as last year. So, what's causing this inflation, we'll have a better sense of that over time. I don't know that there's an obvious connection there, though, with the easing of financial conditions. In terms of tightening, you're right. I mean, rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and that's appropriate given what inflation has done in the first quarter.
You've said in the past that stronger growth wouldn't necessarily preclude rate cuts. I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was reaccelerating?
So I just want to be careful that we don't target wage growth or the labor market. And remember what we saw last year: very strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related supply side distortions and demand side distortions, and there's also monetary policy, restrictive monetary policy. So I wouldn't rule out that something like that can continue.
Dude.
I wouldn't give up at this point on furder things happening.
I
on the
did
supply
buy a
side,
daily. Fuck.
either because we do see that.
Yo, that was a daily, not a
still
week. I hate
report
TLT.
that there
You're
are
right.
supply
It is
side
a
issues
daily.
that they're
Expires
facing,
May
and also
1st.
even when the supply side issues are solved, it should take some time
up
for
by
that
1
to affect
penny, but
economic
damn.
activity and ultimately inflation. So there are still those things. So I don't like to say that either either growth or a strong labor market in and of itself would automatically create problems on inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course,
So is he saying that
we,
ECI
like
don't
everyone
matter?
else, like to see high
Market
wages.
might like that.
But we also want to see them not eaten up by high inflation, and that's really what we're trying to do is to cool.
Yeah, I
the
think you're
economy
dodging a bullet on
and-
this question.
and Work with
That could have been
what's happening
bearish,
on
and
the
he
supply
didn't.
side to bring.
He didn't feed into it.
To bring
So for
the
tone
economy back
analysis,
to 2% inflation.
Powell's
Part of
kinda
that
chill.
Will probably be
That wasn't
having
bad.
wage increases move down incrementally toward levels that are more sustainable.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. You talked about needing time to gain more confidence that inflation is sustainably moving back down to 2%. It's May now. Do you have time this year to cut 3 times, just given the calendar?
Good question.
I'm not really thinking of it that way. What we said is that we need to be more confident, and we've said, my colleagues and I today said that we didn't see progress in the first quarter, and I've said that it appears then that it's going to take longer for us to reach that point of confidence. So I don't know how long it'll take. I can just say.
No, it's a good question because he does.
When we get that
runway,
confidence, then rate cuts will be in scope.
He said, "No, I don't care." He said, "I don't have."
I don't know exactly when that will be.
And with hindsight, are there any signs that you
want.
can look back on now, looking at the reports from January or February or March, that suggested something more worrying than just expected bumpiness?
No. He's thinking.
Not really. What?
Yeah, bro, he's bullish.
So I thought it was appropriate to reserve judgment until we had the.
He just
full
looked up in the
quarter's
sky
data,
to think if anything worried him, and said,
so
"No,
take
I'm
a step
good."
back. What do we now see in the first quarter? We see strong economic activity. We see a strong.
Still more
labor market,
questions,
and we
but
see
generally,
we see 3 inflation readings.
He's not hitting as hard.
So I think you're at a point there where you should take some signal. We don't like to react to 1 or 2 months data, but this is a full quarter.
I agree.
And I think it's appropriate to take signal now, and we are taking signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence that we are on a sustainable path than a 2% inflation. That's the signal that we're taking.
Yeah, Mr. Chairman, if I could, Steve Leisman, CNBC, if I could follow up on that. What particular areas were sort of temporary or blips in the inflation data in the first quarter, and what's the dynamic by which you expect them to work out in the coming months and quarters?
Yeah, so we will, we will put the thing. We have put the thing under a microscope. I will say, nothing is going to come out of that that's going to change the view. I think that in fact we didn't gain confidence, and that it's going to take longer to get that confidence. But confidence, I just think you know the story. What's happened since December is you've seen higher goods inflation than expected, and you've seen higher non-housing services inflation than expected, and those two are working together to sort of be higher than we had thought. And there are stories behind how that happened, and I think my expectation is that we will, over the course of this year, see inflation move back down. That's my forecast. I think my confidence in that is lower than it was because of the data that we've seen. So we're looking at those things. We also continue to expect, and I continue to expect, that housing services inflation, given where market rents are, those will show up in measured housing services inflation over time. We believe that it will. It looks like that there are substantial lags.
0.95 is the expected move.
Lower market.
So you
rates
are
turn
now
up
where the market was pricing in for this morning.
And when it shows up for existing tenants or for in-housing services. So,
if I could just follow up, is there a bit of a contradiction in the idea that you are reducing quantitative tightening, which is sort of an easing, while you're holding rates steady at a restrictive rate to try to slow and cool the economy and inflation? Thank you.
I wouldn't say that, no. I mean, the active tool of monetary policy is, of course, interest rates. And this is a plan we've long had in place to slow, really not in order to, to provide accommodation to the economy, but to be less restrictive to the economy. It really is to ensure that the process of shrinking the balance sheet down to where we want to get it is a smooth one and doesn't wind up with financial market turmoil the way it did the last time we did this, and the only other time we've ever done this.
Interesting.
Boris from Bloomberg. 2 questions. First, simple one. Given the run of data since March, has the probability in your mind of no cuts this year increased or stayed the same? That's the first question. Second question. Chair Powell, you joined the board in 2012, and I'm sure you remember, as I do, what the jobless recovery was like. Lawyers, accountants, all kinds of highly qualified people who couldn't get jobs. And given your history there, I wonder if there's an argument for being more patient with inflation here. We have strong productivity growth. That's helping wages go up. We have good employment. And so it seems to me there's a lot of hysteria about inflation. I agree, it's, nobody likes it, but is there an argument for being patient and working with the economic cycle to get it down over time? Thank you.
So on your first question, I don't have a probability estimate for you, but all I can say is that, we've said that we didn't think it would be appropriate to cut until we were more confident that inflation was moving sustainably on 2%. We didn't get, our confidence in that didn't increase in the first quarter, and in fact, what really happened was we came to the view that it will take longer to get that confidence. And I think I think it's, the economy has been very hard for forecasters broadly to predict its path, but there are paths to not
September
cutting,
rate cut odds are coming back up now.
On the data.
So
in terms of the
little
employment
bullishness is
mandate,
feeding into rates, more rate cut odds.
If you go back a couple of years, our sort of framework document says that when you look at the two mandate goals, and if one of them's further away from goal than the other, then you focus on that one. It's the time to get back there times the times how far it is from the goal, and that was clearly inflation. So our focus was very much on inflation, and this is what we referred to in the statement. As inflation has come down now to below 3% on a 12-month basis, it's become we're now focusing the other goal, the employment goal, now comes back in to focus, and so we are focusing on it. And that's how we think about that.
Claire Jones, Financial Times. Thanks a lot for the opportunity to ask the questions. Just to go back to the answer before the previous one, it seemed to suggest that you think the likeliest path of inflation is one that's going to allow you to have a situation where rates are lower at the end of the year than they are right now. It would be good if you could just confirm whether or not that's a correct reading. And the Q1 GDP print has led to some to start mentioning the term stagflation with respect to the US economy. Do you or anyone else on the FOMC think this is now a risk? Thank you.
Yeah, I'm not dealing really in likelihoods. I think there are paths that the economy can take that would involve cuts, and there are paths that wouldn't. And I don't have great confidence in which of those paths. I think I would say my personal forecast is that we will begin to see further progress on inflation this year. I don't know that it will be enough.
You say multiple
sufficient.
paths. I don't know
that it
which
won't.
one.
I think we're going to have to let the data lead us on that. In terms of your second question was stagflation. I guess I would say I was around for stagflation, and it was 10%. 10%.
Yeah, he didn't mention hiking.
It was,
and I think the market's liking that. He's talking cutting
right now
or not cutting, but hikes are over.
And very slow growth. So right now we have 3% growth, which is pretty solid growth, I would say, by any measure, and we have inflation running under 3%. So I don't really understand where that's coming from. And in addition, I would say most forecasters, including our forecasting, was that last year's level of growth was very high, 3.4% in, I guess, the fourth quarter, and probably not going to be sustained and would come down. But that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level of growth.
There's your stagflation question.
And of course, with inflation, we will return inflation to 2%. And that won't be, so I don't see the stag or the inflation, actually.
I don't see the stag or the inflation. Damn, he's bullish. I don't know if you guys realize that's so far the general
The vice
tone
chair
so far.
of the FOMC said recently that he's willing to consider the idea that potential growth has moved up, and of course he's Mr. Potential Growth, our star. Do you share that view, and would that imply that maybe policy isn't tight enough?
So I think I would take that question this way. We saw a year of very high productivity growth in 2023, and we saw a year of, I think, negative productivity growth in 2022. So I think it's hard to draw from the data. The question is, will productivity run there are two questions. One is, will productivity run, persistently above its longer run trend? I don't think we know that. In terms of potential output, though, if that's a separate question. We've had what amounts to a significant increase in the potential output of the economy that's not about productivity. It was about having more labor, frankly, both through, in 2023, both through participation and also through immigration.
They should be asking him more
very
about
much
the QT.
like other forecasters and economists, getting our arms around what that means.
I'm surprised
for
we haven't talked about
potential
that more.
output this
It's
year
all
and
economy,
next year,
jobs, and it's the same
last year
topic.
for that matter too. So I think in that case, I think you really do have a significant increase in potential output, but you've also got you've got more supply. But those people also come in, they work, they have jobs, they spend. So you've also got demand. So it may be that you get more supply than you get demand at the beginning, but ultimately it should be neither inflationary nor disinflationary over a longer period.
Well, you said earlier that at this point you're not really considering rate increases. If growth is higher, but you're not considering rate increases, does that imply that you're more worried about causing the economy to slow too much than you are about inflation taking off?
It's a trap, pal.
No, I think we believe our policy stance is in a good place and is appropriate to the current situation. We believe it's restrictive. And our evidence for that I went over earlier. You see it in the labor market, you see it in inflation-sensitive spending, where demand has clearly come down a lot over the past few years. And that's more from monetary policy, whereas the supply side things that are happening are more on the supply side. So that's how I would think about it.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. So GDP growth is about 2%. Inflation, employment is about 4%. It feels a lot like a steady state, and we have 3% inflation. So if the data remains the same that you're seeing, and I know you said you don't see a rate hike, but it stands to reason that you would need a rate hike to get from 3 to 2% inflation. So was there any discussion about a rate hike in
Amazon's
today's
taking
meeting?
off now.
And are you satisfied with 3% inflation for the rest of the year?
Well, of course, we're not satisfied with 3% inflation. 3% can't be in a sentence with satisfied. So we will return inflation to 2% over time, but over time. And we think our policy stance is appropriate to do that. So if we were to conclude that policy is not sufficiently restrictive to bring inflation sustainably down to 2%, then that would be what it would take for us to want to increase rates. We don't see that. We don't see evidence for that. So that's where we are.
Was there a discussion about a rate hike?
Okay, bonds flipping while stocks are taking off
the
from here.
policy focus
That's the new
has been
development in the
on-
last 3 minutes.
Has really been on what
Top
to do
for the
about-
bonds, and then equity
about,
still going. Market just liking
holding
General
the current,
dovish Powell
the
still.
current level of restriction. That's really that's part of the
Cautioned on
policy. This is where
inflation,
the
but his
policy
answer is
discussion
he's
was
not.
in the meeting.
I wanted to
Nothing
follow
has
on the
changed,
3%. Is there a
despite his
time frame
lack
of
of
persistent
confidence.
inflation that would trigger a rate hike?
There isn't any rule. You can't look to a rule. These are going to be judgment calls. Clearly, restrictive monetary policy needs more time to do its job. That is pretty clear based on what we're seeing. How long that will take and how patient we should be, it's going to depend on the totality of the data, how the outlook evolves.
Victoria Guida, New York Times.
Hi, Victoria Guida with Politico. You've talked about your commitment to being apolitical and nonpartisan, and I was just wondering, given that it's an election year, is the bar for rate changes higher close to an election? And similarly, is there a significant economic difference between starting to cut in, say, September versus December?
So we're always going to do what we think the right thing for the economy is when we come to that consensus view that it's the right thing to do for the economy. That's our record. That's what we do. We're not looking at anything else. It's hard enough to get the economics right here. These are difficult things, and if we were to take on a whole nother set of factors and
it was like
use that
half
as a
the
new
Trump
filter,
question.
it would
It was
reduce
close.
the likelihood we'd actually get the economics right. So that's how we think about it around here. And we're at peace over it. We know that we'll do what we think is the right thing when we think it's the right thing, and we'll all do that. And that's how everybody around here thinks. So I can't say it enough that we just don't go down that road.
Sounded like it was
If
gonna
you go
lead
down
into
that
it,
road,
but
where
it
do you
didn't.
stop? And we're not on that road. We're on the road where we're serving all the American people and making our decisions based on the data and how those data affect the outlook and the balance of risks.
And then is there a significant difference between, whether you start in, say, September versus December? And
There's a significant difference between an institution that takes into account all sorts of political events and one that doesn't. That's where the significant difference is. And we just don't do that. I mean, you can go back and read the transcripts for this is my fourth presidential election here. Read all the transcripts and see if anybody mentions in any way the pending election. It just isn't part of our thinking. It's not what we're hired to do.
That's a strong
If we start down that road,
clap on it.
I don't know how you stop. So
I think it bothers Powell, unfortunately. That was a strong little clapback at that.
Thank you, Chair Powell. Question about the labor market. You've mentioned a few times that the labor market is normalizing. Certainly today's JOLTS data suggested that things are kind of getting back to pre-pandemic levels. One thing that hasn't normalized is wage growth, which is still quite a bit stronger than before the pandemic. I wonder if you can share your analysis of why that's happening. Is it a lagging indicator or something else going on?
So I think if you go back to where wages peaked, wage increases peaked a couple, 3 years ago, essentially all wage measures have come down substantially to that. But they are not down to where they were before the pandemic. They're still roughly a percentage point higher. And we've seen pretty consistent progress, but not uniformly. And you'll note the ECI reading from Tuesday was expected to have come down, and essentially it was flat year over year, I think, roughly. So, yeah, I mean, that part of it is bumpy. And again, we don't target wage increases, but in the longer run, if you have wage increases running higher than productivity would warrant, and then there will be inflationary pressures. Employers will raise prices over time if that's the case. So we've seen progress. It has been inconsistent, but we have seen a substantial decline overall. But we have ways to go on that.
Scott. You were Nancy. Nancy, sorry.
What is happening?
Hey, Chair Powell, Nancy Marshall-Genzer from Marketplace. You mentioned consumers, and consumers are feeling the weight of interest rates right now. Mortgage rates are up, as are rates for car loans, credit cards. People looking to borrow are very discouraged. That's reflected in their views on the economy. What would you say to them?
Well, the thing that hurts everybody, and particularly people in the lower income brackets, is inflation. If you're a person who's living paycheck to paycheck, and suddenly all the things you buy, the fundamentals of life go up in price, you are in trouble right away. And so with those people in mind in particular, what we're doing is we're using our tools to bring down inflation. It will take some time, but we will succeed, and we will bring inflation back down to 2%, and then people won't have to worry about it again. That's what we're doing, and we know that it's painful and inconvenient, but the dividends will be paid will be very large, and everyone will share in those dividends. And we've made quite a lot of progress if you can think about it. I think headline core PCE peaked at 5.8, now it's headline peaked at 7.1, now it's at 2.7. Don't want to get that wrong.
No, you don't. Quick follow-up. Are current interest rates really doing that much, though, to fight inflation right now for those consumers?
Yes, I mean, I think that restrictive monetary policy is doing what it's supposed to do, but it's also, in this case, unusually working alongside and with the healing of the supply side. That was different this time was that a big part of the source of the inflation and the reason why we're having this conversation is that we had this supply side kind of collapse with shortages and bottlenecks and all that kind of thing. And so this was to do with the shutting down and reopening of the economy and other things that really raised demand. So many factors did that. So I think now you see those two things working together, the reversal of those supply and demand distortions from the pandemic and the response to it, along with restrictive monetary policy. Those two things are working to bring down inflation, and we've made a lot of progress. Let's remember, how far we've come. And we have a ways to go. We've got work left to do, but we're not looking at the very high inflation rates that we were seeing 2 years ago.
Courtney Brown from Axios. Thanks for taking our questions, Chair Powell. I wanted to follow up on something you mentioned earlier on housing inflation. There's kind of been this long-awaited disinflation in shelter that still hasn't arrived.
He hasn't talked about
so I guess two
commercial real
questions.
estate
How do you explain
or China.
the substantial lags between some of the private sector data we're seeing
one more thing you haven't
and
brought up,
the government
or
data?
banking.
And
Didn't even
how
talk about the
confident
recent
are
bank
you
clap.
that rents will be helpful on the inflation front in the coming months?
So essentially, there are a number of places in the economy where there are just lag structures built into the inflation process, and housing is one of them. So when you have
bonds came down.
When someone
this is the, like I
goes
said,
to-
from
a
that
new
top,
person
and then
goes to rent
markets
an
a little
apartment,
bit above what we priced
that's
in.
called market rent, and you can see market rents are barely going up at all. The inflation in those has been very low. But it takes, before that, they were incredibly high. They sort of led the high part. So what happens is those market rents take years, actually, to get all the way into rents for tenants who are rolling over their leases. Landlords don't tend to charge as much of an increase to a rollover tenant for whatever reason. And what that does is it builds up a sort of an unrealized portion of increases when there have been big increases. And what happens is, it's complicated, but the story is it just takes some time for that to get in. Now, I am confident that as long as market rents remain low, this is going to show up in measured inflation, assuming that market rents do remain low. What will be the exact timing of it? I think we've learned that the lags are longer. We now think significantly longer than we thought at the beginning. And so confident that it will come, but not so confident in the timing of it. But yes, I expect that this will happen.
Thanks.
Nick Jasinski.
Thank you, Chair Powell, for taking the questions. This is Nicholas Jasinski from Barron's Magazine. It seems that over the past 3 or 4 years, economies and central banks in developed markets at least have been on more or less the same trajectory, easing during the pandemic, fighting inflation with restrictive policy on the way out. Feels like that may be ending in 2024 based on some of the economic data from Europe and the US and Japan and statements from those central banks as well. So my question is, what considerations or risks does a period of more divergent global economic trajectories and central bank policies present for the FOMC?
So you're right. I think that may happen, and you know that we all serve domestic mandates, right? So I think the difference between the United States and other countries that are now considering rate cuts is that they're just not having the kind of growth we're having. Their inflation is performing about like ours or maybe a little better, but they're not experiencing the kind of growth we're experiencing. So we actually have the luxury of having strong growth and a strong labor market, very low unemployment, high job creation, and all of that. And we can be patient, and we'll be careful and cautious as we approach the decision to cut rates, whereas I think other jurisdictions may go before that. In terms of the implications, I think
slip that in there. Other people go before.
Obviously, markets see it coming. It's priced in now, and so I think the markets and economies can adapt to it. And I think we haven't seen, in addition for the emerging market economies, we haven't seen the kind of turmoil that was more frequent 20 years ago, 30 years ago. And that's, I think, partly because emerging market countries, many of them have much better monetary policy frameworks, much more credibility on inflation. And so they're navigating this pretty well this time.
That was a weird that whole question and answer. I'll take it, Powell. But
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You sort of backed away from the notion that the economy would need to encounter pain for inflation to come back down. But given sticky inflation data in the first quarter, can disinflation still happen along a relatively painless path for the economy, or is some softening in the labor market and the economy likely needed to bring inflation back down?
So you're right. I think we thought, and most people thought there would have to be probably a significant dislocations somewhere in the economy, perhaps the labor market, to get inflation all the way down from the very high levels it was at the beginning of this episode. That didn't happen. That's a tremendous result. We're very, of course, gratified and pleased that that hasn't happened. And if you look at the dynamics that enabled that, it really was that so much of the gain was from the unwinding of things that weren't to do with monetary policy, but the unwinding of the distortions to the economy, supply side problems, and also some demand issues as well. The unwinding of those really helped inflation come down. Now, as I've said, I'm not giving up on that. So I think it is possible that those forces will still work to help us bring inflation down. We can't be guaranteed that that's true, though. And so we're trying to use our tools in a way that keeps the labor market strong and the economy strong, but also helps bring inflation back down to 2% sustainably. We will bring inflation down to 2% sustainably. We hope we can do it without significant dislocations in the labor market or elsewhere.
And speaking of dislocations in the labor market, in terms of cutting, you said if there were weakness in the job market, that could be a reason to cut rates. So if the unemployment rate were to tick above 4%, but inflation not back down to your 2% target, how would you look at that? Would the unemployment rate popping back above 4% catch your attention?
I said an unexpected weakening is the way I characterize it. So, and I'm not going to try to define exactly what I mean by that, but
so only in the event of economic collapse.
Meaningful and get our attention and lead us to think that the labor market was really significantly weakening for us to want to react to it. A couple of tenths in the unemployment rate would be.
He's such a lawyer.
Would probably not do that, but it would be a broader thing that would suggest that
weakening, unexpected,
that it would be appropriate to consider. Cutting. I think whether you decide to cut will depend on all the facts and circumstances, not just that one.
Chair Powell, thanks for taking the question. Kyle Campbell with American Banker. You've said that broad and material changes are needed for the Basel III endgame proposal, and you've mentioned that a reproposal is something that's on the table. As you've had more time to sort of sit with the public commentary, process that, and understand the options available to you, do you have a better sense of whether a reproposal will be necessary? And do you have a timeline in mind for when some sort of movement will be made on that front, either a reproposal or a move to finalize?
So let me start by saying that the Fed is committed to, completing this process and carrying out Basel III endgame in a way that's faithful to Basel and also comparable to what the other large comparable jurisdictions are doing. We haven't made any decisions on policy or on process at all. No decisions have been made. I'll say again, though, if we conclude that reproposal is appropriate, we won't hesitate to insist on that.
And then do you need to resolve issues with the capital proposal in order to advance other parts of the regulatory agenda, or do you expect to continue to make progress on those other agenda items?
There's no mechanical rule in place there, but I would say that the Basel III process is by far the most important thing, and really is, I think, occupying us at this time in terms of what we're moving ahead with.
Let's go to Mark for the last question.
Last question.
Thank you, Mark Hamrick with Bankrate. Mr. Chairman, what can you tell us about the approach that you take with your role in the sense of trying to achieve consensus, which you recently identified as a priority, while allowing for a range of views or even dissent? We don't see many dissenting votes in the official statements, even when more spirited discussions are noted in the minutes after the fact. How do you avoid groupthink and avoid a higher risk of a policy mistake? Thank you.
So I think if you listen to, and you all do, listen to my 18 colleagues on the FOMC, you'll see that we do not lack for a diversity of voices and perspectives. We really don't. And it's one of the great aspects of the Federal Reserve System. We have 12 reserve banks around the country where they have their own economic staff, not the people who work here at the board. They're different people, and so each reserve bank has its own culture around monetary policy and its own approach and that kind of thing. It guarantees you a diversity of perspectives. So I think that the perspectives are very diverse. But and in terms of dissents, we have dissents, and you know, a thoughtful dissent is a good thing. You know, if someone really makes you think, that kind of thing. But all I can say from my standpoint is I listen carefully to people. I try to incorporate their thinking, or do everything I can to incorporate their thinking into what we're doing. And I think many people, if they feel that's happening, you know, that for most people, most of the time, that'll be enough. But I'm not. I mean, it's not, you know, frowned upon or illegal or against the rules or anything like that. It just is the way things come out. And I mean, I think we have a very diverse group around the people. Frankly, more diverse than it used to be in many dimensions. More diverse from the obvious, you know, gender and demographic ways, but also we have more people who are not PhD economists. So we have people from business and law and academia and things like that. So I think you actually do have quite a good diverse perspective. I think all of us read these stories about a lack of diversity, and we look around the room and say, I don't understand. I really don't understand what they're talking about. So, but I get the question though. Thank you very much.
Damn. What an ending! What an ending, Powell. Yeah, I don't know what they're talking about, but I get the question. My goodness, but Chattadonia, I mean, I really think Friday now is going to be a little bit more wild, but dude, the market is taking this as a surprise Powell dovishness, bro. He was not, dude, think about it. We were just talking about how he had the tone shift and how they acknowledged the inflation, and dude, he didn't even talk about the dot plot. He was real big focus on this soft landing. He did not say he shot down anything that had to do with rate hikes. It just literally cut or stay. Like literally, even the bonds gate, bro, you don't think it's weird? There was only one question on quantitative tightening, and they just made a bigger than expected move. And right now, that's why I think the bond market so far, I mean, you do have a weird bullishness from Powell, but we are just moving as expected, even though a couple of unexpected things happen. So it's pretty weird there in that sense. And then there's a couple of things he didn't talk about. He did not bring up China. He did not talk about commercial real estate. When he was talking about real estate prices and rents, that was about residential real estate. And then he didn't talk about nobody brought up a question about the recent bank failures or the banking regulations. They brought up Basel III, but not that. And then I'm an asshole. They didn't even bring up Trump. They didn't even bring up any of that. So I don't know, man. Yeah, they didn't even bring up Japan. Dude, I'm still kind of like low-key shocked about not even bringing up the QT as much, but Chattadonia, unfortunately or fortunately, it was just Powell being the same old dove, bro. That's it. He's dovish. I mean, I say unfortunately because we all priced in a more hawkish Powell, and you got a little bit of that on the statement, but then you got a little bit of easing on the QT, and then he comes in, and then he's not that's it. I don't know. Yeah, I don't know. Yeah, well, maybe we should blame the journalists because they were the ones to ask the questions. There were some good questions in there. I can't hate that much, but like I'm saying, dude, there was a lot of. I mean, considering we didn't get to hear from him since March, and everything, there was a lot of unanswered or just topics that did not get brought up. But the main thing, quantitative tightening, they're planning that for June. That is easing. Powell is, and maybe you should respect it. I don't know. Maybe this is our problem, and maybe we're just a bunch of crackheads, because at the end of the day, it's Powell giving a acknowledgement towards what happened with the data, but homeboy is just not changing his plan, let alone his tone at all. He's just said he's acknowledging it. That's it. He acknowledged what happened in the last month and a half, and nothing else is changing. That's it. He's saying, yeah, I see it. It happened. He didn't go back to this is what we expected, but he said there's multiple paths, and we're doing this, and I'm still thinking it's going to come down, and that's what we're confident on. But it was borderline the same thing, and like I'm saying, I didn't get as many questions. No rate cuts. That's not bad, but the rate hikes are off of the table. I was telling you guys about that earlier, but like I really think by the end of it, Powell made it very clear that there's no rate cut or rate hike discussion. This is just stay here or go lower.
That's it. That's the only thing Powell cares about. And unless the job market or inflation unexpectedly goes higher or lower, then that's it. You misheard? Maybe I did. We'll find out if I did or not, but I think I was listening intently. And I have all of the quotes, so every single one. I mean, I'm reading a lot of stuff too at the same time. But I do think I captured most of it. And again, a lot arrived on the statement. The quantitative tightening we only got a little bit of inclusion on that. But no, I think he's dovish. I think he was the same. I think it was exactly the same. Maybe a little more hawkish, but compared to the expectation we had leading into this, oh no, he did not. It did not match. It was like a chihuahua, a lot of bark, but there was no bite there at all. I think the bonds were up still. That's the weird part. They disagree from going higher than where the market priced in. So technically the bonds are holding what was priced in, but they're still a little hesitant. And again, I think we only had one question. The one thing that was really easing and better for the bonds, I mean, he briefly touched on it, said this is what we're doing. We don't, and he didn't give a full explanation of when it's going to end. It kind of like the Bank of Japan stuff. There wasn't really full guidance on it, but at the same time, that was your real dovish driver besides Powell not hitting you with the hammer. He acknowledged things realistically that were happening, but it did not shift into a hawkish view or a flip-flop or change in this plan that he has been on already. Well, I think there's a couple things on the table, though. Maybe unexpected weakness in jobs I would look out for. It seems external events are the only thing. Otherwise, the rates will stay high. And Powell is going to play this game, but it seems like they're slowly trying to address the external, but they can't control it. And that's about it. No stag, no inflation. That was a weird question. The one question I kind of was weirded out by, Powell said that this time around they did not cause global volatility. And he said the emerging markets had more credibility for inflation. I went, huh? But that's what he said. And he said that they didn't cause any instability. And he said that they were better handled and that's why, they'll probably adjust at their own time frame, maybe even ahead of Powell. I said, damn. The QT shift, isn't that inflationary? Kind of. I mean, I wouldn't call it inflationary. I would call it easing of monetary conditions. The quantitative tightening it's less tightening of policy. So it's going to be pretty much less bonds getting dumped by the Fed or anybody else. It's going to help support some of that bond market and in general just tighter conditions. Gunlock, my base case seems like one case this year. Don't see it coming in June. I see both sides. He was in fact dovish, but the setup is still bearish. Rate cuts pretty much not happening. He thinks he can get to 2, but he doesn't know. Still kicking the can, wait and see. Honestly, I like that take a lot. Because I feel you. I think the setup was worse than what happened there. But it was, he came in with a couple of surprises, but then at the same time, it's not. I agree. There's still a little can kicking element. Wait and see. But then, he's not as hawkish, let alone willing, it seems like, to turn that much hawkishness, or that much more hawkish. How does QT support the bond market? Doesn't it essentially add selling pressure? It does, So if you are familiar with what happened today, by mentioning QT, they are lowering the amount that they will be running off. So then that means they're slowing down the process and doing it by less money. So it's still tightening, but now they're starting to wind down the program. That's why it shifts more towards easing. It's more accommodative than restrictive, but still restrictive because it is QT. Well, Powell doesn't, Powell's election is in February, I think. Or it might be even 2026. So Powell and Trump and Biden, they don't have the same election schedule or appointment schedule. I'm holding the TLT. I played it daily. I fucked up on that. I thought it was a weekly for 2 cents. That's why I was like, hell yeah. But I did not know TLT offered daily contracts. So that was on me. But even then, though, they wiped out the other ones. Those other ones went from 5 to 30, and then those are at 1 cent right now. Oh, yeah, you have Apple. I forgot about that. Today you have Qualcomm. Oh, shit. We have 30 minutes. I don't know if you guys want to do a power run of earnings? I have the previews. I could go over them, but I can't do this. I don't think there's any way we could cover all of these like with the same time frame. Maybe we just go over the previews and then we just trust the preview for the pricing in because it has been accurate within 1 or 2%. So I don't know. All right, let me send out a stream alert. Let's get the guys in here, and we'll do it real quick. The ones that interest you. I mean, Qualcomm will probably be the only. It's going to be pricing in a lot, but it all just depends on their, how they moved in the history. There's a couple out there, but honestly, I mean, we've done good so far. Honestly, the two pre-earnings did bad. The other pre-earnings hit. All the other ones, I think we may have missed one so far. So I'm kind of down to burn a day, though. But let's see. So I'll give it like one more minute. We'll get the Chads in here. Let me give you some.
And so it really has virtually no market implications.
If you were on the Fed still, Bill, would you have voted for this type of thing? Or would you have erred a little bit more, as you were talking about before, about financial conditions easing too much to allow inflation to stay sticky for too long?
I don't think we're at this stage where, rate hikes are warranted. And so I would have agreed with the decision today. I think where I would have maybe differed from Chair Powell a little bit is I would just be a little bit more cautious about the confidence that he's got it.
Bill Dudley, thank you, sir. The former Fed, New York President. Bill, fantastic as always. Your equity market fades a little bit. We're up by 0.75%. Lisa, I appreciated the question at the end of the news conference. I'm not sure about the answer. Because effectively what the journalist in that news conference was asking is whether the lack of dissent spoke to a lack of diversity of thought on the FOMC.
Correct. They weren't asking about, what gender and
precisely,
racial composition is on the Fed. They were asking about pushback, intellectual discourse, and this question about whether anyone was saying, hey, wait a second,
correct that.
Maybe we shouldn't be so sure that
we were
long
talking
variable
about the
lags have
diversity
the same kind
on the board, not gender. So when Powell said it doesn't matter, that's what he was speaking about. That's it. They're like, oh, shit, we're about to get college protests, and now they're going to hate the Fed chair because he just said it don't matter, man. No. So we'll see. But Chattadonia, let's get these previews, man. I hope you guys are locked in and ready. We've gone through a lot today, baby. So thank you guys for keeping up. If not, I don't think you got to keep up anyway. You know what I'm saying? But let's do a speed run. We'll go through these previews. I'm going to try to get through them as fast as possible. I'm not going to do the same in-depth pricing in because we do not have enough time simply. And be careful. Don't gamble on any of these. If I do make a play, I will. But generally, we should be getting some good information that could hopefully prepare us for some of these. So that being said, number one is Qualcomm. And then SPY dropping. And this is, pay attention here because if it starts dropping, watch if bonds inverse. Bonds won't go down. They gave up the high, which was interesting. But now you are just under half of what was priced in for the day. So very interesting in that front, but you're giving up some of the Powell was supposed to be hawkish, but he was bullish, and then QT, but then they acknowledged the inflation. But Qualcomm, let's give it a daily chart. More life. All right, Qualcomm expecting $9.34 billion in revenue versus guidance of $8.9 to $9.7. Gross margin 56.5, operating margin 33.1, EPS $2.32 versus guidance of $2.20 to $2.40. Share repurchases $1 billion. QCT revenue $8 billion versus $7.6 to $8.2. QTL revenue $131 versus $1.2 to $1.4. Next quarter expecting $9.03 billion in revenue. Gross margin 56.1, operating margin 31.5, EPS $2.18, and share repurchases of $1 billion. Since last quarter, Qualcomm is up 11.7. SPY is up by 5.4. XLK is up by 1.7. Near-term options imply 6.9% move. Last 4 quarters, loss of 5, gain of 6. Loss of 8, loss of 6. Revenue has beaten 16 of the last 20, and EPS has beaten 18 of the last 20 with 2 in line. So pricing in about 6 or 7. That's decent. That's pretty much what it moves. Qualcomm might be like Amazon and AMD, but Qualcomm has surprised recently, though. And I'll tell you, if they do get a surpriser, up or downside, they might be able to kill. So let me just see real quick how many dollars it's pricing in. Just in case I don't make it home tonight, how much I earn is for the last time, baby. 167. It's like $10, $10.35. That says 10. We'll go $10. Easy. So $10 both directions. But yeah, I don't know. Google, Qualcomm, just like AMD, just like Amazon. Unless you think it's gonna surprise, that's really all that matters. Otherwise, it'll probably not go too far. But $10 priced in on Quali. Where's my next one? Oh, the next one is Devon Energy. The writing starts to get a little out of hand here. By the second preview. Why is market crashing? I think it's just a little bit of the normal movement, but I'd pay attention with the bonds. I think you got a little bit of everything generally. Acknowledgement wasn't good. QT was good. Powell is the same and dovish. And then remember, everything he said now, there is a follow-up that's going to happen. It's called Friday, the jobs report too. So you got to kind of factor that in. He said a lot about employment. And then too, we also had some data, but I think we're just going to start moving in a little bit wider of a range. And the range was already wide. So we'll see. I'll give you an update on the watch list. Devon. Oh, wait, never mind. I can't do this. Devon Energy is oil. I'm sorry for the off fossil finance. I'm boycotting it because I'm an environmentalist. Don't tell me I don't care about the environment. I don't do any oil earnings. What the hell is this? PGYC? Oh, Paycom. I just have bad writing. Paycom. So they're the next one. Revenue. Quarter 1, $495.9 million in revenue versus guidance of $494 to $497. Gross margin 85.2. Adjusted EBITDA $220.1 million versus guidance of $218 to $222. Adjusted EBITDA margin 44.4 versus guidance of 43.9 to 44.9. EPS $2.45. Cash from operations $145.6 million. Next quarter expecting $442.1 million in revenue. Gross margin 83.4. Adjusted EBITDA $159.1. Adjusted EBITDA margin 36%, EPS $1.66, cash from operations $109.8 million, full year guidance revenue of $186 billion to $1,885, adjusted EBITDA $720 to $730 million. Since last quarter, February 7th, they are down 5.1. S&P is up 2.1. XLK is down by 2.3. Near-term options imply 13.2% move. Last 4 quarters, loss of 2, loss of 38, loss of 19, and gain of 2. So revenue has beaten 18 of the last 20, EPS 19 of the last 20 with 1 in line. Forward quarter revenue guidance 15 of the last 19 quarters. Wow. Wow. That's crazy. This one's kind of interesting. It moves a shit ton when it surprises. Otherwise, it does nothing. You're pricing in less than half of its biggest moves this year. But then again, they got to kind of do something.
So Paycom, let's see if I could do that one real quick too. These ones are interesting. So we'll see what happens with them. Honestly, they'd have to just be, I wonder how the plays are. No weeklies, that'll be tough to price in. Looks to be about $25, 24.80, 25. Okay. So the next one, Paycom. Dude, I cannot read my handwriting. That's Carvana. I thought it said Luna. I was in a rush, man. I was in a rush. That's it. I had a political thing going on. Y'all were going crazy. I was like, all right, man, I'm trying to work real quick. And I have to ban y'all afterwards and then go back to this. So I don't know. It looked like Luna, but it's Carvana. Revenue expected to be $2.7 billion. Gross income $482.9 million. EBITDA $127.9 versus guidance of slightly above 100. EBITDA margin 4.7%. EPS loss of 67 cents a share. Full year guidance EBITDA similar to full year 23. Loss of $339 million. Expected to grow retail units sold. Price history since February 22nd. Carvana is up 62.1. S&P is up by 0.3 and XLY is down by 1.3. Near-term options imply 16% move. Last 4 quarters, gain of 32, gain of 8, gain of 40, gain of 24. So revenue has beaten 12 of the last 20. EPS has beaten 8 of the last 20. Short interest 30. And Chad, bonds did it 30 minutes ago maybe, 20 minutes ago. Back to when the data came out. SPY is getting to early candle now. So again, regardless of what happened, I encourage you to follow the data. I think equities are going to tweak out a little bit. And what I mean by that is that people are going to be following what just happened here today. Don't get too caught up in the swings. Remember, you were doing these dumbass swings before all of this even happened. Okay? So factor that in. You should walk away with what you took from Powell and what it meant to that broader situation and how that's going to feed into CPI. So that's Carvana. Honestly, it's pricing in lower than its biggest moves. I don't know if it'll hit 2 standard deviations, but Carvana, that's if you got it like that, man. That's if you got it like that. So next one is Fastly. This one's going to be interesting. They're expecting revenue of $133.1 million. Versus guidance of 131 to 135, non-GAAP gross margin of 58.2, non-GAAP operating margin of loss of 8.2 versus guidance of loss of 10.7 of loss to 7.4, EPS loss of 6 cents a share versus guidance of loss of 09 to 05, cash flow from operations 5.5 million, capex 6.2 million, free cash flow loss of 4.8 million, total customers 3.3 thousand. Since last quarter, next quarter they're expecting 140.4 million, non-GAAP gross margin of 58.8, non-GAAP operating loss of 4.6, EPS loss of 2 cents, cash flow from operations 14.4 million, capex 6.3, free cash flow 800,000, 3.3 thousand customers, full year guidance revenue 580 to 590, operating income loss of 20 million to 14, operating margin loss of 3.4 to 2.4, and EPS of loss of 0.6 to break even. Since last quarter, February 15th, they're down 20.3, SPY is down 1.7, XLK is down 2. Last 4 quarters, loss of 31, gain of 16, gain of 23, loss of 12. Revenue has beaten 16 of the last 19. EPS has beaten 14 of the last 19. Forward quarter revenue has beaten 9 of the last 19 with 1 in line. Forward quarter EPS has beaten 4 of the last 19 with 1 in line. Interesting. Let me go see real quick. They're a shitty company. When you look at those numbers, though, 195 looks to be priced in. Still a lot. That's literally more than 10%. So could have the juice maybe if you get lucky there, but it is a cheap stock. So puts, think about that, and then also think about shares. So that's Fastly. Next one up is Etsy. Again, SPY is almost back to pre-Powell or where we started. Bonds are already there. All right, Etsy at the bottom.
So Etsy, they're expecting revenue of $646.3 million, gross margin 70.1, EBITDA $168.5 million, EBITDA margin 26.1 versus guidance of 26, EPS 49 cents, GMS $3.03 billion, implies loss of 2.2 year over year versus guidance of low single digit range, ending active sellers 9.1 million, ending active buyers 96.75, next quarter expecting 643.6 million, gross margin 70.8, EBITDA 172.2, EBITDA margin 26.8, EPS 51 cents a share, and GMS of $3 billion. Since last quarter, February 22nd, Etsy is down 3, SPY is up by 0.2, and XLP is up by 1.5. Near-term options imply 10.9% move. Last 4 quarters, loss of 8, gain of 2, loss of 14, loss of 6. Revenue has beaten 18 of the last 20 quarters. EPS has beaten 15 of the last 20 quarters with 1 in line. Short interest is 13. No one wants to admit anything. Sir, you did not call any plays until after it dropped. I'm looking at your whole entire Chad Facts. All you have done is laugh and commented at people and told people to buy puts, and you did not buy a play or post a play until it dropped. You claimed you did, but you did not, sir. You said thanks for keeping it calm, but look it, and you said it, and you said buy puts, buy puts, buy puts. Market's going to drop, but you did not post your QQQs until we were down. You said 25 minutes ago, but you didn't, sir. So honestly, you're just talking. So unless there's a play, everything, like I said, forgive me for tolerating a lot as of lately, but dude, there's nothing there, man. So let's go. Post the play, and then otherwise stop. Like, dude, I'm trying to go over some info. Y'all need to get out the way. I need to get out the way. Oh, I don't even see her name. If I see her name again, you gone, though. Otherwise. But that's it, dude. Just post the play, man. Y'all, without a play, it don't mean anything. Again, there's a reason why I could get made fun of. This is a reason why people could say they love me and believe in me. Everything I talk about, I'm doing it. So I want the same out of all of you as well. Nah, man, no roasting. I'm just saying, though. It's just not. There was no play posted, man. And we have rules, so please. And honestly, the rule, I may have to put this in the rules. You guys got to. I don't like to hear comments about you when you say you guys, you, and talk about other people. Just try to talk about yourself, okay? About your play. What you believe, what you do. You know what I'm saying? But please don't talk about other people and put other things and that energy on others, you know? Amen? Amen. Otherwise, that's it. And I might not ban you. I'm just going to do like 24-hour bans every time if that's the case. But you know what I'm saying? Just let's go, baby. Stay in the game. Stay in the game. Etsy's pricing in 10. So honestly, I think that one's a little expensive because it's moved bigger than that only one time. But they are pinned at the bottom. So we'll see how it plays out. Next one, ALB, Albemarle. Etsy can move, but it's up there. I think the other ones were there. So we'll find out. All right, ALB net sales expected to be $1.29 billion, adjusted EBITDA $191.9, EPS 25 cents. Price history since last quarter, February 14th, ALB is up 9.7, SPY is up 2.4, XLB is up 8.5. Near-term options imply 7% move. So hopefully y'all pay attention. That's saying something. Because look at the last 4 quarters. Gain of 3, gain of 1, loss of 2, and then gain of 2. Why is it pricing in so much? Y'all feel me? That was with Caesars. We were wrong on Caesars, but it moved and then it came back. But in a weird way, if it's pricing more than when it like moved, that could be an indication that somebody, like the analysts, are probably hyped up on this for some reason. It's not all the time, but that's saying something. It doesn't mean make a play, but I think there's a little bit of hype behind this one. Revenue beaten 9 of the last 20 with 1 in line. EPS 16 of the last 20. Short interest 12%. Oh, I think it's because Albemarle, they had a big earnings last time. Remember we played those? We played the post earnings. Ooh, all right, wait, are those? I think those are all the ones for after hours. Let me see. I think that might have been it. Qualcomm. Oh, yeah, there's like Sonova. No, Albemarle is the last one, yeah. All right, the rest are all for tomorrow morning. Is there eBay and Upwork? I do not have. I did not know they were today.
I'd have to go back. Well, how much? We only got like 13 minutes. So let me bust these out. We're going to get to the morning ones right now. NVO is the first one. I don't think DoorDash is today. I might make a play, but honestly, even after that, 2 caught my attention, but like I didn't even like them. I just want to double check just so I don't feel like an asshole for not looking, if that makes any sense. Like I don't want to play it, but I feel like I would be lazy if I didn't look. So I want to make sure I look, but it's already I'm biased. I don't think it's going to be good. But NVO provided by the company, sales DKX Donkey Kong money 63.77 billion, operating profit 29.16 billion, margin 45.7, EPS $5.27 a share. Sales by segment, no one has time for that. Price history since last quarter, January 30th. They're up 22.0. Stocks are up 4.7. Last 4 quarters, gain of 4, gain of 3, loss of 1, loss of 3. Revenue has beaten 16 of the last 20 quarters. EPS has beaten 15 of the last 20 quarters with 1 in line. Oh, love you. Put it towards that earnings plays. Nope. Last time I did that, nope. I rebuke you. Flee from me. Flee from me. But that's NVO. Honestly, we would have hit that last time I went, but it expired and then went $10 in the money. So, honestly, NVO is a big one, and Eli Lilly already surprised, but they're pricing in a decent amount. CNQ. But I love you, Jesse. God bless you, man. Thank you. Let's go. But next one. Wait, is this energy? CNQ or is this solar? Oh, no, this is energy. Off fossil finance, Jay. Off fossil finance. Okay, next one is Peloton. Wow, Peloton. All right, Peloton expecting 720.8 million in revenue versus 700 to 725. Gross margin 42.2 versus guidance of 42.5. EBITDA loss of 24.6 million versus guidance of loss of 30 to loss of 20. EBITDA margin loss of 3.4 versus guidance of loss of 4.3 to loss of 2.8. EPS 36 cents a share loss. Connected subscribers 3.06 million versus guidance of 305 to 306. Expecting revenue next quarter 648.4 million. Gross margin 46.5. EBITDA 34.7. EBITDA margin 5.3. EPS loss of 22 cents a share. Connected fitness subscribers 3.01 million. Full year revenue guidance, revenue of 2675 to 275 billion. SPY going a little lower here. And watch, these are the Powell levels. Near-term options imply 20.2%. Peloton's down 40% on the last quarter. S&P up 5.6. XLK up 1.5. Stock has moved down 24, up 13, down 23, down 13. Revenue has beaten 13 of the last 18 quarters. EPS has beaten 5 of the last 18 with 1 in line. Short interest 16, forward quarter revenue 4 of the last 14 quarters. All right. 1, 2, 3, 4. These are the last ones I have. 5. We have to hurry. We don't have enough time. Because, again, I still want to go through some of the change just in case. All right. So we'll start backwards. I'm just going to power through. SPY's dumping too, man. That's it. You're going lower. Yeah, SPY is red. I mean, the crazy part, you were down by like 0.3. So actually, no. You're right above Powell still. But you moved the expected move and then came right back down. So literally, like, you've technically moved 2% in the day, all within the same 1%. You went down 0.3, up by 1.2, and then down by 1.2 right now. That's up 1%, down another. It's a lot going on. I don't know if Avis, if it's tomorrow morning or today, I don't have it. But that's not on my list. So Wayfair, honestly, I'm just going to skip down here to how they moved. They're down 5.3 on the quarter. SPY is up by 0.6. XLY is down 1.2. Near-term options imply 13.9. Last 4 quarters, gain of 11, gain of 4, gain of 16, gain of 16. They've beaten 14 of the last 20. EPS, 12 of the last 20 with 1 in line and short interest of 27.
Honestly, I think that's pricing in something appropriate. Next one is Cigna. All right. So Cigna up 10% since February. SPY's up 3.2. Healthcare's up 1.1. Near-term options imply 3.7. Last 4 quarters, gain of 5, gain of 3, loss of 4, and then gain of 7. Beating 18 of the last 20, and then 19 of the last 20. Okay, that's Cigna. Okay, the next one is Penn. These are all for tomorrow morning. SPY red now. So, I wanted to start from the top. They're down 24.3 on the quarter. SPY's up 2.3. XLY up 1.1. Near-term options imply 11.3. Last 4 quarters, loss of 14, gain of 14, gain of 9, loss of 14. They've beaten 7 or 12 of the last 20, and EPS has beaten 8 of the last 20. All right. So that's, who was that? Penn? Next one, Zoetis. I think Penn can move big, but low-key, 2 standard deviations, tough on that. So again, it can move 14, but to double that up, it hasn't done that, even though it's moved a lot. But then again, you got word to DraftKings. So the last one is Zoetis. They're down 18.8 on the quarter. SPY's up 1.9. XLV down 2.6. Near-term options imply 7.1. Last 4 quarters, loss of 7, gain of 6, gain of 5, break even. Revenue has beaten 16 of the last 20 quarters. EPS has beaten 15 of the last 20 quarters with 2 in line. So not bad. But Zoetis, again, is that compared to XLV? They're down a lot. That's the only thing that could be good for them, but they're kind of pricing in a lot. And you have to get really, really lucky on that one, man. All right, baby. I think that's it. Oh, my God. We only have 4 minutes. Fuck. All right, Trey, God bless you. And Carlos, I love you guys. I am on a time crunch right now, so please bear with me, but I appreciate y'all. Let's go, baby. I have 2 I'm going to look at real quick. I'm not landing the plane today. I do not have enough time. I'm sorry. I love you. If it crashes, don't worry. You could blame the Middle Eastern in me or Boeing. Oh, can I say that? I don't know. Let me check real quick. Who was it? It wasn't. Oh, why did I write down Google? I want to just see if Qualcomm. No. Oh, they're trying to scam you on those. Okay, we got that one. And then I only have one more. $355, 12, 24, 24. Oh, these are tough. No. Nope, didn't hit. I got one I want, but I don't think it's going to go through. Okay, well, I made one play. Not a recommendation. I eyeballed this, bro. I don't know if you heard me literally calculate it in my head. I'm eyeballing it, and I could just tell where the options are at. They, pushed it $5 out, but I think it's worth it. I grabbed a Qualcomm. So 2 standard deviations. If I could do it in my head, you could do it too, bro. All right. And then I want one more, but it's not filling me, bro. Oh, the other one just came back up. Shit. All right, I'll go for it. Come on, 1 second.
No, I'm going to skip it. I'll skip it, but I like the Cigna. The Cigna, two standard deviation downside. If that chain wasn't so messy, the idea for Cigna is good on the downside. No upside on that. That's it. So not a recommendation. Only play one Qualcomm, $20, 2 standard deviations to the downside. And then I like Cigna. Paycom, let me check that real quick. Paycom was interesting just because it's pinned. But those don't even have weeklies. That's actually... No, that one's worth it. May 17th. Paycom, stupid far out the money. 10 cents. Not a recommendation. That one's worth it, just in case. There's a lot of volume on it. Not hard to find. That's the only one. That's really far out, though. You don't have to buy that one. You could save yourself $10 if you want. That one's like a super value play. And then, like I said, if you have the budget, Cigna to the downside. I didn't make the play, though. And then, what's it called? Qualcomm 1 to the downside. Very small. But Chad, you only have 1 minute! Go, 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 go. Ladies and gentlemen, boys and girls. Oh, yeah. I should have told you. My bad. Oh, well, now you know. Honestly, I thought today should be Loud Noise Awareness Day because y'all think I joke about it when I don't give you the warning. So today you now get to see the real effects that happen. As you see, upon doing that immediately, y'all tweak the F out. You know, so 5, 4, 3, 2, 1. Ding 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 ding. Oh no, let's go, baby. Oh, Chatadonia. We did it. We made it. 7 hours in the books, baby. I don't care if you just got here or not. You're new. Oh, it don't matter. I need a good game in the chat right now. Let's go. Let's go, baby. Show you part of it. Show you really in the game. You got that positivity, baby. Let's go. Members, non-members, stream alerts. You made money or not. Don't matter. You learned something. You are in the game, baby. Cuervo. Oh, earnings already coming out. Qualcomm already out? Oh, Qualcomm. But God bless you. Drop those GGs, baby. Let's go.
Singing, I'm praising, my God is amazing. My dreams is accomplished, they're not complaining. They scheming, they plotting, but that did not faze me. Look like a homeless.
Good game, baby. Shout out to Twitch, the members, the non-members, the stream alerts, the people holding it down. Co-real estate, baby. Let's go, baby. Good game. CG, I see you too, Twitch. We are stronger as one. Way to hold it down, baby. Honestly, if you ain't get banned or timeout today, I appreciate you. And even if you did, baby, try again. It's all love. Welcome, baby. Welcome. GG, that's what I'm talking about. God willing, I'll see you tomorrow, baby. That's how you play. GG, bro. Good game. Oh, come on, Qualcomm. Need me to rock. You won't see me a lot. Monday through Friday, you need me, let's talk. Huh. Yeah, that's crazy. Qualcomm, honestly, that could lift some things up here with chips. It looks like they beat. So I only went with one put for $20. I should have grabbed the upside. But honestly, I think the calls were up there a little bit. Let me see where the results are. But good game, man. God bless y'all. I hope you had a good one. That is it. Actually, wait. Qualcomm's, it's on their company website. Easy numbers aren't out. But yeah, it's there. EPS 244 beats estimate of 230, 940 revenue, estimate 934. Then Sprouts coming. Oh yeah, bro, my donos. Now the market's closed, baby. Tyler Royke, let's help a subscriber start a career in real estate, baby. Take 10%, put it into a property. TTF Real Estate loves you, baby. Amen. Amen, baby. And shout out to Trey. Shout out to Tyler. We do have co-real estate, but y'all know the rules, man. Y'all know the rules. If y'all pick them, I am not picking it. I am not down. That's it. It's too much work for me. That's it. It's a lot of work dealing with the people they want. I want the free course. And honestly, y'all are in the trenches, you know? So I think y'all got to pick somebody out of the chat who y'all really think, because y'all know at this point who's really about it. Because honestly, I've turned on aggressive positivity, and literally, man, I've been turning up the heat. So the people who are type that are gonna follow through and not. You've got to see the people back out. You've got to see the people go through and change their lives. So I'm punting, man. I'm Jerome Powell. I'm punting to you. I'll say the data dependent, but God bless y'all, baby. I appreciate y'all. I missed 2 other donos. I know I saw Jesse in there. I know he tried to get me on there. I don't want to trade it, baby. Who else we got? Frankie, baby. And God bless you, Carlos. You there, big bro. We all count on for knowledge. Thank you, man. Hey, man, it's my pleasure. God, I get Starbucks for $20. That's inflation. Horna. Let's go, baby. Hey, man. Well, listen, how about this then? I mean, I'll be honest with you. I'll be very, very honest with you guys. I don't want to pick. I'm like, you know why? Because, like, dude, you see it. I need to get the heat up, baby. I want real work. I want real grind out of this, man. That's it. I'm bringing back old Josh, whether you like it or not. And it's just for real, man. Dude, I've offered so much of myself and my time, and we've given money, and we've given so much, and people say they want it, and then they don't do it. That's it. Y'all don't click on it. Y'all, you know what I'm saying? Y'all don't want the follow through. I'm just being literally 2 weeks ago, offered a job, remote job. We hired 6 people from the Chad. Within 4 days, one dude is about to close 5 G's off of it, on top of whatever he gets paid hourly. And then y'all ask me about it when I told y'all at the moment. So if y'all want me to pick, go to the Real Estate tonight. Otherwise, respectfully, y'all ain't saying shit. Like, you know what I'm saying? Like, for real, if Tyler or Trey don't know you, if you ain't not showing you could even click on a video and take time out of your day to be a part of it, then you don't want anything. Like, you know what I'm saying? Like, you just want free shit because someone said free shit. I'll give you a hug. I'll give you $1 if you want $1. You know what I'm saying? But don't waste anybody's time on it. But, like, for real, if you the type to go and hear info that I say and research it and look into it and not ask me the question 10 times over, but follow up with what you got, I would love to give you the course for free. And we would love to have you because you're going to be the one who's going to kill it. You know what I'm saying, baby? But otherwise, if you ain't hungry, I mean, I ain't going to force anybody to eat no more, baby. And that's it. And my door is open if you are hungry. If you are not hungry, all doors are closing. All doors are closing, my friend. Let's go, baby. Amen, amen, amen. That's it. That's all we got to do, baby. So God bless you all. I'm going to defer my giving away, but like I'm saying, y'all show up on that real estate tonight. It's pinned. Y'all like I'm saying, it's just like the people, someone is like, oh, it didn't work with my schedule. It's like, no one's going to meet your schedule. If you want it, you're going to get it. You want it, you're going to email. You want it, you're going to show up. If it's something you desire, you're going to chase it. If anybody has to chase you, you're going to give up and quit on it. So I hope you want it, baby. We will see you there tonight. But Chattadonia, that's it, man. I don't know. I got the Qualcomm earnings. I think there was Carvana. And, Etsy's dying. But, yeah. Honestly, these earnings weren't even that crazy. So I'm kind of like, it's kind of good, man. It's kind of good. And then Enovix. So again, tomorrow is going to be a lot bigger. No, yeah, it really got clapped there. Where's the real estate course? So you're on Twitch. You're lucky. If you wasn't on Twitch, I wouldn't have told you because you should be able to find it. That's what I'm saying, but it's on the YouTube channel. So if you go to youtube.com/the stock market, you'll see it pinned up there, or youtube.com/TTF real estate/live. That'll take you there at the moment, man. But I'm telling you, it's amazing. It's amazing what I've seen out of those guys. But like I'm saying, man, and I hope they're nicer than I am. And that's why I'm saying, bro, y'all just, if you want it, come get it. We're there. If you don't, like I said, I think it's time to close all doors. You know, amen. It's time to board, baby. It's time to board. But Chattadonia, that's all I got, man. That's all we have for the day. I think we're gonna wrap it up there. I'm gonna play some songs. Let me go through our earnings run. Give you some uncle, and then we'll go from there, baby. Amen. Amen. All right, man. All right. Thank you all again, baby. It's a cold, baby. All
All right, guys, listen to some blues riff and B. Watch me for the changes and try and keep up, okay?
Hello, how you doing? I'm that motherfucking guy. Had a call, I had a put. Now I'm Marty McFly. NQ/ES, get my pronouns right. If I'm throwing hands up and his finger to the sky, throw me in the fire, then I'm coming out alive. Boy, I've been here for a while. I don't need to take 5 years running. How the hell I hated, not inspired. Yeah, they headed for the Insta, but I do it for the life. Put it on my life. I don't think twice. Instinct on beast. Had to learn it to survive. If you think I'm cheap, you ain't give the right price. I would never love a lifestyle more than I love my life. Always been a boss, I don't never need a break. Always been on stars, you could put me with the greats. Big man, milk can, we could talk about the race. Zotan, Timarad, got it all in one place. All in one take, I don't want the bait. Shout out to my nephew, man, he got my whole estate. Shout out to my mama, she know I'ma keep the faith. And don't forget about my girl, so pretty like her face. Why they mad at me, talking about they fallacies. My life is fantastic, yours is just a fantasy. Head trick with the assets, I ended up with equity. Ain't fucking with you fascists, the ownership is set me free. And God too, don't forget how God move. Only need a little bit, that's the way that God prove. Fuck you ain't feeling it. Shake the dust from my shoes, living in this silhouette. It's hard for me to act rude. I am that dude, put him in a bad mood. Only time you see me out is if I'm buying bedrooms. I don't really stress, dude. Tell me what they get you. Like I'm eating now, I'm just trying to get the chat food.
Stop acting like you know me, homie, you ain't got the vibe. Capping for yeses, cause a demon need a rise. What's a lying to a secrets, I eat you to find the pride. Be careful the things you thinking you speaking, what's inside.
Money, 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 I don't give a fuck about it. 2020, homie, already had the bag without it. Hate to love it, you ain't even know the half about me. But I take a half and double that, I keep it 100, homie. On a minor P, it sound like money make them all involved. Don't see it, but they feel it, that's what happened when the landing hard. Sleeping while we eating, I don't know who should be more apart. Money is a servant, more worth is when treated as a god. Cold. Let it vibe, baby. There you go. I think there's still Carvana, but Etsy down, Enovix up. I guess eBay, bro. That wasn't on my list. I didn't have it, and they're trading lower. Damn, they're down 7. Adjusted EPS 125 versus 121. Revenue 26 versus 253. Active users 132 versus 131. And then they guided lower 249 to 254. Expectation 26. Oh, yeah, that one just came out. That's Marty McFly, baby. I'll give you a run it back. But here, before I run it back, let me ask you guys this. Do you have any... Oh, wow, Carvana, he's out. Whoa, 15. So, dude, they were only pricing in 13. And if they move double, like I was saying, I was like, I don't know if they're going to hit that 38, but it has an interesting history. Record net revenue, net income, $49 million, net margin of 1.6, adjusted EBITDA of 235, record 7.7 EBITDA margin, higher than all U.S. publicly traded automotive retailers in Q1. Record GAAP operating income of $134 million, and then total GPU per unit 6,432 plus 2,100 year over year. What? Damn. Bro, they're making 30% per car with car prices lower. That's pretty hot. But again, I'm trying to see how those numbers stack up. Net income $49 million, EBITDA 127. What did they do? Oh, dude, they doubled it. No, they blew it out the water. Bro, EBITDA 127 expected, and they guided almost, they doubled it. Literally 235, more than 100% almost, or just under 100%. GAAP operating income of $134 million. I don't have their operating income. And then, dude, GPU right here, yeah, 5,800. It came in at 64 or 6,400. That's crazy. That's what I'm saying. That's wild. How are they making money that much more per unit? They were about to go BK. Very interesting. Literally highest EBITDA margin of any automotive retailer this quarter. They're using that. No, they made 30% more than last year, but even then, that's still significant. Bro, I swear at one point they were losing money per car, or they were only making like $500. So that's it. You're up 32. That one could have been a 2 standard deviation hit. Literally, I think EBITDA, gigantic beat. Yeah, remember I was telling you, it's moved way more than that. So yeah, if it did surprise, it's gonna hit 2 standard deviations. You're already up there. You already are up 2 standard deviations right now. That GPU is not legit. It's definitely suspectedly high, but shit, I mean, that's a trip, man. They lying or selling cars. It's probably something with accounting, more likely than not. I bet you they're doing something messed up where they're counting maybe a tax credit, or they're probably, they're doing something. Yeah, they're the ADM accounting. It's probably something weird when it's all like there's something factoring into it. Otherwise, if that's pure, dude, like if that's pure like gross revenue from the car, like divided by amount sold, then I don't know, man. That's pretty wild. It's a good growth, and again, they killed the guidance on that. So I think even then their margin, dude, EBITDA margin 4.7, they did 7.7. They doubled up everything. So everything they were expected to do, which was already higher, they have doubled. They almost either up 90 or 100% on it. Yen, oh yeah, intervention spike. Nope, that's it. Hold on, it's doing it again. So literally, and bonds are not, unless the bonds are moving after hours. Remember, we just had Powell. Nope. Yeah, nothing's moving out. So get ready. Yen's almost up 1% right now, all just in Japan. So nothing, no other asset is moving in tandem. Yeah, it's 5 a.m. in Japan right now. Is this a Drake song? Yeah, you underestimated greatly. How much can it weaken? Oh, how long did it really take me? The part I love most, they need to carry trade more than they hate me. So I got everybody on safety. Huh? That's 5 a.m. in Japan, no? Okay. That one did not come out as smooth. I can load every central bank with bullets that fire backwards. You probably wouldn't even lose a central bank actor. They're making threats over the statements. But I'm laughing to the central bank. Oh, no? All right. J. Powell lifestyle. I'm just saying what he don't. Huh? Oh, okay. My bad. I got too into it. All right. That's crazy, though. That's another one. Add to the craziness of the day. I think tomorrow now is all going to be about Apple, but just don't forget, I really think Friday now just got loaded up just after everything he said here today. Did eBay bounce up or no? No, Etsy's down. Again, eBay earnings it wasn't bad. It was just slight guidance. They lowered the bottom end of their guidance range. Maybe Japan was dumping for cash. Maybe. I don't know, yeah, because it did start first. But then again, I do think Powell was kind of weird. Dude, Carvana, that's above 2 standard deviations already. That one's gone. So, again, that was a big beat. It was such a good beat. You guys are like, that's a scam. They beat so good, you're saying fraud. The last time that happened was NVIDIA. So, but I feel you. I feel you on that one. You're like, man, you're like, cap. Today was a weird day. It was just like, there was a lot, man. I told you, it was a powerhouse of a day. And sadly, it still leaves us a little bit of a hangover for tomorrow. My holdings, you could get a good update on the watch list, youtube.com/the trading fraternity. The Monday video, I recapped all of them. And that being said, actually, so Chad, before I give you another song or anything, and the yen is still going, do you have any questions that you would like answered and need answered? I could guarantee you an answer on today's watch list if you can give me a good question right now. The only one I have for today, my homie Drake just posted it. He said, Josh, before you go, what employment rate wouldn't be considered low anymore? So I thought that one was a good one, bro. It was a good one. So we will see. Carvana. But yeah, if you have any questions, you could email me them or let me know now, and I'll put it in there, man. What style house do I like? If you want that, I could put that on the watch list if you like. I could probably make it economic if you'd like. Maybe we'll keep that. It depends. If I don't get any good follow-up questions right now, that one's probably gonna make it. Okay. Is it a good time to load up on REITs? I think that's a great question because it's not a new question, and I think that's what will add to that discussion. Great one, man. I like that. Before you go, what caused that huge turnaround? We could talk about that. I think that's literally what everybody was asking today. So, amen. I think the answer may not be as good as people want, but I could get you an answer to that. All right. Any other one? Final ones? Explain what makes bonds go up and down. I've made a lot of videos on that. Unless you get like 100 mother effers in here to say, yeah, do that, I'm going to skip it. So I don't know. Oh, explain quantitative tightening. We could do that. That's a decent one. So quantitative tightening or explain bonds. That one, I don't know. Do that? I think so. I think that's very relevant to today. All right, word. Well, listen, if you have another one, for real, man, like I said, dude, it's if you really want an answer. And, like, no bullshit, no, like, in the middle of the day and like this. If there's something, I will give you the best of my abilities. I would love to answer it. If you send me a good question, man, email it to me, tradingfraternity@gmail.com. And that's pretty much it, man. That's it, man. Mm-hmm. Amen. All right, Chad. Well, I'm going to give you one. They wanted it, ran back. Apparently, a lot of people have not heard of Marty McFly. And then yen already dropped like 0.5% from that little top, or like 0.3, but it's tweaking.
All right, guys, listen to this blues riff and B. Watch me for the changes and try and keep up, okay?
Hello, how you doing? I'm that motherfucking guy. Had a call, I had a put. Now I'm Marty McFly. NQ/ES, get my pronouns right. If I'm throwing hands up and his finger to the sky, throw me in the fire, then I'm coming out alive. Boy, I've been here for a while. I don't need to take 5 years running. How the hell I hate it, not inspired. Yeah, they headed for the Insta, but I do it for the life. Put it on my life. I don't think twice. Instinct on beast. Had to learn it to survive. If you think I'm cheap, you ain't give the right price. I would never love a lifestyle more than I love my life. Always been a boss, I don't never need a break. Always been on stars, you could put me with the grace. Big man, milk can, we could talk about the rate. Zotan to my rag, got it all in one place, all in one take. I don't want debate. Shout out to my nephew, man, he got my whole estate. Shout out to my mama, she know I'ma keep the faith. And don't forget about my girl, so pretty like her face. Why they mad at me, talking about they fallacies? My life is fantastic, yours is just a fantasy. Head trick with the assets, I ended up with equity. Ain't fucking with you fascists, the ownership is set me free. And God too, don't forget how God move. Only need a little bit, that's the way that God prove. Fuck you, you ain't feeling it. Shake the dust from my shoes, living in this silhouette. It's hard for me to act rude. I am that dude, put him in a bad mood. Only time you see me out is if I'm buying bedrooms. I don't really stress, dude. Tell me what they get you. Like I'm eating now, I'm just trying to get the chat food.
Stop acting like you know me, homie, you ain't got the vibe. Capping for yeses, cause a demon need a rise. What's a lying to a secrets, I eat you to find the pride. Be careful the things you think and you speaking and what's on side.
Money, 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 I don't give a fuck about it. 2020, homie, already had the bag without it. Hate or love it, you ain't even know the half about me. But I take a half and double that, I keep it 100, homie. On a minor P, it sound like money make them all involved. Don't see it, but they feel it, that's what happened when the landing hard. Sleeping while we eating, I don't know who should be more apart. Money is a servant, more worth is when treated as a god. Cold.
That's it, man. You could get it on Spotify, baby. You could get it on Spotify. So, Chattadonia, man, that's it. I wish we had time for PHILO today. You know I got a lot of good PHILOs for you, man. I do. I have a crazy PHILO. Low key, man. I could tell you this during PHILO. I was even thinking about, dude, I have a PHILO, man, that, like, I never thought I would do this. Like, I really never thought. I was like, man, you know what? I have a lot of other ones. It's crazy, man. There's a lot of stuff we could talk about. But there's one where, like, it won't even be after. This one's going to be, like, for my PHILO, like, war. Like, this isn't for everybody. Like, there's a PHILO I have, man, and it's very mind-blowing, but, like, it's not, it's too crazy. It's too crazy, yeah. So I don't know. I may have to do a after hours PHILO for some people. Maybe on a Sunday, maybe on a Saturday or something. I don't know. It's different. It's very, very different, but very good. And man, honestly, I love all of you, bro. For real. I know even if I ban you, and I know some of y'all, you're like, what? And again, bro, I'm gonna fight for peace, and I hope y'all realize that, man. And I hope you feel me on it, bro, because, dude. I feel like I have been tricked. I feel bad. I let things slip in other ways, and I'm talking about, the certain things that I held to, and I got tricked in humbleness because, bro, I'm telling you, by fighting for peace, I'm not going after you, bro. I am not trying to beef with nobody. I ain't trying to get anything of that nature. But like, I realized, like, because someone said, they're like, you emotional. I'm like, no, I was more emotional trying to like fit into a box of what somebody is trying to make me be, and like a fake humble, and trying to a fake humble of being tolerant of things that were not good for me. That's it. I don't know. That's why I'm like, yo, man. So I hope you feel me, bro. I'm humble in spirit, and I feel poor in spirit, for real. You know, to the point where it's like, damn, I weep over the things that I have not held up to in that sense. And that's why I'm like, you know what? I do. That's why I'm not going to feel, I hope you don't misconstrue it as being unhumble for fighting for my peace. But then again, I'm not going to fall for that trick again. But I was tricked, and I do feel that way. And that's why I'm like, you know what, man? It's amazing. And God is good, bro. And that's why I said, y'all, I love you. I really do. And you know the work I will put in. And I know what I'm about to do too. And I know what you are too. But at the same time, I cannot, you know, you only give rights to things when you open up the door. And that's it. I'm closing every single door that is not good. If it's not good, if it don't help, if it don't bring it a certain way, and I'm not going to feel like, you know what I'm saying? I do that not with pride. I do that because of how I feel about the other side of it. You know what I'm saying? And that is the motivation and the driver. So I love you all, man, for real. Don't ever forget that. And I hope I could inspire you. You know, above all else, man, and I hope if it ignites a fire in me, I hope it ignites a fire in you, man. Above all else, and I try, man, I hope I don't give you anything bad. And like I'm saying, you know, and the things I want to get rid of, I don't, you know, I hope it's good and virtuous, you know, in the sense, it's not like it's stuff that would, it's, you know, we're not getting rid of vegetables, you know what I'm saying? You know what I'm saying? Oh, man, I hope they feel me. But for real, man, I appreciate y'all, and I have a lot of good PHILOs for you. So we didn't get one today, but maybe that could be like a little one for you. But Chad, I love you all, man. So thank you for another great day, the opportunity, man. And those of y'all who lived up and matched it, you know what I'm saying? Then, bro, just keep looking ahead. We got a big journey, baby. Yeah, and pray for some discernment, man. We going through a lot, man. So I love you. Thank you for your time. Members, non-members, stream alerts, everyone who supported, my positive people. Maybe you weren't positive. Like I'm saying, I hope we could find each other at the right time, in the right place, with the right respect towards each other. But that's all I got for you, and I appreciate all of it regardless. I got my opportunity, man, and let's see where we take it. But, Chad, that's all I have for you. I will see you on the watch list. Hopefully, depending on the hunger, we see you on co-real estate. But that is all I have. Go read the books, Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. And don't forget why we here, why we keep going, why that faith, hope, and love ain't ever going out of style, why we fight for peace, baby. All for peace and close the doors. Why, baby, why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Chadadonia. Fire. Let's go. I'll see you guys tonight. Many opportunities. Inshallah, I'll see you in the morning, baby. Let's get it. Friday, Junior. Do your thing. Get some good sleep. Wake up and drive. You already know. But, Chad, that's all I got. I'll see y'all in a little bit. Have a wonderful one. And peace out. Yeah. Hey, I told you, we're going to race this week, year, month, quarter, season, and Christmas. No. I know. Would you look at that? It's a political witch hunt. First they throw me in jail. Now Jerome Powell works for Biden. I don't know. Hard to say it's not political. You tell me. Prosecuting opponent. Shut up. You can't prosecute. You're a criminal. Fucking 92, 99 charges. A charge on the wall. 99. What's it, 97? 97. What the fuck are you saying, Donald? What do you mean? 92, 91. It's all fake. Fake news. Fake news. Maybe I ran a red light, but I did not do what they said. I don't know. It's a shame. Exactly. I'm just enjoying the entertainment and grabbing my popcorn. Have a wonderful evening. I reclaim my time.